Good morning, everyone. Welcome to today's Traders Conference presented by MetaStock. My name is Kelly Clement. I am your YouTube host today. During the presentations today, we'll have Jeff Gibby, who is your main host. He will be the one guiding you through today's presentations and our different presenters today. So we are very excited for today. As we get started, as you're coming into the room, let us know who you are, where you're from. Again, my name is Kelly Clement. I'm here in lovely Salt Lake City today, where we are going to have a gorgeous day from what I understand. But I'm excited to be in here, listening to the Traders Conference and learning about the markets from our awesome presenters. If you are not familiar with MetaStock and who we are actually purveyors of technical analysis and charting software. And today we're hosting this conference to help you learn more about the markets and how you can better trade the markets. But just to introduce you to who we are and what we do here, I'm just going to show you a quick video about MetaStock and who we are, and then I'll be right back with you.
Stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, there we go. There's a quick introduction to MetaStock, who we are, what we do. Again, welcome to today's Traders Conference, day one. Today we have 8 speakers. We'll be starting with Stephen Bigalow. of Candlestick Forum here in just a moment. And I actually would like to just show you today's schedule if you're not familiar with it, just to show you who will be speaking and what you can expect from the day. So I'm just going to show you here our website. So this is metastock.com. So if you go to this link here and just click this register, go to metastock.com, excuse me, that's metastock.com. Click on that register now for our largest event ever. Oh, we'll see if it'll let me click here. Sometimes the screen sharing here isn't the best, so we're going to see what we can do. Okay, there we go. All right, so now what you can do is you can see today's schedule. So we have Steve Bigalow first. Then we'll be going with John Osborne after him. We'll have Adrian Manz. And this scrolling isn't the best again. Martha Stokes, Fausto Pugliese, and a couple other speakers. I'm going to stop scrolling because it's not working very well over here. But if you go to metastock.com, just click on that Traders Conference banner, then you can actually go through and you can see all of today's speakers. And the other thing I recommend that you do is actually register for the event over on GoToWebinar. And the reason I recommend that is because we will be giving out prizes all day, and the only way we can get you into the prize pool is actually for you to jump in and register on GoToWebinar. So that means you just need to go to that metastock.com, click on the homepage banner, go to this page, and then down at the very bottom there's a registration option right down here, and you can register there. And then you'll also get an email copy of all the recordings. You'll get access to be in the pool for the drawings as we go through the drawings over the next few days. So good stuff there. So again, my name is Kelly Clement. We're going to be getting started here in just a few minutes. Let's go ahead and go back to the screen here. It looks like just about 2.5 minutes till we get started. I'm just going to go check with the presenters, make sure that we are ready to go, and I'll be back with you in just a few minutes. Again, everybody, welcome to today's Traders Conference, day 1. We are going to be having this every day for the next 4 days after today, so 5 days total. My name is Kelly Clement. I'm your YouTube host. Here in just a moment, I'll be bringing on Jeff Gibby, who will be introducing our first speaker, Stephen Bigalow from Candlestick Forum. And then you can see the schedule from today at metastock.com. Click on that top banner for the Traders Conference overview, and that'll show you everything that's going on today and the next few days. It looks like we are ready to get started, so let's go ahead and get this show going, and welcome again to today's Traders Conference.
All right. Good morning, everybody. I hope you're doing well. Looks like I want to say thanks for coming today. I hope you're doing well. Let's go ahead and read a legal disclaimer, should we? Today's demonstration is designed to instruct you on MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. You look great today. I'm glad you came. Thanks for coming. If you're watching us on YouTube, go ahead and hit the like and the subscribe. It does help quite a bit, and we appreciate it. So I do want to say thank you to two of our sponsors this morning. The first one is Stocks and Commodities Magazine. I got a copy right here. Stocks and Commodities has been a sponsor of our MetaStock Summits and our conferences for almost a decade now. It's a great magazine. I've been getting it for 25 years, but they have 17,000 trading articles, 1.3 million subscribers. And if you're watching on YouTube and you want to get a free copy, we can go ahead and register on metastock.com/traders summit. Or I'm sorry, metastock.com/traders conference. So in any case, second sponsor I want to thank today is the CMT Association. CMT Association is actually a pretty good sponsor of the online traders conferences. They've been they basically are an accreditation organization, I guess is a good way to say it. They do risk management, they do systems development, portfolio management, and a great organization. We appreciate their sponsorship today. All right. And of course, we're MetaStock. MetaStock's been the #1 rated software in its price category for only 27 years in a row, 28 years in a row. It allows you to scan markets, test trading ideas, forecast into the future. We do have the ability for you to get a free extended trial of that if you go to metastock.com/traders summit 3 for 1. If you have any questions for us today, we have people all day. You can give us a call at 800-882-3040. So with those things out of the way, I do want to introduce our first guest, Steve Bigalow. Steve is a partner of MetaStock for a number of years. I have a lot of respect for Steve. We've worked with Steve in terms of getting all of the patterns that he likes to look at and use into MetaStock. He's somebody that I've had the ability and been traveling with for a number of years. He's a great guy, a good speaker, and he's going to kick us off today. So let's go ahead and get you on here. Steve, how are you doing this morning?
Okay, can you hear me?
We can. Yeah, let me go ahead and turn the presentation over to you. How are you doing?
Doing good, doing good. Kind of a yucky Pittsburgh winter day here, but good day to be inside looking at stock charts. Let me see if I can bring up my, let's see, am I on? Can you see my charts?
I can see your PowerPoint, yes. That is correct.
All right.
And we can hear you just fine. So everything looks ready to go for you, Steve.
Okay, I guess this is trying to find the video camera.
There you are. You found it.
Okay, I guess I should have cleaned up the brushed my hair, and should have cleaned up the room, but here we go. Welcome everybody. Thank you for getting here early on a Monday morning. I have an idea that they always like to put me first because candlestick signals and patterns, no matter MetaStock usually has lots of good speakers. And the nice thing about candlesticks is no matter whose trading style you'd like to use, if you put candlestick charts on your candlestick signals on your charts, you're going to be able to see with much more clarity whether what they're recommending or what their trading system is, see it with much more clarity. Now, I often tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and candlestick signals are merely the graphic depiction of investor sentiment. So there's 50 or 60 candlestick signals, but over the years, we've narrowed them down to the 12 major signals. The 12 major signals are the ones that occur all the time, meaning 99.9% of the time. And so I tell people, don't use up a lot of mental time and energy trying to learn the others because they don't occur often enough to be useful. There's 12 major signals, and then like anything else, prices move in patterns because human nature works the same way time after time. But there's a combination of signals and patterns that we call the top rank signals and patterns that just enhance the probabilities of not only being in the right direction, but being in a very strong, profitable direction. I'm going to see if my question and answer session is working. If you have seen my presentations before, put a Y. If you haven't, put an N. That way I'll know how much to describe on each chart. And am I in the right section, Jeff? Should I be in chat or no? There it is. Okay. Except I'm only getting one space at a time. How do I?
If you want to pull the questions tab out, you can,
there,
and then you can expand it to the size you want it to be. So
okay. Oops. So it looks like a lot of people haven't seen the sessions before. All right. So let me start from the beginning. I started learning candlesticks decades ago, back when there wasn't anybody looking at candlesticks. I came across them by accident. And unfortunately, back then, there was nobody to bounce ideas off of or get confirming evaluation. So I wanted to learn everything. I didn't have anybody out there to give me a second opinion. I always tell people the only time I could get a second opinion was when I'd go to the doctor. I'd say, "What's wrong with me?" And he goes, "You're fat." And I say, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So I learned everything I could about candlestick analysis, but I discovered that you only needed to learn the 12 major signals and the patterns. So through the years, I have become a very good candlestick investor because I started out as being one of the worst investors in the world. I was even a stockbroker for 8 years, and I learned that the brokerage firms had no more idea about what made prices go up or down than the man on the moon. So through the years, we've discovered not only the signals that work exceedingly well and the patterns that work exceedingly well, but the combination of those signals and patterns work extremely well. So with MetaStock as a scanning software, we can identify those high probability trading patterns. So this is what we're looking for. We've got scans that allow us to see what patterns are breaking out. And this puts us in a position where not only are we in the right direction, but we've got the capability of identifying when something major is happening as far as price move. Is this also used as a chat to the presenter? Yes. So if you've got questions, I'll try to answer them as we go along. So this is what we're looking for. This is one of the major patterns, a fry pan bottom. There's your breakout. Now, I always put in a rhetorical question. Do you always make huge price moves on a pattern breakout? And the answer is no. But the probabilities of being in a situation where something is building up based upon this pattern puts you in situations where you're more likely to be in a big trend price move. So these patterns work all the time. We cannot see your chart. Is that happening for everybody?
I can see your chart. So if what my guess is that you're looking on the YouTube app and you can just see Steve's face. If you swipe one of the directions, you'll be able to see the slideshow too.
So here's kind of what we call 2+2 analysis. You can see the fry pan bottom, which again is one of our major candlestick patterns. And you can see the dark candle. It opens here, closes here. That's what creates a dark candle. If it opens here and closes above where it opens, it creates a bullish candle. But you can see the trajectory, the fry pan bottom. This is what we call a trend kicker signal. Opens here, closes here. Then notice what happened the next day. It opened above the previous day's open and started breaking out, or started trading positive. Well, knowing that it was a strong signal and it was happening right here, we could be buying immediately, knowing that more than likely it was going in a positive direction. Again, the rhetorical question, do we always know it's going to be a big, huge positive direction? Definitely not, but it puts us in the right position at the right time. So this is one of the stocks that are in a sector that we can see there was a lot of patterns like this. Fisker was another one in the electric vehicle sector. Notice what was happening right here at the breakout. This is where we expect the big price moves. Had a pattern breakout. Is a fry pan bottom another name for cup and handle? It could be if it went like this, came up and then pulled back and did the little handle. Okay, you ask them and I'll answer them as fast as I can. Now, here's another candlestick signal. This is what we call a doji sandwich. Remember, a doji is where it opens and closes right at the same level. Shows indecision, but there's a simple doji rule. The price is usually going to move in the direction of how they open after a doji. So when this opened positive, what can we expect? We can expect this candle to be the same magnitude as this candle. What's that tell us about our breakout? That tells us that this level is now not acting as a resistance. Look for a strong price move. There's a couple of different factions on here. The black candle, if you see it, the dark candle is in maroon. A black candle is still a bearish candle where they open it positive. Let me go back to the previous one. Where they open it positive, but they trade lower. It's still closed below where it opened, but it traded positive. So we put that as a black candle. It tells us that even though that they traded below where they opened, it was still positive. I should take those off because it doesn't really add to anything. See right here where they opened it and closed here, but they were positive on the day. I should change them all to just maroon. But this is what the probability factor is of if we can identify where there could be a breakout, which is right where the pattern starts, and we can see there's a doji sandwich, we can be buying aggressively right here, knowing the probabilities are it's trading positive, could be the same magnitude as this, but it's telling us this pattern is broken out, which it has, and it's still, this was as of Friday's close. I think Fisker is still even trading positive again today. So anytime we can see a setup, this is our best friend signal. There's a doji followed by a gap up called the best friend signal. That is one of your strongest candlestick signals. That tells you after a little indecision, they've gapped it in the direction they want to take it. And not only is it going to give you a high probability you're heading in this direction, but it's going to give you a high probability that this direction move is going to be extremely strong. So if that occurs right here at the breakout level, that's a high probability indication you want to be buying. Now, there's the Japanese rice traders have given us all the chart setups that are just based upon common sense. You don't have to be a sophisticated technical analyst to use candlesticks. All you have to do is recognize the signals and patterns that the Japanese rice traders have illustrated over the last 400 years as showing that there's a reversal. And we use stochastics. My stochastics are 1233. they use a very simple concept. If you see a candlestick buy signal in the oversold area, more than likely you're going to see a reversal. On the other hand, if you see a candlestick pattern breakout, more than likely you're already up in the overbought area, but that's usually where the breakout occurs. So if I see something setting up like this, we recommended this one today because there was your fry pan bottom, there was your breakout. Here's another illustration. This little black line, on our charts, this is a good chart to illustrate. On our charts, we've got the 50-day moving average, which is a little blue line. A red line is the 200-day moving average. The reason we have those on our charts is because every major money manager around the world uses those to make their decisions about what they do, what they want to do with their positions. We don't use it to make our decisions. We use it to see what the graphics of candlesticks are telling is everybody else's decisions at those levels. How long would you expect these moves to take? Do you simply exit after you consider a significant move? No. If you're buying based upon a candlestick buy signal, then you're selling based upon candlestick sell signals. So there's 6 bullish signals and there's 6 bearish signals. What is the indicator below the sticks, the line? Down here is stochastics. Now, the black line is the most relevant signal. I'll get to that. That's called the T line. That's the 8 exponential moving average. That's a highly effective indicator of candlesticks, what's going on in investor sentiment. No, we don't look for volume to make our decision. We're looking at price. A lot of people say, well, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If people aren't willing to sell stock and people are willing to buy, it's going to go up on lower volume. Now, the only place I use volume is if you happen to be, and I don't have volume on these charts, if this happens to be a big volume day at the reversal signal, that just adds like a little extra fluff that there's been a major change of ownership. But these are the patterns that we're looking for because our expectation coming out of a fry pan bottom is an extremely strong price move. Oops, there's the 200 right here. So prices move in patterns. Do these patterns work on any time frame? Yes. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. They work just as effectively on a 1-minute chart as they do on a monthly chart. I'm a swing trader, so I'm using the daily charts for my stock trades. I also intraday trade, day trade commodities like corn, cattle, the dollar, crude oil. I'll use the 10-minute chart as my bellwether. But this could be a daily chart, a monthly chart, or a 10-minute chart. Candlestick signals work on all time frames. Stochastics are just a method, statistics of showing whether you're in the overbought or oversold area. So logic says, I want to be buying the candlestick signals when I'm down here in the oversold area. I'm looking for pattern breakouts or getting ready to sell when I see stochastics in the overbought area. Jeff, yes, I think MetaStock can get a copy of this out to you. What is the blue line, that high on left? This one may be the 50-day moving average on this chart. All right, so this is what we call the classic pattern. because we know what to expect coming out of a fry pan bottom, a strong price move. We know what the prerequisite is for a J-hook pattern. That's just a simple wave 1, wave 2, wave 3. The prerequisite is a strong price move. So it's not uncommon to see a candlestick pattern breakout, then consolidation, and then a J-hook pattern. And the J-hook pattern has a very specific result. Wave 1 and wave 3 are usually the same. So even if you missed this move, you can pretty much calculate what this move should be. Could you show us the actual trade of how you use the technique on an intraday chart? I'll have to, yes, I will, here in a second. So if we look at this, we're taking profits. There's our dojis, and look at the T line. This is very strong for showing that as long as you stay above the T line, you're in an uptrend. Notice how they pulled back, did an indecisive, what we call an inverted hammer, traded positive. We could see this was setting up. It used to be that if I got out of a trade and it turned around and went back up, I always thought, they're not going to trick me and get me back in and then take more of my profits. At least now I know what the playing field is for the type of signals and patterns. So if I'm closing here, I can be buying back here with a strong probability we're heading up. Do you find the patterns in the market? How do you, simple scans, and that's what Jeff will show you after I get down here. Because we've put all these scans into MetaStock, and not only can you find them, but the software actually points out where those signals and patterns are. What is the T line? No, the T line is the 8 exponential moving average. When you say it closed below the open, do you mean the previous day's open? Please, can you tell us what color, the color I meant, the black and blue. The T line. Okay, the T line's the 8 exponential moving average. Let me find a better chart here. So this is where you can trade with a high degree of probabilities. But if we can see this is a fry pan bottom, we're expecting it to break out. Once it breaks out, we're expecting a pullback. And we can see the J-hook pattern. So we got to take profits, and then we can get back into the trade. How many daily charts do you observe in a day? How many trades would you expect to enter in a week? That's up to each individual. I usually have 10 positions on, and I'm probably rolling over maybe one a day when one gets overbought and it's time to take profits. All right, so this is what we're looking for, the breakout. Now, there's a very simple rule of the T line. If you see a buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. So here's what I call the most important screen on my presentation, the T line. The T line is the 8 exponential moving average. It acts like a Fibonacci characteristic, which means it acts like a natural support and resistance level of human nature. Why? Have no idea. But I tell people, put it on your chart and see how often that when you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now, what this does for me, being the worst investor in the world, and most of my trades were based on emotional decisions, I can now see situations where I might have a sell signal, but it didn't close below the T line. This keeps me from taking profits too early and allows me to hold on to trades. Now, here's a much better chart to see that this is the 200-day simple moving average, the 50-day simple moving average. I think this is the 34 EMA, which works relatively effectively, and the T line, the black line. I can take everything off this chart because the most important aspect of candlesticks is the signal itself. Everything else becomes a confirming indicator. Again, we're not using the 200 or the 50 to make our decisions. We're watching to see what everybody else's decisions are at those levels. The T line is the 8 exponential moving average. So I always tell people, don't be afraid to put it on your chart. If it works, you keep it there. If somebody says put the XYZ indicator on and it doesn't seem to help, take it back off. I want to keep my charts as simple as possible. So don't be afraid to put this on and see if it works. Shoot, I always tell people the first time I had sex, I was so afraid. But then again, it was dark and I was all by myself. So put this on and test it. This is the best way to see whether this works or not. Same scenario on the short side. If you see candlestick sell signals, a shooting star, an evening star, you can stay short as long as it doesn't close back up above the T line. Let's see, make sure I'm getting everything here. All right. So this is the great thing about candlestick analysis. Again, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Prices move in patterns. Max, I'll show you a kicker signal here in a second. You can see how this started back up, and there's our doji sandwich, or our best friend. Look at the doji gap up. And then we can also see what everybody else would probably be looking at as a resistance level. We look at it as a flat handle, and there's your scoop pattern. And what do we expect coming out of a scoop pattern? A slingshot effect. Once we're in this position, what's our next strategy? We stay long until you see a sell signal and a close below the T line. Now, how often have you heard money managers, investment gurus tell you, cut your losses short and let your profits run, but they never tell you how to do it? Candlestick analysis does that very easily for you. All you have to do is find the charts that are telling you you're in an uptrend, and you stay in that uptrend until you see a sell signal. So we recommended this one a couple weeks ago because there's our fry pan bottom. There was our bullish confirmation. The next day it opened lower. There was our entry because as soon as it started trading from here to here, what are we seeing? A white candle. But here's the important thing that I wanted to point it out on this chart. We got in, and one of the caveats to the candlestick signals are the further away you move from the T line, the higher the probability it's going to come back and test it. So there's a very simple process that if you've got big profits, you're that far away from the T line, we just move to our 10-minute chart. And if we see a sell signal and a close back below the 10-minute T line, we start taking profits. Why do we do that? Because the daily chart says we're way out of whack. We're too far from the T line. So we didn't pay attention to this until right here. Look what happened. It came right back down, smack dab to the T line. Now, why is that relevant? Because nobody has the T line on their charts. That means this area is moving back to a level that nobody has in their chart, so it's not acting like a target. It bounces off a natural support and resistance level. Why stochastics versus RSI? You can use whatever you want to. I use stochastics. Remember, I started from being the worst investor in the world. When candlesticks came along, I started making money. When the T-line was applied to our chart, I started making tons more money, because the probability factor is, as long as you stay above the T-line, you're in an uptrend. When it came back down here and bounced, when it opened positive, we were buying again, because what was this telling us? We weren't going to close below the T-line. We can see patterns, like a scoop pattern, where it's telling us when it's breaking out, especially through the handle, the probabilities are pretty strong that we're going to be in the right direction at the right time. So somebody was asking earlier, does it work on all time frames? On Friday, MRAM gapped up. There's our best friend signal. So when do you buy? Do you buy here? Do you buy here? Do you buy here? It's a very easy process. You flip to your 10-minute chart. Right there, it's telling you, well, you can still be buying. Right there, it says you can still be buying. Right there, still tells you can still be buying. And what did it tell you for the rest of the day? They weren't selling it off. They were going to be closing up near the high end of the range, which means the bulls are still there. This is what we call 2+2 analysis. If we know this is a J-hook pattern, and we can see the indecisive trading, the doji type days right here at the T-line, and the trajectory starts back up, we could be buying on this day knowing we've got a J-hook pattern, which means wave 1 and wave 3 are likely to be the same. There's even more defined patterns. This is what we call a bobble breakout. This is the 200-day moving average right here. It failed at the 200-day moving average. We could be taking profits if we happen to be long. Then it came back to the T-line. There's our doji sandwich. And what do we expect from a doji sandwich? The implication is there's going to be more upside. If there's going to be more upside, if it comes back up through this level, what do we got going? We got a J-hook pattern. Now, why is a bobble pattern more relevant? Because nobody has the T-line on their chart. We do. Everybody has the 200. So when they see it breaking through the 200, they're all piling in. We could already see that pattern setting up. Do you look at the rising 50 after prices go below? No, we're not trading the moving averages. The most important factor is, what are the signals and patterns telling you? Everything else is just a confirming indicator. So it doesn't matter whether your moving averages are heading down or heading up. The pattern or the signals are telling you the bulls are stepping back in. That's where we want to be. Have you used MACD with price? No. MACD is a lagging indicator. Now, on some of my charts, I do have them down here if I can overlay them as a histogram, but I don't use them to make my decision. They just add as extra fluff of that things are going in the right direction. How do you use the 3 EMA? Let's see, I don't see it on here, but the 3 EMA, if you see buy signals and the 3 EMA, which I don't have on here, starts coming back up through the T-line, that's just added confirmation the bulls are taking control. The other place to use it is if you start moving too far away from the T-line, it's going to come back and test it. So that's where the 3 EMA, the 3 T-line, starts taking more effect. So everything we look at on a candlestick chart is very simple analysis that we have the doji rule. The doji tells you there's indecision. Very simple process. If you see a doji, it's going to move in the direction of how they open. That's the doji rule. And then notice how it did a doji sandwich. And where did it do this? Where did we get our information down here? That when it came back to the 50-day moving average and started seeing indecision, that told you to start watching to see if this is where everybody's buying. It just gives you that much more visual probabilities that you're heading in the right direction at the right time. The best friend signal is a candlestick doji followed by a gap up. And what even enhances that is if you see a candlestick signal, best friend signal, gap up, and it closes above the T line, you can be buying immediately on positive trading. And how long do you hold on to this position? We held on to this position for a few months because it never closed below the T line. There's two factors of a best friend signal. I have about 18 what we call top rank signals and patterns. Most of them are on MetaStock scanning software, but I rank the best friend at number 1 because it has two strong elements to it. First of all, there's an extremely high degree of probability you're heading higher, number 1, and number 2, the magnitude of the move is usually going to be pretty strong. So anytime I see this best friend gap up, I'm buying because that's told you after a day of indecision, they've made a very strong decision. And if you can use that as a 2+2 analysis, that if I see that best friend gap up and that it's also creating a pattern, gives you that much more confidence that wave 1, wave 2, now your best friend signal is starting wave 3. And we can pretty much calculate what the magnitude of this move is. Same as this move right here. Works just as well on the short side. A doji in the overbought condition. And then again, look how far away you've moved from the T line. When it opened lower the next day, especially gap down, if you were long, probably even if you were up here and saw a doji in the overbought area that far away from the T line, we're taking off at least half the position because you're in a high risk danger area as far as human nature. When it gapped down and closed below the T line, pretty much told you could go short until you see a buy signal. Same scenario here. There's your doji gap down. Not only did it gap down below the 50, but closed below the T line. That told you were still in a downtrend. You could start going short again. Anytime you see that doji gap down, that tells you there's a strong force to the downside. The kicker signal somebody was asking about is very simple. It opens here and closes here, creates your dark candle. The next day, or whatever the next time frame is, they gap it up and go the opposite direction. They have basically kicked the investor sentiment in a very strong uptrend or a strong reversal. This is your strongest candlestick reversal signal, individual signal, the kicker signal. And then what do we expect coming out of a fry pan bottom? A breakout with a strong signal. So we have a a fry pan bottom with a kicker signal breakout. That's a pretty good indication the breakout is occurring. It's going to be a strong price move. This is a bullish flutter kicker signal. Notice on this day, it opened here, closed here, dark candle. The next day, they gapped it up and did a doji. Not very convincing. However, what's our doji rule? Doji rule says if it opens positive, it's going to trade positive. So if I see this and I see it open positive the next day, I'm buying immediately because the probabilities are pretty strong. They're taking it up. Why do we call it a flutter kicker? Because if you took out this little flutter, you basically have a kicker signal. Again, your strongest reversal signal. So anytime we can add the patterns together, there's kind of your trend kicker signal. Open here, closed here, still positive on the day, still in the fry pan bottom breakout. The next day when they took it back up, that told you there was still a lot more upside coming in this trade. Now, this is not rocket science. Again, you don't have to be a technical analyst to understand what happens in human nature based upon the charts or the signals that the Japanese rice traders have provided for us. Making sure I'm not going overtime here. Overstock. Look what happened here. Opened, closed, gapped up, above the previous day's open and went the opposite direction. Broke out through this level. Where was it time to sell? Look at your shooting star, a sell signal, doji, shooting star. It was time to take profits. But then on Friday, look what it did. Kind of your morning star signal, another of the 12 major signals. And where did it do it? Right here at the T line, which meant if this was opening positive today, you could be buying, because essentially you would have kind of a fry pan bottom breakout, a J-hook pattern setting up. So everything we view on the charts is showing what human nature is doing, which does the same thing time after time. The T line is the 8 exponential moving average. Here's another pattern called the message. It doesn't look pretty. They gap it up, but they trade it lower, trade it lower, trade it lower, close here. Doesn't look great. But what makes it a high probability trade for a candlestick investor? Look what happened the next day. So the selling had stopped and the buying had started. So what was the message, even though this was ugly? The fact that they gapped it up out of this fry pan bottom, profit taking. Now the profit taking's over. What do we expect when they're gapping something up? That there's been a change of investor sentiment. That's when we can start buying with a high probability factor. So this is where you can put things on your chart analysis that just improves the probabilities that you're in the right place at the right time. There's your bullish engulfing signal in the oversold area. There's your doji sandwich. What's the doji sandwich imply? There's going to be more upside. Look at it. It closed right at the T line. Wouldn't be buying yet. But if it opened positive and started trading positive the next day, what's it telling you? It's confirming the bullish engulfing signal. It's confirming the doji sandwich. And it's telling you the T line's not acting as resistance. Now we can see that there's a pattern. There's your flat handle. There's your scoop pattern. There's your probability factor that you're going to be in a slingshot effect to the upside. A doji sandwich breaking out. 2+2 analysis. We call it 2+2 because the more factors you can put into your visual analysis, the higher the probability you're probably in the right trade at the right time. So right here at this breakout level, I've got a doji sandwich breakout. Tells me there's going to be more upside. Then there was profit taking. There's your bullish engulfing signal. Where did it occur? Right smack dab on the T line. You could be buying on positive trading because now what do you have? Wave 1, wave 2, wave 3. And how long do you hold on to this one? This is the nice thing about knowing what the T line does after a candlestick reversal signal. You don't have a lot of analysis here. If I was long this every day, I would spend a total of maybe 3 seconds saying, "Up, we're still trading above the T line. Go on to the next position you got and analyze that. Still above the T line, hold. Still above the T line, hold." That's about the amount of time it takes to analyze what to do with that trade. When do we close this? When we see a candlestick sell signal and a close below the T line. Or if we start moving too far too fast, we start being a little bit more diligent as far as watching for a reversal signal that might bring you back down to the T line. My stochastics are 12-3-3. Nothing set in stone on that, but sometime about 35, 40 years ago, I was tweaking and I was, the normal back then was 14.55, but I'm a swing trader, so I needed something a little faster. So I tweaked 14.53, 14.31, 12.54, and finally came up with 12.33. Now, we're not trading stochastics. We're just seeing where we are in the trend based upon the stochastics. And so the values that I have on the charts do not change. I could flip this to a 10-minute chart. and it would look exactly the same. So these are called fractal. That the charts look exactly the same on the 1 minute chart as they do the monthly chart. So this is what we're looking for. Look at your fry pan bottom. Look where the bottom was. There's your morning star signal, a 3-day pattern, a big down day, a day of indecision. Third day closes more than halfway up. You could have been buying here. And then you could have been holding and expecting the fry pan bottom. And where would the fry pan bottom likely break out? Right where it started. And when they did a best friend gap up, what did that tell us? Exuberance was coming into this trade. Look for a strong move to the upside. So this is the process of cutting your losses short and letting your profits run. We just have a much clearer vision of when those profits are about ready to run and how long to hold on to them using the patterns and the T-line. There's your buy signals. Look at all the indecision down here. Doji, 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 doji gap up above the T-line. You're in an uptrend. Kind of pulls back into the J-hook pattern. Just candlestick logic says all we have to do is continue to stay long as it stays above the T-line. You'd get out May 26 and back in. On which one? Probably. Yeah, again, we're buying the patterns. Notice what happened when this pulls back. What was the one element that we can easily identify? They could never close it below the T-line. Let's see if I can get to the last chart previous. I can't see what the dates are. Oh, yes, if I closed here and it came back up, I'd get back in because what was it still telling me? They weren't closing below the T-line and it looked like I'd still have a fry pan bottom trajectory. Is this applicable to shares? No. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. It's buying and selling anything. Stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. Candlestick analysis is the graphic depiction of what's going on in human nature. It works just as well on Forex as anything else. Now, obviously, with Forex, you don't have gaps because it's continuous trading, but the patterns will still be the same. Human nature works the same way time after time. They work just as well on the downside. The opposite of a fry pan bottom is a dumpling top. So there's your breakdown. There's your bearish J-hook pattern. This is the classic pattern. There's your fry pan bottom, broke up through the 50, and notice where they came back to, right to the 50, and then started back up. So if I took profits right here, I could be buying back here, knowing that they weren't selling it off. And notice the nature of the signals here. Indecision at important technical levels. If I have buy signals from 20 stocks, how do I shortlist from that? Do you use more filters? No. This is exactly why you want to be identifying the top rank signals and patterns. So if I've got 20 good charts, which I usually do on any given day, I will go back through the 20 that I found and see which ones have strong signals, kicker signals, best friend signals, fry pan bottom breakouts. So that's why we use those top ranked signals and patterns. So this is the type of thing that we are constantly looking for. Look at your T-line. This is called a T-line crunch. Notice how it can close below the T-line and they're crunching right up to the 50-day moving average. And then look what happens right here. This is called a left-right combo. That's a doji followed by a bullish engulfing signal, one of your strongest signals. So if it opened positive, what's it telling us? It's telling the T-line crunch. It puts you up through the resistance level. The left-right combo, which is a strong bullish signal, is being confirmed. And from everybody else's perspective, they've broken through the 50. If we were long, or if we were planning on buying, we're buying right here because we know the pattern is strong, and that when everybody else sees that it broke through the 50, they come in. All we're basically doing is putting ourselves in positions where the probabilities are that human nature is going to start moving as we expect it from what the Japanese rice traders have illustrated through the years. So candlestick analysis is merely the identification of the reoccurring signals and patterns produced by human nature. And so I'm guessing that Jeff will kind of explain how we've set up our scans for the top ranked signals and patterns. So with that, I always go back to the fact that I am a good candlestick investor, because coming from being the worst investor in the world, I could see exactly where I was the panic seller at the bottom and the exuberant buyer at the top. My rhetorical question was always, how come as soon as I sell down here, it turns around and goes the opposite direction? Or as soon as I bought here, it turned right around and went down. Well, that's because that's what normal human nature does. The graphics, the candlesticks illustrate what normal human nature does, and we just have to reverse it and go the opposite direction. What time frames do you find patterns work best? It all depends on what you're trading. They all work the best. If I'm trading soybeans, I might be trading off a J-hook pattern, or a fry pan bottom breakout, or a bullish engulfing signal at the bottom. It doesn't matter what time frame. It's to put it a better way, you can apply it to the time frame that you like to trade. So I used to trade the E-minis off a combination of the 1 minute, 3 minute, 10-minute combination. I trade soybeans, cattle, the dollar off the 10-minute chart, and when I get ready to buy, I flip down to the 5-minute chart. If I'm swing trading my stocks, I'm using the daily chart. And then if the price gets too far away from the T-line, that's when I flip to my 10-minute chart to start taking profits. All right. Any other questions? Now, as I mentioned before, you're going to find some very good, or not some, a lot of good trading strategies in here today and tomorrow and the next few days. But if you overlay candlesticks on your charts, you're going to get much better clarity of what their recommendations are. Now, I use candlesticks as my top priority. Then I can watch to see what everybody else is doing. I can put on the Fibonacci retracements to see if there's going to be reversals at those levels. Bollinger Bands, anything else that might enhance, tell me where a reversal's occurring.
All right, Steve, shall I show how the scanning works?
Okay.
Thank you, Steve. That was a great job too as well. Appreciate it.
Right. Well, thank you for having me. Everybody have good trading days.
That was awesome. Really good. Thank you. Thank you again, Steve. And let's go ahead and kind of change things over a little bit. I do want to show how this works on a chart because I'm really proud of the way we designed it as well. So let me go ahead and make myself the presenter. I just have a chart of the Dow Industrial open, and you should be able to see my screen. A lot of the questions that we get all the time out of these events is like, how do we find these patterns? And, you know, I love MetaStock because it can help you kind of identify and find those patterns in real time. So right here, like I said, I have a little bit of a chart of the Dow, and you'll notice that a number of these patterns are actually kind of showing up. So here we had a left-right bullish or bearish engulfing, a bear kicker. All of these are automatically kind of generated as part of the add-on. Here a couple weeks ago, right before we had this really nice move up, we had a doji followed by this bobble pattern that showed up on the chart, and it's kind of been streaming up ever since. So what we're looking at here is the add-on that we've created for Steve a number of years ago, and we're currently on the second version of it. But basically, it's going to identify these patterns in real time for you on the chart. So as soon as a pattern happens, it's going to kind of tell you that that pattern exists and that kind of stuff. One of the things that we also worked with Steve quite heavily on was actually creating it kind of like what we call an expert advisor commentary to kind of explain the patterns to you and show you what they mean. And so, for example, like if I'm going to show that to you, I'm going to go ahead and click on View Expert Commentary here. That's going to open up a little bit of a commentary window, and you'll see that there's a bit of a triangle right here that points straight down. That's just basically saying this is the day that we're looking at. And there really there's not too much happening in terms of there's no patterns being identified on the chart today. But if I wanted to look at the doji or this BABA pattern, I could move that triangle around on the chart and it kind of analyze different days. So if I highlight over on this BABA pattern, you'll notice in the commentary, it's actually going to define what the pattern is. So the BABA pattern is an extremely high profit pattern setup. It's essentially a J hook. It kind of goes into the detail of what this pattern is. I don't think I'm going to read it all right now, but basically kind of tells you everything about this pattern. So the add-on itself is the Candle Profit Systems 2.0. It's been one of our most popular add-on. It will identify basically all of these patterns that you kind of see on the chart, as well as a bunch of single-day patterns if I scroll to the next chart. So those are all automatically going to be identified and shown on the chart for you. One of the questions we get a lot of is there a way that we can find a list of all the stocks? So, for example, one of my favorite patterns is like the Doji Best Friend. Basically, that's just a doji, which is, as Steve likes to call it, an indecisive day, followed by a gap up. Okay, but that's the Doji Best Friend. We're also finding all of these patterns, as well as all of these single day patterns as well. If I want to go through a list of instruments with MetaStock and find the ones that have that pattern, actually we'll use a tool that's called our Exploration or our Explorer. So I'm going to show you how that works real quick. We do have a few minutes here. What I'm going to do is I'm going to go ahead and click on the what we call the Power Console for MetaStock. I'm going to come down to the tool that we call the Explorer, which is basically MetaStock language for the scanner. Okay, what I've got here is just a list of the different CPS or Steve Bigalow candle profit system strategies that I can scan for. So I've got the Doji Dynamite, the J-hook patterns, the major patterns, and you'll notice that if I hover over any of these patterns, it's actually going to identify exactly which patterns we're scanning for. So just for the purpose of showing you, one of my favorite patterns that Steve talks about is that Doji Best Friend, like I just said. If I wanted to find that, I'm going to go ahead and highlight that particular scan. I could do a few of these. In fact, I'm going to actually select a few of them. And then I can basically, because of the data that we get, I can scan just about anything I want to. So just to kind of put it into context for you, we have about 296,231 instruments that are available on this list. So if you're in India and you're watching us from India and you want to scan the National Stock Exchange, you can do that. If you're in London and you want to scan London markets, we get a lot of customers. In fact, I just did a session over in Australia. Well, I was in Utah, but with the Australian Technical Analysis Association on thing. But you can use it on whatever instruments you want, whether that's Forex or futures or US instruments or Canadian. Refinitiv covers like about 300 different global exchanges. And you can see the lists are just massive. To kind of give you, to do a quick scan here, what I'm going to do is I'm going to come into this folder that's called the Index Constituents. And what I'm going to do is I'm going to scan the Dow Jones Industrial Average. So we've got all 30 of the Dow stocks right there. I'm also going to do the S&P 500. Okay, so we're just going to do the S&P 500 and the Dow just to kind of keep things simple. I do want to let you know specifically if you want to scan all the optionables, you can. There is a list of all the optionable stocks in there. If you want to do all the ETFs, you can do that as well. Any kind of instrument list, I really like the way they've kind of organized this down so you can scan exactly very, very easily. And you notice it was pretty easy for me to just go in and grab the Dow Industrials and the S&P 500. Okay, so I'm going to scan those for today, see if there's any Doji Best Friends or whatever might happen to be existing on the chart today. We're going to run all 3 of these scans. I'll go ahead and just click on Start Exploration, and it's going to go ahead and chunk through them. Okay, and with about 500, generally it's pretty quick. Keep in mind, I'm broadcasting my video, my face. We have a control room behind us. It's also watching it. But you'll notice here that it's chunking through all of those stocks very, very quickly. So we're about halfway done with the first exploration. The other thing I want you to notice right here is this 98.8%, right? For me, like what I want to be able to do as a trader, I want to be able to just kind of ignore like all of the noise that exists in the market and just look at those ones that have an opportunity or even the best opportunity any given day. And so for me, the ability to like just not look at 2,200 stocks, or in this case, 500 stocks, and just focus on the ones that have an opportunity, it's really, really good. So you see, it's kind of still chunking away on that final scan. If I was looking for a doji best friend, for example, you've got Alliant Energy right here. You've got Public Service Enter. We could go ahead and open up those charts, but instead of looking at all 505 of them, if that's the pattern I want to go with, if that's the pattern I want to trade, it's right there for me. I can, of course, then open it up, take a look at it, see if I still like it. But I just saved myself looking at, instead of looking at 505 stocks, I just looked at the 2 that were of interest to me. So I absolutely love that as a functionality, as something you can do in MetaStock. Let's focus on the stuff that works and has an opportunity and ignore all the stuff that doesn't. And Steve's stuff allows us to do that. So with the add-on that you get for MetaStock, you get the ability to find, and it will identify all of those patterns for you on a chart. In addition, you have the ability to scan for them. And then you're going to have that commentary that allows you to kind of go in and see exactly what the pattern is, which is going to be very, very helpful for you, especially if you're kind of brand new to the patterns. So in this add-on for MetaStock, you get the 6 explorations, the expert advisor. We have 3 different layouts, and layouts just actually a word. Basically, it's just kind of different chart setups that you can apply to a chart. In total, there's about 36 different patterns. And I actually sit down and we record a 40-minute training session that says, here's how you kind of run your pre-filter scans. The pre-filter scans allow you to go in and just make a list of all the stocks that have like the volume and the price requirements that Steve looks at. And here's how you run your scans on a daily basis. And here's how you do the exploration. So the whole idea behind that 40-minute training session is, let's pretend you don't have any experience with MetaStock. Let's show you how to use these tools to kind of get the best out of the Bigalow candle profit system. So we're running a little bit late. There's another thing I want to say about this. This has been our most popular add-on. It's $499. It was really, really reviewed well by Stocks and Commodities magazine. What we're going to do for you is, if you're interested in picking up this add-on, we'll knock $100 off the retail price. It's only $399 here at the conference. We're going to give you a 30-day money-back guarantee. We're also going to give you a free trial to our MetaStock platform that's been rated #1 for 28 years in a row. So I do see a lot of questions coming through. I'm going to kind of address those by typing the answers in, just because I looked at my watch and I took too long. So if you have any questions through the extent of the seminar or the sessions today, give us a call, 800-882-3040. You can go to metastock.com/conf promo to take advantage of any of the offers or the add-ons that we're talking about. You can also go to metastock.com/sales-chat. So, all right, let me go ahead and go to the next slide. Again, if you're not familiar with MetaStock, 28 years in a row, it's been rated #1 by the readers of the Stocks and Commodities magazine, not the editors. And we do have pricing packages that start at about $59 per month. If you want to get an extended trial, we'll let you try 3 months for the price of 1. And you can do that at metastock.com/conf promo. We're going to say thank you to CMT Association real quick for sponsoring today's event. We love CMT Association. They're probably one of the most well-respected associations of their kind. You can visit them online at cmtassociation.com. And of course, I'm going to say thanks to Stocks and Commodities magazine, long-running sponsor of the MetaStock summits and conferences. Just a great partner to have. We appreciate all the work they do with us. And there you go. Thank you, Stocks and Commodities, for sponsoring the event today. Our next presenter is a person by the name of Adrian Manz. Adrian has been also a longtime partner. He's out of California. He's joining us today, and he's going to talk. I have this right here. He wrote a book called Around the Horn, a trader's guide to consistently scoring in the markets. He has I love this book, actually. He does a really good job with it, but we're going to go ahead and bring him on here. How are you doing, Adrian?
There we
Okay,
I'm good. How are you today, Jeff?
I'm doing great. I'm gonna go ahead and make you the presenter. Welcome to the show. It's going well so far. Fingers crossed.
I'm glad to be here. Let me make sure I'm looking at the right screen here. There we go. You have a presentation up?
I can hear you. You sound great. I can see your presentation. I'm going to get out of the way. It's all yours.
All right. So let me just start by thanking Jeff and the folks at Stocks and Commodities, who are, I'm a big fan, right? So I've been following everything for many, many years. Obviously, MetaStock, I'm a big fan. Let me just make sure, let me just ask you, I've got the presentation on the screen, right? Not the next slide thing, I'm hoping here.
Yes.
Okay, perfect.
You don't have the presenter view, you have the right view.
So, you know, my thing has been always, let me see if I get the camera going. There we go. Whoops, wrong way.
Is it?
How do we turn that around? Well, might not be using the camera. I've got the wrong camera here. Got the back side of this thing going. All right, so I'm gonna burn the camera, but you know, we have always been intraday traders. So many years ago, I talked to Jeff about, you know, could we take those patterns that were in that book and turn them into patterns that we can go and scan for? And the answer was, of course, yes. MetaStock's very proficient at pulling these things up. We've been trading sort of the same set of patterns since 1997. And when I say we, right, what I'm talking about, of course, is my wife, Julie, and I. So we started doing all this stuff. Everything that we've done or everything that we do is based on systems and strategies that we developed when we were in graduate school. So back in the 90s, the early 90s, late 90s, we were out at the Claremont Graduate School, and we put together a bunch of things that came from statistical analyses. So this stuff is based more on multivariate statistics and sort of multivariate analysis of covariance and excursion models than it is on baseball, which is what the book was written around, right? The metaphor for the book is baseball. That's because the original book was titled A Multivariate Analysis of Covariance in the United States Equities Markets, and that's not something that people are particularly interested in reading, right? But so we got our PhDs out there. That's Julie, and that's me on the floor of the exchange. We did a lot of research down there. We're just down there again this past week. But the work that we did was all set up to go and get us in front of opportunities for profits based on what was happening intraday with some statistics behind what was going on, and then make it all very recognizable with patterns. And over the years, right, I've done just a bunch of stuff in terms of publishing for magazines and, you know, just journaling what we were doing. As I said, we both earned our doctorates back then in 1997. And when you do that stuff, what you do is you publish and you teach. And teaching has always been a very big part of what we do, and sort of sharing what our thoughts are on the markets and how we think, you know, things are going to move going forward. We have made it a point to keep this stuff very understandable. So like today's presentation is going to be about one pattern, just one pattern from Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. That was the first book that I wrote. And so the cornerstone pattern in there is called fastball. And, you know, what you can do is you can use MetaStock every night to scan for that fastball setup. And I'm going to show you in a minute here how just that one pattern can represent sort of a bread and butter trade and a huge opportunity for profit each and every day. So that pattern, you don't have to buy the book, right? The book is actually very expensive right now because it's currently out of print. It'll be back in print in January, and in January, the new version of the book is going to have a much larger section on psychology. We're both psychologists, and what we have figured out over the years of teaching people, and we've got all these courses, and we have all these very, very involved seminars that we do, right? So we do, for instance, an income trading academy that is 40 hours of online work and then another 40 hours of in-person work. And when you're done with it all, you've got all these things down, and you know exactly how to trade the markets. And then what we find is the thing that really determines whether or not people are going to be profitable are those two things down at the bottom there, that trader type inventory and that trader work environment scale, right? Those things are actually a better predictor of where you're going to be a year from now than whether or not you do a bunch of coursework, because that's your psychology. That's where you're coming from personally, right? Where you're coming from in terms of your relationship with money. Here I've got a slide of our traders, right? So these are all these boot camps that we do. We do them over in Miami Beach instead of California, primarily because of the time zone, right? So California, the time zone's very bad. I've had people have a very hard time. They come from Australia, or they come from Europe, or they come from even the East Coast, and they get here, and it's hard to get up at 5:45 in the morning to trade. I can tell you, I just got off a red eye pretty much 3 hours ago, and here I am doing this. It's a very it's sort of a shock to the system for people to try to learn this stuff here. So that's why we do them back east. But look around those tables, and the takeaway here is, I'm looking at Colin is a pharmaceutical rep, or a pharmaceutical development engineer. We've got a guy there who's a farmer. We've got a guy who owned a chemical company. We've got a guy who was an attorney. We've got engineers. We've got folks who were in woodworking, who did framing, who did there's all sorts of people who come to these things. It's not a unique history in terms of what you've done in your life that matters. It's where you are psychologically in terms of your relationship with money, your relationship with risk, how well it is that you follow through on doing things when you're not getting the feedback that you're expecting. Do you stick to what you're doing? There's a lot of things that psychologically impact your ability to go and implement these strategies the way that we put them in front of you. And as I said, we develop these in large part for NYSE traded securities. And that's because we're psychologists, and that's because the place we were getting a lot of our data was down there at the NYSE. This is an older picture of Julie and me down there on the floor. You can sort of, I was joking with someone the other day saying, if I look back over 20 years or 25 years of photos, I can sort of see myself aging, by where I am once I'm on the floor of the NYSE. They're getting photos taken. It's a place that when we started trading, you had a unique opportunity to work psychology into your trading because there was one person on the other side of every trade. It was that the specialist system was set up such that, and still is set up to an extent, that one designated market maker, one specialist, is the guy who's responsible for trading Harley Davidson. He's going to trade Polaris. He's trading, Michael Kors. I'm thinking of our friend Jason in the Barclays booth there. That was very different than trading stocks on the NASDAQ, where a million market makers have their fingers in the pot, and price is determined by a lot of showmanship on a level 2 screen. A lot of quotes aren't as firm as they are on the NYSE. So for a long time, the trading that we did was very strictly confined to stocks that traded on the big board. When ARCA and NYSE merged, and the NYSE became more computerized, became more of an ECN-driven market, that's when we made the switch and started also trading NASDAQ. We still only trade equities. We've got lots and lots of traders who are working with us who are trading options on these same strategies. You can definitely take any of the things that MetaStock will scan for on my patterns anyways, and develop option strategies around them. Here's the caveat, right? If you have that package, if you have that add-on that Jeff was talking about, you need to make sure that the liquidity is there on the stocks that you're scanning for. So as we get into this pattern here and I show it to you, somebody's going to say, can I trade this with options? That's always a question that comes up. The answer, right off the cuff is yes, you can trade this with options, but make sure that the liquidity is there, right? So you want to make sure that you're trading things, essentially, if it's 500,000, 600,000 shares, maybe 1 million shares or more per day, the stock that's come up on your scanner, it's going to be pretty easy to get filled. In the options market, if it is something that's trading 300,000, 200,000, less than 500,000 shares, let's say, then the liquidity is going to be much, much better if you just focus on the stock. So the strategies are great. And I can show you, the evidence that this has been year over year over year. We've got 20-something years of plotters and spreadsheets and results that'll just show you, that it puts up pretty amazing numbers if you follow through on everything. But go back to that psychology and then look at this list and ask yourself, how often do you fall into one of these categories? Because these are the things that happen to people. They'll fail to pull the trigger on a good setup. That happens because the good setups can look like the tough ones, right? It can really look like a thing that's marginal, can look like it's about to really run and be easy, where the reality is, the thing that looks like it's going to be a tougher thing to pull off is the better setup to take. A lot of people let losing trades run. We've seen this now over the last, so we've been doing those boot camps for, we do 2 of those a year. I guess we've been doing them for 8 years, right? So we work with about 40 people a year. We're a very small business and we want to keep it that way. We get about 600 people a year apply to go to the boot camp, and those 600 people get sort of narrowed down via those psychological tests and some discussion with us to about 40 people. And even in those 40 people, we see a trend of it feels good to win. It feels bad to lose. Psychologically, these are very basic facts of human life. And what we see a lot is, a guy will start taking, let's say on the intraday trades, on the day trades, somebody will take a stock that's supposed to have a 75-cent per share profit. He's got 1,000 shares of that stock out there. Stock runs 40 cents, starts pulling back. He takes it off at 30 because he wants to book a profit. That's not the strategy, but it feels good to take the win, right? So what do? They take the win early. And then what happens over time is you wind up reducing the magnitude of those wins until you're all of a sudden at a point where you're taking 10 cents off the table every time, right? Well, if I have $100 profit, if I do this 10 times over the course of the day, it'll be $1,000. That's good enough for me. And then on the losing side, they wind up saying things like, well, you know what? They always come back over the course of the day. So I'm just going to let this open up a little bit. I'm going to give it room to breathe. I'm going to let it go beyond this stop. And by the end of the day, I'll be okay. And then all of a sudden they get into a position of now your 4-to-1 margin goes 2-to-1 because you're holding it overnight. And then in the morning, right, the stock either goes against them or it winds up going strongly in their favor, which I think is even worse. And now the bad habit has been, it does one of two things. It brutally punishes them or it rewards them for doing the wrong thing. And, I think in either case, you wind up in a place you don't want to be. Another thing that we see, very commonly happening with the intraday traders, they'll add to losing positions because they think that, if I just dollar cost average on the way down or on the way up, in the case of a short, that I'll be able to get in front of this thing. I'm going to be able to make this loser a winner. It's as bad a habit as the guys who go in and make big profits in the morning and then lose their money in the afternoon. So John, if you're here, I've got my buddy John Conforti, who does not mind me using him as an example. He would get in there and do sort of this expansion of range and volume trade on Apple first thing in the morning, every single morning, every day. He was thousands of dollars in profits in the first half hour. And by the time he got to the end of the first hour and a half, he was down $2,000 or $3,000 or whatever it was. And by the end of the day, he would fight his way back to zero. But the reality is he had a morning strategy and then he just figured he was going to turn that into a morning, noon, afternoon strategy. And he took unplanned trades, held them for home runs. All this stuff that you see on the screen here undermined his trading, and it took him a year and a half to get around to where he had better habits and was ready to do this stuff right. So, my biggest message today is whatever strategy you look at, MetaStock's got a ton of great stuff that you can do in terms of add-ons. Make sure that when you're looking at it, you prepare yourself. I've got to do this the way that it's presented, or else it's my fault when I'm not able to replicate it, right? I need to be able to replicate these results. The way to replicate the results is going to be, I need to be able to replicate the psychology of the person who created the strategy. So for me, the way that I go and divide up my day is I make sure that I've got something to do during every portion of the day that is dedicated to that portion of the day. So I've got this NASDAQ scalper strategy that's trading volatility bands. That's an opening strategy. I've got a 2SD gap trading strategy. That's another bread and butter strategy. We're looking for 2 standard deviations of the volatility that a stock normally experiences. That's coming on the heels of a gap. It's coming when there's earnings, and we know that we're going to get a mean reversion after that happens, and that happens in the first half hour of the day. Then we've got this fastball XRV strategy. I'm going to show you today how this expansion of range and volume strategy works. That's a bread and butter strategy. That's almost happening in the background for us every day. We just know how to set those up. We put them into a bracket order. It's a very simple thing. It's a stop limit order that just make sure the stock is coming from the right direction. If it gets to the entry price, we're in. If it gets to the target, we're out. If it gets to the stop, we're out. And then it manages the money in between. And then we've got this around the horn strategy, which would be all the stuff in the MetaStock add-on. Right, so you can see here, those are the strategies that are around the horn. There's chapters 4 through 10 are the things that are covered right there in the plugin. And what you're going to do with those, right, if you already have them or if you're planning on working with them, is you're going to put them into a trading plan. And this is my trading plan. And if you just bought the plugin, or if you're going to buy it, or even if you have bought it and you haven't looked at my version of the plan before, I'll give you 3 months of it for free, just to look at. If you bought it in the past and you never took advantage of the plan, just shoot me an email and say, hey, I need to look at that trading plan. I want to see how yours compares to mine. Because what you want to do is take the output from those MetaStock scans. You want to vet each one of the candidates, make sure that it meets the criteria in around the horn, right? And you'll have all those things. MetaStock has all of the different patterns explained in detail with the site. You don't have to buy the book, right? You can just look at the information that comes with the plugin, and then you want to set up a trading plan that looks like this: very, very high level of specificity, right? You've got clear criteria. You have an entry trigger, you have exit strategies for profit, for a loss. You know exactly what your money management rules are. And over the course of time, what you want to do is have a very high level of specificity in how you record these trades. So if you look here at this is a yearly blotter, right? So this is the yearly for last year. And what you see is, there's a great equity curve over the course of the year. But more importantly, when you get those patterns from your scanner, so whatever the scanner is, right, whether it's mine or Bigalow's or whoever's thing you're looking at, you want to make sure that the pattern distribution, right, and the triggered pattern distribution sort of represent the same thing. So when you're recording your results, you don't want to see that you've picked, that's the pattern distribution, right, that you've picked exclusively, let's say, double header, right? You've picked exclusively one pattern because you like it, right? You're introducing bias into your trading, and that in the triggered pattern distribution, you see that one doesn't really show up that much, right? You want to make sure that you're not introducing selection bias into what you're doing. Let the market come to you. Have the market tell you what to do. Don't go out there looking for fastball just because it's the highest profitability trade. What you want to do is go out there and look for all this stuff, and then make sure that you're actually picking the things that the market is telling you are the right things to pick, right? If there's one fastball set up for the day, and that's the only thing you have on your trading plan, and there's 13 other things on there, you know, you've probably selected the thing that you like to trade rather than the thing you should trade. And then you also want to make sure that you're not biased in terms of long to short. So, you know, you can see here, you know, most of my trades last year were shorts. When you look down, you also see that most of the profitability was shorts. Like the short profitability dramatically exceeded the long profitability. That tells me I did okay, right? I should have been skewed to the short side. That's the right thing to have done, given the nature of the patterns. And then, of course, you want to make sure that your overall winners are much greater than your overall losers. And those things called scratches in there, that green thing, that is that green wedge of the overall profitability pie. What that represents are trades that are money management trades. So you get in, you got 50% of the distance to the profit objective. It came back down to the entry price and it took us out. And then, like I said, if you look at the pattern profitability, right, that gives you information relevant to the pattern distribution and the trigger pattern distribution. It says you picked the right thing by trading fastball because, yeah, the pattern that you picked was more frequent than the other patterns, and the profitability of that pattern blew out everything else, right? So we were on the right side of the market. And again, this year, right? So this is where we are year to date here. You can see, you know, on a $100,000 trading account, you did very well over the course of the year, right? Leveraged 4 to 1. You're up $131,000, I guess, is the number there on the asset distribution portion of the left column. That's great. But what's really important is, again, look at the triggered pattern distribution, look at your longs versus shorts, make sure that you're doing what the market is telling you to do. So, you know, every morning, you know, I'm getting ready to profit from the open. It's strategy, it's discipline, it's psychology, it's workflow, right? We want our workflow has to be set up to maximize our results. So, you know, right around the opening bell, I've got my pre-programmed trades that I'm setting up. These are all the things that I scan for with the MetaStock plugin. At the opening bell, I'm trading my discretionary trades. Those are things that I'm drawing these volatility bands for. Right at 5 minutes, I'm looking at the gaps. It takes 5 minutes for those to validate statistically in terms of whether or not there's going to be a mean reversion. But I know that for that first half hour, I'll be trading those. Opening bell to the first hour, I'll be trading those NASDAQ trades. I've got this stuff going on in the background. And after the first hour, really all I have to do is monitor the automated trades and make sure that, you know, all the money management is in play, make sure that the money management is happening. Julie does a lot of that, you know, trailing the stops, 50% to target, move it to break even, 10 cents to target, we move it to 50%. And those levels are primarily driven by the fact that when we started trading, we were trading in eighths and quarters, right? So we were 12.5 cents was our benchmark, and it just sort of migrated to 10 cents over the years. That's been the biggest change, if you can believe it, in our trading since day one. So if you go back and you look at all the guys who've been offering trading information for the last 20 years, what you're going to see is Adrian and Julie have really never changed what they're doing, right? And we're out there all the time talking about it because we love it. So the strategy component here, right? As I said, we've got automated opening trades. We've got those super cap volatility trades. We have the 2SD trade. All of that only works against the backdrop of discipline. So we plan every single trade. We have very precise entries, right? If you scan these things up, you're not going to go and just throw them out there and let them go. You're going to do some work to figure out where the price action was. You're going to figure out where support and resistance is. You're going to have logical stops and logical targets based on those inflections. And you've got money management rules that make sense. So you're only going to enter if those planned levels trigger. You're going to control slippage with your order structure. You're going to do stop limit orders. You're not going to go out there doing market orders. Market orders are not your friend ever, right? All those places that offer you free commissions and you're doing market orders to get in and out of the positions, just do the math. If they slip you 10 cents on every trade, or if they slip you 5 cents on every trade and you're trading 1,000 shares, you didn't pay a $5 commission, you paid 50. So we automate our money management, right? We get through here, we plan our trade, we trade our plan, and we always make sure we exit at the stop or at the target. So we don't allow for a lot of discretion in what it is that we're doing. Part of that is because, our psychology, we're out here on the West Coast. It's very, very difficult to make snap decisions at 6 o'clock in the morning. But a bigger part of it is you need to know what it is that your relationship with money dictates you're going to do. Are you going to second guess yourself because of the way that you feel when you're in a position? If you are, it's best to automate everything. So, as you go through these things, right, through any trading strategy, all of this stuff is super, super important. Trading's boring. It's not exciting. I tell people all the time, they come over here and they're watching us. We've got a group that wants to do a reality TV show about what Julie and I do. And they have been in our office about once a week for 3 months now, and they want to know when it gets exciting, right? When do you guys get worked up? When do you yell at each other? When are you screaming, close that position? It just doesn't happen, right? It's not an exciting profession. It's a boring profession. It's exciting at first because, you're seeing strategies coming together and you're working and you're making money and it feels like it's the greatest thing in the world. After a while, what you're dealing with is just process, and process can be much less exciting than you think it's going to be when you start doing this as a business. Good news is it'll fund a lifestyle, right? And in our case, our lifestyle has been all about traveling and being able to, we do a lot of these speaking things because we love to travel. We're on the road. Before COVID, we were on the road 6 months out of the year. That's the part of it that was exciting for us. It was traveling all over the world, talking about this trading stuff, then trading from a place and being able to go explore. So you have to find the thing that's going to be exciting for you. Don't make trading the thing that has to be exciting, because that's a very, very good way to put yourself in front of the opportunity to lose money instead of the opportunity to make it. So let's talk about this particular strategy, this fastball expansion of range and volume. I'm going to show you, we're going to do a little bit of a dig into what it is that MetaStock add-on is looking for, so that I don't believe in black boxes, right? I think that, just like my friend, Bigalow here was talking about, you need to know why stuff works. You need to know how stuff works. The strategy guidelines for this are pretty simple. So again, we're looking at stocks. You want your universe of stocks to be things that trade between like 350,000 and maybe 2 million shares a day. That's a good universe to start with. I like things above $30 per share, 30 bucks up to maybe $120. That's sort of the sweet spot for it. That's because then you can use fixed lot sizes. You don't have to fool around with resizing your orders, just to get the risk the same on every trade. But essentially, this is a super easy trade to follow. This is going to be a breakout from a pullback or a consolidation. On the day that it breaks out, I'm going to show you examples of this in sort of idealized chart patterns on a 5-minute chart, a daily chart, as well as the results of a scan and what those opportunities were. So just bear with me for a minute here. Widest range of the past 10 days on the breakout day. We want to see greater than average volume. So when you go through and vet these, for instance, MetaStock, the scanning module, when Jeff and I put that together, I said, let's err on the side of, keeping that volume threshold down a little bit. Let them go and personally look at the chart and see if the volume looks to them like, hey, this is volume that's bigger than the average day over the past 10 days. This volume looks significant. I want to be part of this. And then the next day, we're just going to enter beyond the extreme of today's bar. So, and then we're going to target, of course. I'm going to show you how to set the targets. You target support and resistance. You're looking for overhead on the longs. You're looking for support on the lows. And it's all about how much room is there between where you're trading now and those numbers, and how is that ratio then versus the stop. All of those things are going to tell you whether or not you're actually going to set up the trade. But this is the ideal kind of version of the trade setup. These are daily bars. So you're looking at 1-day bars here, and you see you've got a nice trend. You need to, if you need to plot like ADX and, DI plus and DI minus and all that stuff to figure out what the trend is, then I'm just here to tell you, you're not looking at a trend, right? You should just be able to draw an arrow on some ascending tops, draw an arrow on some descending tops, and that's what's going to define the trend. It should be just that easy, right? Just a visual trend identification. And then you see you have, and then you see you have this bar that makes this breakout, right? Widest range of the past 10 sessions. It's going to be hopefully on heavy volume, gets you up above those tops. That's the bar that sets you up then the day after this, a few cents above the high of that bar. You want to go long and you want to target overhead resistance. This is the pullback to the short side, right? It works exactly the same way. You've got a downtrending market followed by a pullback to the trend line, followed by a breakdown in the direction of the original trend. Now we're going to short the market just below the low of that bar. We're going to target support. On a consolidation, the difference here is these can go either way. So if we've got a move to the upside, and then this consolidation range here, we don't know if that's going to represent distribution or accumulation, right? You don't know if it's accumulation or distribution until you get either markup or markdown again. But what you do know is if I break out of that consolidation range to the upside, I've got a good opportunity for profit here. I'm going to go long above the high of that daily bar the next day. I'm going to target overhead resistance. Or if we have a consolidation that pushes us out the bottom of the channel, right, we're going to short it and we're going to target support. So these are just very simple ways, right, of looking at these markets and telling us where we think they're about to go. So in each case, right, we know exactly what we're going to do, and that's because we've got discipline in place. So the discipline on these is going to be, like I said, most people are going to want to use, they're going to use some kind of scanner to find these things. MetaStock is the best. It's the only one that, we used to work with a bunch of companies. This is the only scanner for the last 10 years or so that that we still lend our name to. It's because it sets these up exactly the way that the criteria in the book are laid out. It does a very, very good job of identifying the best opportunities. Then it's your job to go through and confirm them. You're gonna take a list of about 20 and you're gonna parse it down to 2 or 3. That's a process that takes maybe 10 or 15 minutes. But once it's done, you can go through and you can set up either conditional orders or bracket orders, and you can put these things together and just leave them out there. If you set it up with a conditional order, the beautiful thing is, let's say for a long trade, you're looking for a long first thing in the morning. You don't want to catch a falling knife, right? You don't want it coming from above and triggering you in. So your entry criteria is, all right, if it's an inline open and price is coming from below my entry price, or the price that I want to establish a trade, then buy stop limit with, let's say it's $50.10 is the entry that we want. So we say buy stop limit, $50.10 stop, $50.18 limit. So the worst slip we're willing to take is 8 cents. So you can set up that bracket order to take care of your trade for you. And you're only going to get pulled into the market when that trade is within your allowable slippage. So it's not like a market order where if the market maker sees your order coming, fills the first 100 and then backs away from the market, and now you got slipped 25, 30 cents, right? That's not going to happen as long as you control the slippage using these bracket orders. And there's not a problem getting filled with the brackets, right? The brackets, the price almost always comes back to you. It's very, very rare that it jumps you and keeps going. So, and as I said, we're only going to enter when price is moving in the planned direction. So how do we find the opportunity in this case? What you want to do, I was going to run one of these scans, but they actually take a little bit of time, right? They take 10 or 15 minutes to run. So in the case of the around the horn scans, you can do the around the horn all pattern scan. You get in there right when the market closes. You mark this thing to go and scan. In our case, I do NYSE and Nasdaq. You tell it to go scan for all the patterns, and then you go make yourself a cup of coffee. And by the time you get back with your cup of coffee, it's going to be ready to go. And then you take that information, and what you do with it is you set up your trading plan. So this is one plan that I have for these fastball setups, right? This one is on the NASDAQ side. I trade the NASDAQ ones just a little bit differently than the NYSEs. On the NASDAQ, let's say it's a long trade. then what I do is I take the stock and I say, all right, we've got a long position here. We've got a long expansion of range and volume. If tomorrow price violates the high of today and we get about 5 cents or so above that, that high price that we put in on the day, then I want to buy the stock and I want to target either resistance 1, the floor trader pivot, or $1, sort of whichever one comes first winds up being my target. And then we set the stops based on intraday support and resistance. These work out, very nicely for the NASDAQ trades. They're not as, it's a different animal, right? I'm just going to say NASDAQ is to this day a different animal than the NYSE, but we've got everything. In this case, these particular trades, right? This was a short, so we're going to target support 1. So a very simple method of establishing targets. It's just either is it long, is it short? Long's going to target R1, short's going to target S1. That's a very, very simple way to look at it. On the New York Stock Exchange listed stuff, it's going to be a little bit different, right? So here we've got ANF. This one's scanned up on. So these are before I went to New York is when I recorded those scans. ANF. This was on. It was on the 3rd for the 4th. So on November 3rd for November 4th. Was where the scan came up, and you can see here what I saw when I was looking at this trade. So on the right side of the chart over there, you see that expansion of range, expansion of volume bar, right? The thing is breaking out to the upside. And the first thing we do is try to figure out how tight is the path between where we're trading right now, the high of today, and that potential profit objective. So we find support or resistance on a daily chart always set the targets from a daily chart. So we're going to set our target from the bigger time frame. We're going to set our stop on a 5-minute chart. All right, so on a 5-minute chart, this is the time frame that we're going to trade in. We identify the support and resistance on the 5-minute chart on that setup day. And in this case, that line right there says to me, if we violate that to the downside, we're going to wind up back at the next support, or even worse, back down into the range of the morning. So in the event that we get triggered into this trade, I know exactly, right, that I'm going to put my stop loss right there. It enables me to set up the bracket order. And then on the trade day, right, we see that we've got several opportunities here to enter the trade. So again, there's a 5-minute chart. That blue line that just popped up there, that's our profit objective. And we've got 2 opportunities here to get to that profit target. Here's opportunity number 1. We get entered, we get triggered into this trade. It immediately goes up to that profit objective. And look how well that daily support and resistance managed to constrain where price was going to go. You don't need a bunch of indicators. You don't need oscillators. You don't need, moving averages, stochastics, all that stuff. If you can draw a line on a daily chart, I'm going to guarantee you, if you're good at spotting support and resistance, you're going to be able to go and pick off where price is going to stop moving more times than not. All right, so we had that opportunity that got us in, got us out. Then we had a second opportunity for an entry, and that was when price came back down below the stated entry price. We have a in the rules that go with the trading plan. So like I said, if you buy the add-on module and then you decide, I need a little bit of hand-holding with this thing because it's giving me a lot of results, I need to see what he narrows it down to, I'll give you my trading plan for 3 months. You really don't need it longer than that. If you're scanning for these, a couple months of just sort of mirroring which ones did Adrian pick. I'm scanning for him too. Which ones did Adrian pick? Which ones did I pick? Oh, I see the logic here. This is why he did this. This is why he did that. If you don't understand the logic, send me an email or send me a text message. I'm happy to talk about it just to make sure that everybody's on the same page. But in this case, it came down 8 cents below the entry price. That's the rule on our trading plan. Once it's down 8 cents below the entry, when it goes back up again, right, and it hits that profit objective, entry 1, entry 2, that's when we're done. So we do 2 entries on a stock from our trading plan every single day. We play it by the rules. 50% of the target, move the stop to break even. 10 cents to the target, we move the stop to 50%. At the target, we take our profit. If it hits the stop, we're out. Okay. Here's another one. This is IRM, right? So Iron Mountain, this is another one of these structured entries. This is what I'm going to show you how to sort of put this stuff into a plan rather than just showing you, the levels on the chart. But, here it is. I'm going through and I'm looking at these. Look at all those highs over on the left there, right, where we've got that pointy spot on the chart that tells you, that's a place that we're going to run into some resistance. Do I think we're going to make it back to that absolute threshold high? I don't. That's because there was, there was really good volume pushing price up to that high. But then once we got there, the order flow reversed, right? We got to that top, order flow reversed, started pushing price down. And then there was really significant volume as price came in again. So this tells me, when I'm looking at this chart, that the best place to go and target is going to be, right where that line, you can see where it intersects with the open of the bar after that absolute top. That top's called an infield fly. In your scans, by the way, that would have come up as a short signal. So you had a beautiful short sale on that, but we're talking fastball today. So let's just focus on what I'm doing here. Where it bisects that opening price, that's where we had a big sell-off. That's the area that I want to go and target then, right? So always go through, find your support and resistance on a daily chart to establish your target. Then go to that intraday chart, that intraday 5-minute chart. This is where you're trading from. This is going to be the time frame that you trade in, right? And all you have to do with the scans in MetaStock is click on show it on a chart. You just tell it to bring up a chart with the symbol loaded, and you can just fan through these. And if you open, and here's a little trick for you, if you open a new window for each one, then what you do along the way is you only eliminate the ones you're not interested in. Leave those other windows open so that you've got a nice little, just sort of bucket list here when you're done of the stocks that you looked at that you like the best for the next day. So here is our stop, right? This is going to be on a 5-minute chart, intraday chart. You can see there, right? Or you should see there that line represents the point where when price got above there and it came back down, it had a very strong momentum to get down into that lower support. And on an intraday trade, that's not something that we're going to be interested in, right? We don't want to get below that line. If we get below that line, stock might be doing something other than following through. And if it's doing that, we don't want to be part of that position. So here's the way that I put these trades together. Okay. So in the case of Iron Mountain, we know the position was along the fastball setup, the expansion of range and volume setup. Very simple, very easy to see on a chart, right? It opened low, it closed high. That's a great criterion when you're scanning through these. If they open at one extreme and close at the other extreme, that's a really good looking bar. In this case, our position was going to be a long, and then we just go through from those lines that we drew on the chart, and I'm copying these back into an Excel spreadsheet then and setting this up for myself and for the guys we work with. Our entry was going to be $48.53. So buy stop limit, 48.53 stop, 48 maybe 60 limit. Our stop loss on the trade was going to be 48.16. Remember, that was from that 5-minute chart that we looked at. So on the 5-minute chart, I just went and I found here's where the support is. This is where I'm going to say uncle if this thing comes back in again and violates this 48.16 level. I'm out. The initial target was from the daily chart, 49.07. So that's where we went and we said, geez, where are the bodies buried on this thing, right? Where is it going to be the case that a bunch of people who didn't get out the first time are still sitting on this thing, and when price gets there, they're going to look to get out the second time? We don't want to be part of that cascade. That initial target is just shy of where the sell-off started. We're going to get out there in the order flow, right? I'm an order flow trader. I'm always looking at the difference between what we're doing now and doing on the floor is on the floor, you're an order flow trader, and that's really your biggest concern is just managing buying and selling, buying and selling, buying and selling. This requires that you be part of the order flow, but also that you're right directionally, right? We're also directional traders in this case. So we're always looking to avoid the place that price is going to cascade against us. And that's how we establish that target. That gives us a ratio, though, of 1.46 to 1 on this trade in terms of profitability versus the loss. That's plenty for me. If it's better than 1 to 1, I'll put it on my plan. 50% of the distance is $48.80. And that tells me that if I get from 48.53 to 48.80, that's the point at which I want my software to move to stop to break even. Okay, that trade becomes risk-free at that point. And then the support and resistance lines, those are, I'm not going to have time to talk today about how those factor into my trading. Suffice to say, they represent areas that you're going to watch and just know why a stock is pausing or hesitating. And then when you look at the trading plan, you can see I've got internal support and resistance levels there. There's just a confluence between natural support and resistance and those floor trader pivots. We have some inside trades that we can also do against this. But the big thing for today is just, look, if I get in at 48.53 and I'm long, is there something I'm going to run into on the way to 49.07? Oh, yeah, there is, right? 48.87. So I know that about 30 cents into this thing, I'm going to hit that R1 level. That's going to be right at the 50% to target level, right? So how probable is it that I reverse from there? How probable is it that I move through? Once I get through that R1 level, I know that I've got a high probability that I'm actually going to hit the target. If it pauses there, if it hesitates there, I'm not going to start worrying and saying I've got to pull the plug because, geez, it's at 50% and it's pausing on me. No, it's just at a floor trader pivot and there's nothing to worry about here. It's just a decision support tool. And then, right, Iron Mountain, on the trade day, we can see what happened, right? We had a move that got us up to the target right off the opening bell. You can see there, right, why I say control your slippage, because it opened and then it traded up. You can see the opening tick on the left side of the bar there, right? For those of you guys who are candlestick people, I'm always trading bars. I tell people I do my best thinking in bars, and that's on a number of levels. My wife, Julie, she likes candlesticks. But, the open of that bar ticks higher. Did that go beyond allowable slippage? I don't know, but look what happened a few minutes later. It comes back in, it dips, gets you in the range you were willing to accept, moves up to the target, comes back down, gets below our entry price. We get that dip at least 8 cents below, right? And the second entry winds up stopping us out at break even. That's the risk management stop. It gets us out at the risk-free position. So now you had an entry, 50% to target. You tell your software to move the stop to break even. Stock goes up, gets, I don't know, I guess maybe it got 10 cents to the target and should have been taken out at 50%. But that looks to me like it just barely made 50% and then rolled back over again. All right, so that is how I trade these things. Again, lean a little heavily on the psychology portion of it because I think that, psychology is definitely the biggest part of the show. If you're interested in my morning trading strategies, like I said, you don't have to buy the book. I've got a PDF too that you guys can download. I'll give you that link here in a second after we can do questions. And the PDF will go through and show you this strategy. So if you're buying the MetaStock module, then I would really suggest, no matter what you're doing, I would suggest download that PDF and read it. It's going to include this strategy, and it's going to give you a really in-depth look at why the strategy works, how the strategy works. It's also going to go over the 2SD opening gaps, which is something I need to work with Jeff on and program that in MetaStock because I can't wait to see what that one does. But it's also just going to get you sort of in the mindset of, all right, here's the workflow. Workflow is important. Psychology is important. What do I need to do to prepare myself in the morning to succeed versus get in there? You don't want to get in there and be nervous and try to figure out what to do and shooting from the hip. This is all about a very, very structured approach to intraday trading. You can use this stuff, as I said, for options trading. Lots of guys doing options. It's just a market-based strategy. This is all about market cycles and market cyclicality, right? What's it take to get on the right side of the market? And I would argue it's just let the market tell you what to do. You're not going to impose your will on the market, right? But if you work with it, if you work with the order flow, I'll guarantee you your chances for success are much higher than if you're fighting it. So here is, that's where you can download that ebook. And we can take some questions. Hopefully there's questions.
Hey, hi, Adrian. We're not getting a ton of questions.
Okay.
Sid's at the beginning said these are some very good examples. He also said that trading was 90% mindset and 10% technical. TJ wants to know if you're looking at volume weighted average price.
I do. So but that's in the discretionary trading more than it is anywhere else. And it's also in setting the stops. So when you're using a VWAP, what I would strongly suggest is especially if you're using it intraday. So let's say you're doing, volatility band trading over the course of the session. This is just where, I go through and I bracket up the volatility. I'm looking at, I trade Apple, Tesla, Netflix, NVIDIA, BABA. Those are my sort of mainstays in terms of the volatility trades that I do. So I'll set up bands around those and identify where's the order flow, right? So when you're bracketing off support and resistance on an intraday chart, what you're really doing is you're bracketing off order flow. You're saying this is where there's liquidity on the buy side, this is where there's liquidity on the sell side. And then if you do a volume weighted average price for the whole session, then what winds up happening is, you can get the later in the day it gets, the more skewed that data winds up being. If you use an anchored volume weighted average price, right, where you're going in and you're saying, in your trading software, you're looking at the market this morning and you see that, let's take a look here. You see that, Tesla has been in a steady decline over the first hour of trading. If you go and anchor your VWAP from the open, just look for the pointy spots on the chart, right? It sounds like a really infantile way to look at trading, but if you look at, a high, a swing high to a swing low, and you restrict your VWAP to that level, right? To those two points, which would be, today I guess it's from 9:30 till it's about 10:30. So 9:30 to 10:30 is where you would anchor that VWAP. Then when price comes back up again, what you're going to find, I just checked it, it is a fact. Today you did find it again, right? When price gets back up to the VWAP of that range, right, where you anchored price, then that winds up being a good place to put your profit objective. And you want to put it on the way to the VWAP. Again, you want to be taken out in the order flow. You don't want to go and try to get exactly to the VWAP. You want to go, in the case of a Tesla, maybe 40 cents from the VWAP. In the case of an Apple, 10 cents from the VWAP, right? ABA, those are going to be narrower volatility channels. You can go 2 or 3 pennies from the VWAP, but always go and, if it's possible in your trading software, always use anchored VWAPs over the course of the session. Every time you see a trend, every time you can draw an arrow on a chart and say, here's a peak, here's a trough, draw on an arrow, pull in an anchored VWAP, right? Over the course of the day, you should have 4 or 5 anchored VWAPs and then 1 volume weighted average price that goes over the whole course of the day. And you want to look at the relationship between those anchored VWAPs and that sort of master VWAP for the course of the session. Because of course, guys who are trading stocks for a living, guys who are trading order flow, their primary, we were just down on the floor talking to friends again who do this stuff. Your primary compensation at this point as a trader, as a professional trader, becomes your relationship to the VWAP instead of how many shares you've pushed over the course of the day, or whether or not you manage positions correctly and all this kind of stuff. It's the volume weighted average price is a huge component in how an order flow trader makes his living. That's a very good question.
One more question for you, Adrian.
Okay.
Can you pick a number between 1 and 10,000?
Can I? I guess I could, yeah.
Yeah, you're helping us pick a contest winner.
All right. You want the number? Are we ready for it?
Yeah, I'm ready.
5,370.
Okay, let me go ahead. So that would be Dre Simonet. We're going to give you, I'll talk about that in just a second. Dre Simonet. Oh, I'm not supposed to say last names. Dre S. We will be telling you what you win in just a minute. Adrian, thank you for coming today. I'm going to talk a little bit about your add-on, what we've done together. Appreciate the talk. I thought you did a great job. Thanks again.
All right, thank you. It's always a pleasure. You guys are in the right place. You know, MetaStock, stocks and commodities, great resources, and I can say they've been they've been a real backbone around here for the last 20 years. So good stuff.
All right, thanks, Adrian.
Yep.
All right. Okay, let me just kind of change things a little bit around. Okay, let me go ahead and show my screen. And yes. Okay. Now you should be able to see my screen. If you can't, let me know. Petra says, can I see this webinar again? I've lost a good part of the webinar. Petra, we're actually live casting this to YouTube as well as doing it in GoToWebinar. So at any time, if you want to go see other parts of it, if you all of the sessions, all 5 days are going to be available on YouTube. Just go to youtube.com/metastock, and that will help for you. Okay. All right. Timothy says, when will your second scanner be on MetaStock? We'll let you know, Timothy. I don't have an ETA for it, but I can tell you about the scanners that we do have, and they kind of do match all of the patterns that are in Adrian's book around the horn right here, and those are the fastball, the line drive, the backdoor slider, the double hitter, and the infill fly, and the 3-2 pitch, and the switch hitter. So just to give you an idea, all of these patterns are built as we were showing before with Steve. You can scan for these patterns. There's commentary that's available as part of these patterns, and it's all part of this add-on that we've developed around all of the patterns that are listed here in the book. So with this particular add-on, it's only $399 normally. Here at the conference, we're going to do that at $299 as a conference promotional price. If you need a copy of MetaStock, as I said before, MetaStock's been rated #1 in its price category for 28 years in a row. We'll give you a trial to MetaStock to give it a go. And we'll also give you a 30-day money-back guarantee, so you can try it. You can evaluate it. If it's helpful, you can keep it. Give us a call if you have any questions for us, 800-882-3040. You can also chat online with us at metastock.com/saleschat and metastock.com/comp promo for any of the promotions that we're offering today. So in any case, our prize winner, Dre S from the Bahamas, we're going to hook you up with a 3-month subscription to MetaStock, real time, as well as the data that powers it, as well as what we're going to do is actually also give you a subscription to learnmetastock.com, which is going to allow you to kind of get into everything, start using it, all that kind of stuff. So 3 months of MetaStock with our news service as well, our real-time version of MetaStock with all of the news and information that we get through Refinitiv. This is a software product, just the Refinitiv side of it. They've spent over $1 billion designing it. One of probably the best news organizations on the planet. They get all their data and their news and their information from Thomson Reuters. You'll be able to get 3 months of that with a 3-month subscription to Learn MetaStock. Congratulations, you won the prize. If you do want to sign up for that, you can also do buy one, get 2 free months on MetaStock. You can just go to metastock.com/conference promo. Okay, I do want to say thank you real quick to CMT Association. CMT has been sponsoring the events for the last several of them. They do a great job. I really like working with CMT. They're very, very easy to work with. It's such a well-respected and well-reputed organization. Many of the people that are actually speaking here at the event are CMT I don't know, licensed. I'm missing the right term, but they've got their CMT designations. They've gone through kind of the process to get it. Anyway, you can find more about the CMT at cmtassociation.org. You can give them a call at 646-652-3300. Okay. All right. Our next speaker today is John Osborne. John Osborne has been working with MetaStock for a number of years. He's a man of many hats. He's worked with value charts, microquant. They put together a a lot of different things about into a lot of technologies. They own several patents on a lot of the tools that they've used. John has actually taken a lot of the tools that they've designed and designed them into MetaStock. And not only is he a very, very good programmer, he's also a really, really good presenter. So I'm going to go ahead and let him take over. How are you doing today, John? We'll go ahead. Try that again. How you doing today, John?
How about there? Can you hear me okay now?
Yep. You only have me a little bit nervous, not very nervous. Let me go ahead and let's see.
I don't mean to do that, that's for sure.
No, you're totally fine. I did make you the presenter, it looks like, so you should be able to share your screen. I'll confirm that we can see it. It appears to be not only shared with us, but it also appears to be the right monitor. So everything looks good.
Well, there is some luck involved in that, I think.
Yeah, there always is. Yeah.
When you have as many monitors as we need to trade, right?
Exactly. We also, just to warn you a little bit, we've had no technical issues, so we're due.
Okay, we're due. That's okay. We'll work through them.
All right, John. I'll get out of the way.
All right. Well, hello, everybody. I'm John Osborne, and thank you for that wonderful introduction there, Jeff. And I'm here to tell you about something that's going to change the way you look at charts forever, because you're going to be able to see some new technology here that's able to route traders through a chart to find the best trades. So let's go ahead and get started. Now we're going to be talking about trades. Let me just remind everyone that trading or investing carries a high level of risk and isn't suitable for all persons. And trading's risky, we know. In fact, we need that risk to be able to make money out of the market. So remember, don't trade with money you can't afford to lose. And also, we've done our best to ensure that everything that we show you here is accurate, and the information that I'm in the information I'm going to share with you. This webinar is to provide you with information you can use to help you make your own independent trading decisions. And of course, past performance isn't necessarily indicative of future results. The markets are unpredictable, as we'd like them to be, really, in some ways, and we want to be prepared. Now, CFTC Rule 4.1, I need to show you that as well. And that means the government wants you to know that trading has both rewards and risks. Don't trade with your food money or your rent money. And I'm not soliciting you to buy stocks, options, futures, or any other securities. Be careful. The market can take your money. Now, I always suggest that you are trading in paper with any new strategy, including the one I'm going to show you today, to make sure that you're profitable in paper before using real money. So you have real money left to trade when you are able to follow the system and use the tools. So what I'm going to show you is going to look easy, and it's going to look like, hey, I can just go make money in the market. But I do ask that you please paper trade it to make sure you see how it works and understand how it's, how to actually make it work and prove that you can do it with the tools. Now, today, we're going to talk about how to completely transform the way you are trading and start to seriously grow our account by using a very powerful technique that I like to think of as a stock market GPS. And I want you to imagine for a moment being able to approach the markets every single day, armed with a sophisticated yet easy to use piece of software that traders have used to double or triple, even quintuple their accounts. Now, imagine that. Do you think you'd possibly be able to improve your trading if you had a tool that could help you do that? And it's okay to answer yes to any questions I have here. I know the answer is yes. That's what we're looking for, aren't we? We're looking to make more money on our account. So just imagine being able to identify trades with pinpoint accuracy like a hedge fund does. And do you think you'd be able to drastically grow your trading account if you had those tools? Well, if you've never thought that this was possible until now, I have great news. It's totally possible for you to do this with what I'm going to show you today. Now, this is technology that has been in use by our best traders, and we've even used it in powerful automated trading systems that we've sold access to, and in some cases had advisories. So today, you're going to learn what a stock market GPS is and how it can improve your trading and why you need it. And this isn't just an incremental change we're talking about here. It's a powerful, fundamental way to identify trading routes that lead to profits in the stock market. And I'm talking about these types of trades. This is a 700% gain in Tesla, which was a $789 per share gain using this technology. Here's a 76% gain in Amazon using this technique. That was a $1,535 per share gain. And this is what I mean by transformative trading. Now, do you think finding trades like these could make a noticeable difference in your trading? And remember, that's one share that we're talking that gain. Okay, well, I hope that's something that you would think could at least pique your interest. Let me show you what I'm going to show you here today. So one question is who am I? And Jeff gave me a nice introduction here, but let me I'll tell you a little bit why I am still trading and or still teaching people how to trade and make money out of the markets, because I want to illuminate why I'm passionate about helping people in the markets. Now, I've always been interested in the markets. When I was a kid, I watched my dad trade by looking up stocks in newspapers and staying informed on new developments through reading. Nothing like what we have today, but he was one of those traders who bragged more about what he did wrong in the markets than what he got right. Still, you know, he did okay in the markets, but I know he always thought he could have done better. And he got me inspired to learn more about the stock market. And he made sure I understood that making money in the markets was how I was going to stay ahead of inflation and to get where I wanted to be. So, you know, I got the bug from him, and I dabbled with trading here and there as a kid, and even as a young adult when I first started working as an engineer. And like my dad, I did okay, but I wanted to do better. So I started actively trading more in the 90s. And you remember that time? That was during the dot-com boom. And that was when even monkeys could go out and pick a winning stock portfolio. They were actually having monkeys throw darts and picking stocks, and they were doing pretty good. Now, everybody was doing well then, but when March of 2000 came, you know, I and many other traders learned the hard way that markets don't always go up. And I realized then that I needed to, if I wanted to continue trading, I needed to learn more about trading the markets and how to make money, whether they're going up, down, or sideways. So if I could learn how to trade myself, then I could teach my dad to do the same thing so he could be a more competent and more successful trader. So I said, well, this will be great. I'll help my dad out. So I took all kinds of courses, spent all kinds of money for many, many years, just like I know that many of you have done. And perhaps you can relate to my own experience. Now, with all that training, I felt like I was going in circles, trying one thing after another, but never quite finding that success that was eluding me. And I thought that it was achievable. I thought I know my dad thought it was achievable. And it wasn't until I got involved with Basecamp trading that I really learned how to read charts correctly with a focus on trend and price action. And I finally learned how to trade the right way. Unfortunately, by then, my dad had passed away, at least before I was able to teach him what I had learned. And since I wasn't able to teach my dad, today I teach others about trading in hopes that they can reach their own goals. And then those that I teach can help other traders do the same. And then who they teach could then teach more and more. So it could make a big difference for many. And maybe some of them will be able to teach their own dad how to trade, or their mom, or their son or daughter. And I know that helping so many others to achieve their own goals in trading is something that would make my dad proud. And that's why I love to share how to pull money out of the markets with traders like you today. And at least those traders who are genuinely putting in the time and effort to learn how to trade. So let's learn how to do it here. So I'm going to let you in on a technology that can help any trader be a better trader. I'm going to explain how this powerful tool can make a huge difference in your trading. It's going to completely transform the way you look at the charts and the way you trade and the way you pull money out of the markets. And I hope that you will share this with your own family and friends to help them achieve their own goals in the market. So let's get started. Now, let's start out with an example here. And I just want to check questions here. Okay, good. Let's start out with an example. And because I think giving an example is a great way to get a point across. So let's see if you can relate to this in your own trading. So here's an example of where traders misinterpret what the market's telling them. It's a common pitfall for traders who don't have all the information they need to make the right trade entries and exits. So we see a really nice run higher here. And of course, we might see this and say, wow, it's running. I'm going to jump in. So we buy on a pullback. We get a little bit of a pullback here, and we buy as it rises again, only to see it pull back more than we thought. And then it goes down and hits our stop. And you can put in whatever expletive you want here. And that's because we entered the trade on the wrong side of the mountain, meaning that if this was the trade mountain, we were entering right at the point where it was starting to come back down again. Okay, but how could we have known that? And to make matters worse, after we got stopped out, when we find the next valid entry, which is over here, there's a really good reason here if you know how to read patterns. You can see an inverted head and shoulder is here as well. And you get to this point, and after getting burned here, what happens? You get afraid to take the trade. And then you're not able to jump in at this point, which is when you should be taking it. And of course, the market takes off without you. Has this happened to any of you where you just jump in at the wrong time, couldn't really understand that you were getting in at the wrong time, and then you were afraid to take the next one? Of course, that one runs, right? And I know what it feels like. I've been there. This is what I spent a lot of years doing and wanted to fix this problem. Now, this type of flawed chart reading can wreak havoc on your ability to make money in the markets. The setup that we looked at looked right based on the information that we had, right? And we jumped in expecting it to run, only to have it just run against us. And like I said, I know some of you have felt this, and it's one of the most frustrating things that you have to face as a trader is. So you have to brush yourself off, vow to be right the next time, and then when the next trade setup comes along, that doubt then creeps in again, and you skip the next trade because your confidence is still beaten up. And of course, that trade, the one you didn't take, runs to profit without you. Very frustrating. Yeah, I see Mary says, yes, I did that several different times. Exactly. And then Mary probably can confirm here, once you have a couple of these missteps where the trades you get in fail and the ones you skip run, then it quickly kills your motivation. And you may even start to second guess whether or not you're cut out for trading in the markets, or maybe you start to feel that the markets are out to get you personally. There's somebody on the other side of the trades watching you enter, and they're laughing in the boardroom at you. It's just something you've experienced. You're not alone. I know I felt it, and I bet that almost all traders had felt this. And it's typical, especially for new traders or traders that aren't able to identify the real route through the markets, because doubt is just one of the negative energy sapping anti-trading things that we deal with. There's a lot of others, because it's these kinds of negative emotions and actions that ultimately wreak havoc on our ability to be profitable in the markets. This type of doubt and lack of confidence gives you negative emotions, okay? And negative emotions that rob you, literally take money out of your pocket and don't let you achieve your goals and then your dreams. And you know that they're achievable through trading because you see other people doing it. Now, these negative emotions have no place in a successful trader's mind. To be successful, we must find a way to get all of these emotions out of our head, because these are the things that surface when you're in the heat of the moment, subconsciously, when the trade's happening live and when you have real money at stake. Now, many traders revert to emotional trading in this case when we're live and have real money at stake, and that makes them throw logic out the window sometimes, and you do things like revenge trading, and you make things worse. Now, that's a negative cycle that you have to figure out how to break. You must break that to be a good trader. You must find a way to get your confidence back so you can send doubt flying out the window instead, and then enter each and every trade that meets your setup criteria with confidence and assuredness. Now, we realized that traders need one thing more than anything else in order to give them the confidence to trade well. And that one thing that traders need most is clarity. What traders need, and how many of you agree with this, is that you just want a clear signal that shows you when to get in and a clear signal about when to get out of trades. Now, clarity, that when it's done right, can reveal the state of the stock, so we can easily see when a stock's bullish, bearish, neutral, and we can make confident decisions about the market's next move. So we can brush aside all those negative emotions, knowing that we can trust our technology and our trading system. Now, finally, we have something that can help rebuild the confidence that we know we need as successful traders. And it's something that can help any trader be a better trader. Now, I'm sure so many of you would just love to have a tool that says, get in here and get out here and you're done, right? Now, we've all heard the trading axiom called the trend is your friend. But if you're not able to hear all that the market is telling you, your trade entries and exits remain murky, not clear, but murky. We built this tool to give traders the clarity they need, because we know when they're struggling, because we've been there. We've been there too. And clarity comes from being able to see what's behind the chart's movement. And it may not be evident by looking at just the chart alone. There's other things going on affecting that chart. Now, the market's not really out to get you in much as you think it might. In fact, they don't even know that you exist. And in reality, the market's telling you and telling us what it's going to do. We just have to find a way to hear it so we can know what a stock is going to do next. Now, our technology that I'm going to share with you now can interpret that hidden info. It can help traders navigate their way through charts to find optimal entries and exits. And it's just like a GPS guides us to find the best route through an unknown city or city that you've never been in. You turn on your GPS, you can drive confidently through that city. Because once you start using this tool, you'll see notifications that at first you may not expect. New users who use this technology sometimes write to us an email and say, why is the indicator telling me that it's going up? Shouldn't it be going down at this point? Is it broken? And our answer is always, the indicator's working correctly. You're not looking at the right things. So the algorithm's just looking at the right things that reveal what's going on, what's going to happen next, and it's not always what you might expect. And that makes sense, because if it was doing exactly what you'd expect, you wouldn't need the tool, because you could just trade the markets. But it's that part that's giving us information about what's not that obvious is what makes this tool so valuable. Now, you know, like I said, it's just like when you're driving and you think you know the fastest way across town, and you've done it for years by taking the same path you've been taking over and over again. And then you get a GPS and you put it in your car, and it comes up with a different way to get across town, a way that gets you there in half the time, because you didn't know that road was there. Now, that's what it feels like when you're using hedge fund quality tools like this one. It's like finding the best route right on your charts to get you where you want to be with confidence and speed. So what is this powerful technology that I'm referring to? It's called MQ Trender Pro 2.0. And you're going to hear me refer to it mostly as MTP2 or maybe even Trender Pro. So let me show you how this thing works. It's going to help you by mapping out the actions right on top of your chart. It's like having Google Maps right on top of your charts on virtually any type of chart or symbol. And it does this through really simple, logical color coding. And that's going to make sense to you immediately. You don't even have to watch the training to understand what these signals mean. You're going to instantly know what to do and when to do it. And remember that part about eliminating doubt in your trading? Well, with MTP2, your confidence is going to increase, which will help you get bigger gains. Why? Because you'll not only get in at the right time, you're going to be confident enough to stay in trades longer to maximize profits of the trades you take. That is going to further boost your confidence even higher, because now you have tools you can trust and trust in your ability to execute winning trades. Who knows, you might even start to find it fun to trade again, and you're going to be eagerly sitting down at the computers and rubbing your hands together and saying, all right, let me see what I can get out of the markets today. Now, all of these mean one other important thing, and that is it busts the fear. It gets rid of the fear. Just like having Google Maps gives you confidence to get where you're going, even when you're not familiar with a new area, MTP2 can give you guidance that gives you the confidence to anticipate stock movement on any chart. Now, how does it do this? MQ Trender Pro can help us see the markets in a new way, a way that simplifies understanding of what the market is already telling us. We just have trouble seeing it. So just like a GPS is telling us which way to turn left, right, or straight ahead, Trender Pro lays out a route for us right on our chart that tells you which way the market's heading, up, sideways, or down. It's very simple. We use green for bullish, blue for sideways, and red for bearish. With the core point behind MTP2 is that it helps simplify your trading so you can easily make the decision to get in a trade and get out of a trade and know even when it's best to stay in the trade or get out on the sidelines. And that is, it gives you the clarity you need to reveal and anticipate what's coming around the corner with price movement. Let's see. Albeck says it's like walking through a dark maze with a flashlight. That's a good analogy as well. I like that one. And you almost have a map of what the whole maze is with your flashlight, and you can find your way right through it. Now, we've been using MTP2 for many years, and it's actually gone through several iterations. We call it MTP2, but it's actually MTP3 because there were three. This is the third version of it. And we've done some things to increase its accuracy. And most recently, we provided some additional algorithms in it to give us even better features. The version that we're offering for MetaStock is the latest version. This has got all the latest innovations in it that we built into the tool. Okay, so MTP2 on MetaStock has some additional color codings. It can identify when a market's getting extended. In other words, it's gone too far. And what we do is we show that in gray. So our charts are going to have green and blue and red, but there's also going to be a gray color. That gives us a heads up that we've been running for quite a while in this direction and that maybe it's not going to continue anymore. Now, we don't just jump out of a trade when it's extended. That's important. So if you buy this today and you start using it and you're practicing in paper, because I know you're going to try it in paper first, all right? We talked about that. So when you see the gray, you don't jump right out. It means, hey, be careful, we might be going too far. What we do is we move our stops up, tighten things up a little bit, get ready to get out, maybe take partial profits, right? When MTP2 indicates an extended market, we do all those things, but we want to let it continue to run because it can continue. We certainly don't want to get into a trade at this time, but it doesn't mean jump out necessarily. Now, we also have what are called, I call these, well, we call them the trail stop bars. I like to call them golden bars. Okay, these appear on a pullback against trend. Right? It indicates the trend is pausing and perhaps even reversing. And we use these pauses as an opportunity to trail our stops or to get out of a position. Like I said, I like to call them golden bars, and I like to use them to analyze what happens in the bar that follows a golden bar and see whether it goes with the trade or against the trade. And that is a great way to do it. I'll explain that in a little bit more here in a moment. But we call these trail stop golden bars because they're yellow, but it's also where we often take our profits. Now, all of these colors will appear automatically right on your chart, almost like having Google Maps overlaid right before your eyes on your charts to show exactly where you want to go. Now, let me show you how it makes a transformational difference in the way you're going to make money in the markets. Let's go back to that example from just a few moments ago where we got into the trade at the wrong time. Remember in the beginning here, what I called the wrong side of the mountain, when the market was ready to fall, but we couldn't see it. You might remember that we saw an opportunity to get in on a long trade right here, and it ended up stopping us out. Everybody remember that? Now, let's add in MTP2 on top of here, and let's see if it can help us illustrate the market's trend. Now, adding in MTP2 is like activating GPS as an overlay. Once we have Trender Pro lighting the way, we can immediately tell that at this point here, does anybody see what this color is right here? If you've been paying attention, you might notice that's a gray color, right? We were green through here, which is bullish. Right here, we got gray. And I was saying that we don't want to jump into a trade when we're extended. Gray means extended. So this would not be the time to get into the trade. MTP2 just saved us from getting into this trade because we wouldn't be getting in here. We might have gotten in over here on this break and rode that up, but we certainly wouldn't be getting in at this point because we're extended. Okay. Now we quickly went down to neutral here, and we actually got a signal to go short here. Instead of being stopped out, we could have taken a short trade here and made some money on the way down. Now look over to the right here, and remember that point we said would have been a much better entry, this one right here. Look at the color change from blue, which is neutral, to green right at that point. Okay, this is a breakout out of this congestion area. As I pointed out, we had an inverted head and shoulder here. And this was signaling right at the break of the neckline of the inverted head and shoulder that we were interested in getting in here, and there's the results. Okay, now this time when we're trading, when we have the extra color notification here, it gives us extra information that gives us the confidence and to get into this trade. So instead of worrying about what happened back here, we would just get a signal and we trust the indicator to tell us that it's time to get in long. And right here we adjusted, got an even stronger signal, and up we went. So, and Mary, you got that right, it was gray. And how is this useful with candlesticks? Well, with colored candlesticks, it will work the same way, because the candlesticks themselves will be colored. And then you have to be able to interpret if the candlestick is showing us information, because you can see things like momentum. You can see lots of other patterns like that Steve showed you guys earlier this morning. You can still see that through the colors. So it's an added piece of information. Now, how does MTP2 work? Well, it's full of Basecamp trading technology. That is, it brings together several of our best, both our proprietary indicators, but also quite a few non-proprietary indicators into consideration when it determines trend and colors the bar. It uses different technologies in different situations. So for example, it might pull from momentum or price action in one market condition, or it might be linear regression lines and adaptive moving averages in another chart condition, or comparing bar extremes and candlestick opens and closes, or any of all of these things depending on what's going on in the market. In fact, there's 49 different states that the indicator calculations can result in, which drive our accurate results. Now, as I said, multiple algorithms are being checked all the time to read the charts and then read them correctly for you. It's like you have a team of advisors working together behind your charts to provide guidance. It's like you're the CEO and you've built a team with the best advisors around you to keep you on course. And by looking at all these different factors, we can accommodate accurate trend identification across just about every type of chart situation. We use adaptive filters, so we measure the stock market's current movement in all these different ways and score them. So for example, if we have 10 of 12 filters active, we're strongly bullish. If it's only 7 of 12, we're neutral to bullish. If it's just 4, then we're neutral. It's a little more complicated than that, but that's the idea of how it works. Now, all of this complexity is going on in the background, but what it represents is easy to learn and understand. You don't have to worry about how the thing works. You just need to know how to look at the chart and act on it, because it all boils down to the simple color codings you've seen, and it's really easy to use and you'll know what to do. Let me just check questions here. Does a bar stay non-color or change only on close repaint? The bar will update intra-bar. Is that the question? It's an intra-bar update. So I prefer to take action when the bar closes myself, so you know what color it is when it's completed. Okay, so I'd like to share a little bit more about how we use a Trender Pro and how it will transform your trading. Now, many traders struggle with staying in a trade that's been running for a while. And I heard our previous speaker talking about that, is that you'll let your losers run all the way to the stop, but you'll cut off your winners. And it helps to have a tool that's reminding you and saying, it's knocking on your shoulder and said, hey, you don't want to get out of this yet because this thing's still running. Right? So there's two ways to analyze this, because you don't want to let your losers run all the way to the stop. You want to let your winners run all the way to their target and beyond if it's going to keep running. Because that practice of cutting off winners early or letting your losers run, it makes it so much harder to trade, because it messes up with your reward to risk ratio. If you do your reward to risk ratio where your winners win twice as much as your losers lose, you only have to be right just over 1 out of 3 trades to start watching your equity curve rise. Right? You can be wrong more than you're right if you've got proper reward to risk management. Okay, and it just takes 2 to 1, making twice as much on your winners as you are on your losers. I mean, that way 1 winner wipes out 2 losers. So as long as you are doing at least better than 1 loser out of 3, you're going to make money in the markets. So Trender Pro addresses this problem in 2 ways. First, we can use color alone to help us in our winning trades and stay in them longer. So it can give you the confidence to hold on to bigger gains, just staying in the trade as long as the color is with us. So for example, over here, if we enter long on green, we're blue over here. We went from red to blue to green, and we stay in that trade as long as it stays green. Okay, and you could exit if it reverses on red, or you could exit when it reverses to neutral if you wanted to. Okay, so the idea is you get in on the green and you get out when it's not green. Okay, and you ignore the golden bars. These are still green. They're just showing as yellow because they're pullbacks. Okay, the exit point would have been right here, and you can see we were getting a signal at that point. Okay, but I think it's better to exit on red than on blue. But if you're up this far, maybe it's time to take the profits anyways, but it's telling us there might be a little bit more there. But I want to show you how I use the golden bars, and this is really cool because we can use the golden bars that I talked about, these yellow bars, to do it a different way. And this is one of my favorite parts of how this works, because this really helps us stay in trades and there's no guesswork in it. Okay, so what we do is we use the trailed stop bars. Remember, we call them golden bars. First, we trail the golden bars, which means that when we get a trade, let me get a pen here, as we move up, we want to make sure we lock in our gains at these. Okay, and so we move our stop up just below where that pivot is each time. So each time we get a golden bar, we lock in more and more gains. And we trail the stop higher at each time, locking in as we go. Most importantly, we're staying in the trade here for as long as we can. And we can hold on to our winners for much longer this way. And forgetting and this blows away many losers, by the way, when you can get a long run like this. So it can really be a good confidence builder. Now, once you get a golden bar, we wait until the next bar appears. That would be this bar right here, for example. And I want you to do is, if you're in a long trade, if we're in a rising trade, I want you to look at where it closes relative to where the open is. If the bar closes up after a golden bar, we stay in. That's it. If the bar closes down after a golden bar, we get out. Okay, so here, let's look at this one here. We opened here, closed here. This is the bar after the golden bar. We wait for it to close, and we say, all right, we're staying in. And we ride this out. So we stay in here. We get another golden bar. We closed higher. We stay in. Get another golden bar. What happened right here? We closed lower. We would take our profits. Okay. You might have moved your stop up here even before, because if you were trailing the golden bars, you might even get out up here. But you were able to get profits not just for a $100 target or maybe a $500 target, but all the way up through this run, at least up to here anyways, because you were able to have the confidence to stay in this trade. Okay, so exit if the bar after a golden bar closes against the trade direction. If it closes up, we trail the stop and stay in for the ride. Now, you might notice there's some signals in here. These are expert advisor signals, which is one of the best features of MetaStock, because it can automatically identify the key points to get in and out of trades, where we trail our stops and everything else. You can make your own decisions based on the colors alone, or you can use the tuned guidance that's offered through our alerts. And thanks to MetaStock's trading signal capabilities, MTP just loves this stuff. Okay, so you can see clear entries where it's time to get in, and here's short exit getting out if you were short at that point. Now, speaking of additional features included in this add-on, you probably also noticed that there's a trend ribbon at the bottom of the display. The trend ribbon is using another Basecamp trading technology. It's called MQ Trend, which calculates trend a bit differently than the way that Trender Pro does. MQ Trend is popular at Basecamp, and we sell it on its own. And in MetaStock, that technology is built into the ribbon. Okay, you got that wisdom of longer-term market trend. That's the view that MQ Trend provides. And we've got that built into the ribbon, and you can confirm direction with it or have you stay in trades longer. Now, personally, I find MTP2's colors, along with MQ Momentum, we're going to show you that in a moment here, to be sufficient in my trading. But what I like is when I'm doing a longer term trade, I appreciate having the longer term information down here that we're in a bullish or a bearish mode at that point. So it's just an extra piece of information that we can add to have an even better chance that our trade is going to work out for us. Okay, here's another example of using MTP2 guidance and staying in with the golden bars. You can see the MTP2 expert advisor right here giving us a signal for a long entry. Okay, and you can see we changed to green. Look at the golden bars that follow here. Okay, this golden bar closed higher. Oh, let me go back here. This golden bar closed higher. This golden bar took a little more heat here, but look, it closed higher. I hope everybody can see that. Hope you can see it clearly. It's a little small, but you can see that it closed higher, so we stay in, and we were able to take advantage of this. Look at this one. It pulled back, but it closed higher. We'd still be in this trade had we taken this. And we don't know if this could just keep continuing going higher. Okay. Now, if you notice too, you might think I'd include the ribbon because we'd be able to see the ribbon in this picture, but we can see the transition points where we went from bullish here, and we see the red line from the ribbon that's showing up in the chart anyways. And we can see it was bearish through here. We changed to green right here. So the long-term trend adjusted and it was aligned with what's going on. You can see we got even stronger as we moved higher. Now, let me show you a comparison of a chart without MTP2 and then with MTP2. This is Facebook on the daily chart earlier this year, and it's without MTP2 lighting up the chart. Now, it can be difficult to find where the optimum entry point is. Now, even if we're starting to think Facebook is about to turn bullish, where's the entry point? Right, think about where you might put an entry here. I think many of the traditional methods of finding the right entry might say, wait until you're up here to jump into the trade. You're going to break this high, and then you're actually moving higher from a trend perspective. So perhaps we'd be waiting to break above this swing high to take a long in the trade. Now let's turn on MTP2 over here on the right. And what's the difference? Well, we immediately identify the point where we can enter the trade, and we can do so without waiting to break that swing high up here, because we can get into MTP2 at this point. It not only gets us in a week earlier, but we get in $20 earlier per share in this case and take advantage of all of this move. So $20 per share, that's an extra $2,000 in your pocket because you're using MTP2 just on this one trade on 100 shares. And with this extra confidence that MTP2 provides, we also avoid all the stress of getting into the trade at that point because we have the extra insight from MTP2 approving your trade like your board of directors. This is why we say MTP2 will not just help, it'll transform your trading. Now, we can make even better decisions with MTP2 using multi-time frame convergence, and that's a big mouthful, but it sounds like a fancy name, but all we're doing is we're using the power of MTP2 on a higher time frame to verify we have trend and color alignment at the higher level that's going to push us even further on our trading chart, which is perhaps on our daily chart. This works if you're doing the daily as a higher and doing intraday trading like a 5-minute chart on the lower. So this is one of the layouts that's provided with the MTP2 add-on. This is the weekly daily layout where we have the weekly view of Netflix on the left and the daily view of the same symbol on the right. By viewing MTP2 status on both of these at the same time, we can figure out where we have confluence, alignment between the two time frames, which makes an even stronger case for taking a trade. Now, in this case, Netflix here that we're looking at was having a hard time earlier this year, but it's been holding its own lately. In August, we saw mostly sideways movement. And near the last week of August, the weekly chart was signaling a strong bullish move right here. Now, on the daily chart of Netflix, right at the point at B, right, we can see we're breaking out of a sideways pattern on the daily. And we have the bullishness appearing on the weekly chart at point A. At the same time, we're getting the bullishness showing up on the daily chart. You can see the results. And we even got notified on the daily chart that we got extended at point C. See how up here, how it turned gray? I know Mary knows this. Maybe some of you others noticed this. This was the point to lock in your gains, trail your stop. Maybe you trail your stop to the previous low at the point, and you'd get out right here of that trade if it pulled back. If you wanted to wait for a golden bar, you could wait here. Okay? In this case, it did close lower. We would be out using that measure. Okay, so we can see how the tool alignment from the weekly chart in the daily chart gave us an excellent entry and it gave us an excellent exit. Let me check what time frames. It works across almost every time frame that we use them on. We use them equally across time frames. We use them on tick charts, time charts. We even use them on Renko charts when we're using Renko charts. I see a bunch of questions coming in here. Does it work for crypto? Yes. Is there an optimal time frame? I know you guys only have a handful of cryptos, but there's going to be more. So, you know, when you find a new market, try it in paper, make sure it works, give it some time, prove that it's working in that market, and then let it run. Is there an optimal time frame? No, it's not optimal, but I like the idea of mixing both a higher time frame and a lower time frame for added confluence confirmation. What do the dark green bars designate? That's very astute to pick that up. There's actually two types of green bars. One is neutral to bullish, and then we have strongly bullish. And then there's two types of red bars too. We have strongly bearish, which is the bright red, and then the darker red is neutral to bearish. So it's giving you a little extra information that here we turned a corner and got even more bullish, and it went up even harder at that point. Does this work intraday with shorter time frames? Absolutely. What are the books you can recommend to learn more about? Oh, hold on here. Learn more about trading. There's not just one good book. The best way to learn more about trading is learning what's called price action mastery. And we have a course that's built into our membership at Basecamp Trading that's given us free. And that gives you what I think is the best approach to learning how to read the markets. And a lot of that is built into this indicator. But that would be what I'd recommend that you consider doing. So it's actually very inexpensive to take a membership, to start a trial membership and give that a try. And you have full access to that course, which we used to sell for $897. And now it's just built into the membership. I'm new at trading. Do you have a list of good online resources and links for practice sessions? We're not, I just finished creating an introductory class, and we're going to have more information on that coming soon, but we haven't really announced anything about that, but that is coming. Can you show some more examples? Yes, I'll have you guys, if we have time, I'll have you look at it, but let's keep moving forward here. I wanted to mention also, you got the trend ribbon. We also include MQ momentum. This indicator is on every single one of our charts at Basecamp Trading. It's in our stock trading, our option trading, our futures trading. We use it everywhere on all chart types. It's critical to our trading, and we use it in conjunction with Trender Pro. So you've got the ability to combine all three of these fundamental technologies that will, and this complex technology of Trender Pro to help you with your trading. And then you can get confluence across all three of these for the best trade. So if you're a person who only wants to take the best of the best, you can use these in combination. Here we're changing from red to green on Trender Pro. At the same time, we're getting a pullback on MQ momentum with a momentum reset at this point. So we're ready to go a full run. And at the same time, we're getting a long entry signal as we switch to green. Look at that run. That's what happens when all three of them are in alignment. You're going to get all of this as part of the add-on. And we also use momentum for divergence. So here we have another alignment right here where we change from green to blue to red. At the same time, we get our short entry signal, and momentum was dropping through the midpoint and heading lower, both in the fast and slow line. And we dropped here, we had a really nice move. We trailed our stop and down we went. But look what happened here. Momentum was giving us a warning that it was starting to rise as we were having lower prices. Momentum was rising. That's what's called a bullish divergence. So we can look at MQ momentum having a disagreement with what price action is. And so when we change to yellow here, we're ready. We're ready to go green. So we can be jumping in this trade, maybe even before we get the long entry signal over here on the green change, because we saw the bullish divergence thanks to MQ momentum. We use this all the time in our trading. You'll see it almost every day, this being discussed in our live trading rooms. And again, this all provides the clarity in anticipating market movement. So you can hear and see what the market is screaming at you if you know how to see it. But you have to be able to see it to be able to act on it. And that's what Trender Pro is going to give you. Let me just put a couple more. I'm trying to move a little faster here. So, and just like in the commercials, remember the old Ginsu knife commercials? But wait, there's more. Well, thanks to MetaStock, Trender Pro has taken advantage of all the extra technology that's available in MetaStock. You get the expert advisor, which will give you plenty of detail about how to interpret the chart and give you some guidance of what do you do when you have a golden bar. Here's that discussion right here about using the bar that follows it to decide if you stay in or not. Okay, there's talk about any signals that you get and what MQ trend is telling us for the longer perspective. Here is the explorations, where we can scan across 8 different scanning tools to find the stocks that are meeting certain criteria at the current time. One of them is a bullish surge breakout, which is looking for a great point where the market is changing, plus it's breaking out of the previous week's worth of data, or maybe 2 weeks using the breakout 10 if you're looking on daily charts. So some real powerful searching tools. We also give you a guide that's got written descriptions, how to use it, how to define layouts, what the alerts are, what the trade signals are. There's information about the explorations and a frequently asked questions section that's over a dozen pages. There's a whole bunch of stuff in here, including how to use that divergence and how to trade with MQ momentum. So it's really, I hope if you take the time to do this, you will let me know that that was a value for reading this, because I put some of the best ideas of how to trade into this guide that you get. Now, Gary's one of our best traders at Basecamp. He runs the futures trading room from 9 to 12 or 8 to 12 every day, every weekday. Gary's had some really good months, regularly generating impressive monthly gains, as much as 150 when he was tracking this. I think at times he might have made more than that, but he was growing his account when he was just starting, and this is how his path went. He doesn't like it when I show this, because he says that's an anomaly because the market's lined up. Well, guess what? He was ready. He had a system. He was following it, and the market gave him that because he was following his rules. Okay, and I asked Gary. I said, "What is?" And you can ask him this yourself. You ask him, "What's the one indicator? If you only had one indicator to choose, which one would it be?" And he will tell you absolutely that for him, it's MQ Trender Pro 2.0, MTP2, because it gives him the insight to stay in trades longer to get those really big gains. He credits the confidence that he got with Trender Pro as the reason he was able to get these huge winning months and turn his whole trading around. And with Trender Pro, when you're riding the wave, and you can let the trade continue and keep yourself from jumping out early. So he feels that Trender Pro is what he uses to stay in those trades, and he knows how to get every little penny out of those long runs now. Now, this might sound like a bold claim, might sound like marketing to you, and I will say that when I find somebody who can regularly make consistent money in trading like he does, I want to know what he's doing, and I want to use the tools that he's using. And I can't guarantee that you're going to make the kind of money that Gary made here or continues to do today, but nobody guaranteed him that either. And look what he did with it. So now you can get this yourself. You know more about Trender Pro's abilities now that I've explained it. You can see how it has the potential to give you that clarity that's so important, that's going to lead to greater confidence to trade and the increased likelihood of consistently bigger gains. When you have that clarity and confidence, that's when you get your transformational changes in your ability to get where you want to go and hit your dreams. Now, I wish I could have shared this indicator with my dad. He would have loved it. I told you earlier I would show you how to unlock a stock market GPS for better trades. And I showed you that we can use our deep and easy to use technology to trade like a hedge fund, exposing hidden information that's behind the charts to get those massive profits. Now you have the opportunity to completely transform your trading now, today, right now. You can take advantage of gains like this in GSAT, or these two beautiful gains in the same week in Sphere 3D earlier this year. Now, I know, and you know, the hedge funds have all the trading figured out, right? They got much better than the average retail as far as how they figured it out. They have all the resources to create the cool tools, and they're able to see things going on behind the charts that help them make quick and correct decisions and get those big gains. Now, why should only hedge fund traders have access to cool tools? Why shouldn't you have that? And now that you've seen what the hedge funds have access to, can you see that you're at a disadvantage if you don't have these tools? Well, you don't have to worry about that anymore, because now you can get this right here, so you can get the same signals you've seen here today. So you can stop falling prey to the bad entries and start making great trades that are going to grow your account so you can have those dream goals hit. And like I said before, get ready to rekindle those dreams and find a way to make trading fun again. Now, remember this 76% gain in Amazon using that MTP2 signal? That was a gain of $1,535 per share. That's just one share. Right? Imagine what you make even trading more shares, or even better. But imagine doing this again and again. That's transformative. Now, with Trender Pro and MTP2 MetaStock add-on, you're going to get MTP2, plus you get MQ Momentum, and you get MQ Trend via the Trend Ribbon. And that's a value of $14.95. And if you act today, you're going to get all of that, not for $14.95, but at the Traders Conference special of $9.95, which is a $500 savings. That one trade in Amazon we saw, when just one share in Amazon, would more than pay for MTP2. And once you have it, you're going to have the ability to find your own trades for your own massive gains again and again and again. Who knows? With the right added confidence and predictability that you get from MTP2, like I said, you might even start to have fun trading again. All right. Any other questions? Let me go back and look through some questions. Jeff, if you want to come in at any point, you're welcome to. I know my time is running out here.
Yeah, and that's always the case. That's just how it works today, right?
Oh,
so,
yeah.
we do have a question from YouTube, though, that I promised I'd ask. Shams wants to know what advice do you have to possibly ignoring signals in ranging zones? So in other words, if it's just kind of knocking between a high and a low and it's like not trending in specific directions, how do you avoid stocks that are moving sideways?
Well, you wait for signals and you look for a breakout. So like right here, let's see, this was Iron Mountain. I brought it up because our previous speaker was mentioning that. So when you're moving sideways in a pattern and you're getting choppiness. So when you start to see signal after signal after signal like this, just ignore them when they're in that state, because they could be valuable, but you're stuck in a sideways move right here. So you just want to sit back and just wait until you break out of this channel. Here is the point right here. We got the long entry. I wouldn't have taken this one because we had to break out of this first. I would have taken it right here with confirmation there. And look at momentum rising. We have, this is called the momentum inflection right here, all happening as the breakout was here. So I would just sit back and just ignore it. You know, as hard as it is, you got to find a way to get your hands, put them under your legs if you need to. Don't trade when stocks are doing that. If you're going to trade a time decay trade, that's what you'd stay in here for. But if you're trying to do directional trading, wait till you break out of that. And then you can see the nice move, because you have compression. You want to be getting in right at the beginning of an expansion. And yeah, your tools will signal it, but you know, don't throw common sense out the window. Take the entry here. And then you'll notice that you'll get signals. I know we can go back and look and see if we had a signal at the same time. Well, we got a signal a few days ago here as a long entry that breaking out here. So, but that was what I would suggest is when you're seeing chop, just don't trade. You know, it's so hard to filter chop in an indicator without taking out good signals. You know, if we filtered all these signals based on a high to low range, you wouldn't see these signals. So we need to have these signals, but we also want to have the breakout.
I have a follow-up question on that, because I'm a big fan of this, John. I actually I bought Target today because it broke a high on a signal from last week. Would you recommend that to wait till the end of the bar, or would you recommend a certain percentage above the high? Are there any specific recommendations about how you would trade a breakout like that?
Well, I mean, right here, you'd want to be in it. But once you get up to here, what I'd be looking is I'd look left. I'd look left and see, is there a lot of consolidation in the past, like we see right here? And, you know, we're starting to see some golden bars. Notice we didn't get a golden bar to here. That you can only get a golden bar when you start to see a pullback. So at that point, we're going to start saying, all right, maybe it's time to start locking in some gains. Remember, when we got the gray, we might want to start locking in gains right here. So once you see this gray right here, you might have...
I think we lost your screen.
Oh.
I just sent it back to you, but we don't see it anymore.
Okay, let me see. You see it now? Am I back?
Yeah, you're back. Sorry about that.
Okay. So this gray right here, remember when you get the gray, you can show your stop right there. Keep it real simple. Take your profits right here because we broke the previous bar's low.
Okay. Muhammad wanted to look at, go ahead. Sorry.
No, go ahead. No, that's good.
I was just going to let you know if we didn't, just because we're running just to the end of time here. If you want to look at any specific chart, Mohammed, send us an email. We'd be happy to pull chart examples, anything that you want. You can get in touch with us at metastock.com/saleschat. All right, looks like that's about the time that we've got, though. So, John, any final thoughts?
Well, look at Netflix breaking out right here. So we got a signal right here with the long entry. These lines are from the thing I just drew here. Let me get rid of those. But here was a sideways pattern right here. We just broke out of a sideways channel on the weekly. We're getting signals all the way up in the daily. I think Netflix might have some more room to go here. We are a little extended on momentum, but Trender Pro hasn't done that yet. So there's some good choices in here. Best Buy, and just to show a couple of examples, Best Buy was looking pretty good. Same way. Look at the breakout here, the signal there. We even got extended already. So there's some good markets out there still.
Great job, John. Appreciate it. Thanks for coming. Great job with programming this stuff as well. I want to say thanks for coming in. Thanks for your time today. And always a pleasure having you.
All right. Well, thanks, everybody. And happy trading.
All right, let's go ahead and do this. Okay, and let's do this. And actually, I need somebody to turn on the lights. Here, I got it. All right, cool. So in the MQ Trender Pro actual add-on, it's been a very, very popular add-on for MetaStock. You can see what's included here. We are doing a huge discount on it. It's normally a $1,500 product. Here at the show, it's a $9.95 show special. We do offer that with a 30-day money-back guarantee. If you need a copy of MetaStock to use it, we'll give you a free subscription to MetaStock to evaluate this for 30 days. If you have charts or questions, or you want to kind of get some more information, get in touch with us at either 800-882-3040. You can also reach out to us at metastock.com/saleschat. And you can also order online right now at metastock.com/conference promo or conf promo. We are going to do a giveaway. I'm going to do it super quick. I've already decided on who the winners are, and I already decided on what the prizes are. So I'm going to give away these 2 copies of Around the Horn, these exact copies. The people that I randomly selected from the list of registrations are going to be Ramon N. and Alvin L. You two, I'm going to reach out to you by email. Both of you guys are located here in the United States. I'm going to ask you to send me your address. And if you will do that, I will send you your own copy of Around the Horn, which is a book that was put together by Adrian Manz, who spoke just a few minutes ago. And it's a book that's retailed at $95, but you can't get it anymore because right now it's out of print. So I've got 2 brand new copies right here for you guys. Let me go ahead and do this real quick. Hold on just a second. Okay. All right. I do want to say thank you to Stocks and Commodities real quick for being the sponsor of our event. Stocks and Commodities has been a magazine that I've got since for the last 25 years. It's a great magazine. They've just been such a good supporter. As you see kind of the stats here on the screen, they've had 17,000 different articles, 1.3 million subscribers, all that kind of stuff. I also want to say a real quick thank you to CMT Association for sponsoring the event today, cmtassociation.org. Martha Stokes, our next presenter, is a member of the CMT. Or she's a CMT charter holder. I'm not sure exactly the terminology of that, but she does have a CMT designation. So, Lee L. Ann, the sign-up info is metastock.com/confpromo. All right. How you doing today, Martha?
I'm doing good. I need you to change the screen over so that...
I think you just did. I can see your screen already. Yeah. Okay. I do. Awesome. I do have a little bit. I'm ready to kind of introduce you. Are you ready for your introduction?
Yes, I am. This is our new website. So go ahead.
All right. Cool. It is my great pleasure today to announce that Martha Stokes is our next speaker. Martha Stokes is the CEO of TechnoTrader. She's been doing it for 40 years. She's been a frequent speaker at our events, but not recently. And I was noticing that we haven't done anything with her lately, and I was wondering what my problem was. So I invited her in today. There's a couple of things I really like about Martha. She is a very, very analytical person. She's really good at looking at markets. And she's also very, very well organized, which is something that I admire about her, because you know how I'm not. So we'd love having Martha on. It's been overdue. I'm glad to have you at our event today, Martha.
Thank you. Can you see me on the camera?
I can't.
Okay.
I can send a request though.
Oh, there we go. Okay. Share my webcam. Okay. Can you see me now?
Yes, I can see you.
That's very good. Okay. So I'm
going to get out of your way though.
I'm sorry?
I'm going to get out of your way.
All right. Hi, everyone. It's good to have you here. We're going to be talking about MetaStock and important information that you do not get from anybody else. I'm a retired professional buy side, and I will explain what that is in a minute. I'm a chartered market technician. I wrote a thesis for that CMT designate, and I'm a member of the Chartered Market Technician Association. This is something that the SEC credentials, and as an educator, everyone should be credentialed by the SEC. So you should be looking for CFAs, CMTs, some designate after a person's name to know that they have been approved by SEC to educate. I want to talk today about relational technical analysis. This is something that I introduced to the Chartered Market Association back in 2015, and they were blown away by it because it advances technical analysis into a whole new form of analysis and understanding and interpreting what's going on. The market has changed dramatically in the last 5 to 8 years, and it continues to evolve and change. I'm sure you've heard about artificial intelligence and machine learning, and I'm sure you're thinking, like a lot of people, that the institutions are using that to find stocks to trade, but they're not. And I'm going to explain that in a little bit later. There are many market participant groups. What I often hear is, oh, Main Street versus Wall Street. Throw that idea out. It isn't there at all. There are many market participant groups, and new ones are emerging every day. And I want to go through those because what you need to do when you look at price is you need to say who is controlling price. Because if you know who controls price, you know what price is going to do in the near term. I don't know who's in the audience. I don't know if you're brand new, just beginning, a novice. If you are, you're going to be blown away like it's a fire hose of information. Try to take notes and then review it later on because they will have a recording, I'm sure of it, right, Jeff? So you will be able to watch it again.
Unmuted.
You have an enormous amount to learn about the inner workings of the market because the professional side, from which I'm at, controls 80% of all the transactions in the market today, and only 20% or less is the retail side, which is you. If you're experienced, advanced, or a professional, I have a lot of professionals who take my courses, you will be blown away by the information that you didn't know that you should know and you need to know because things are changing very, very rapidly. We have the sell-side institutions. They are the banks, the 6 money central banks, the biggest banks, not the regional banks, and the largest financial companies like Goldman Sachs. They control a vast amount of money and they move it around the market in a very specific way. We have had a massive amount of buybacks from 2017 to 2020, and then they're resuming again. Corporate buybacks means that the corporation is buying back their own shares of stock. And that's an important factor that is going on in some charts today. We have the buy-side institutions, of which I'm a member. And the buy-side institutions are the mutual funds, your pension fund managers, your derivatives developers for ETFs like BlackRock and State Street. And they're on the buy side. They dominate over the sell side now. It used to be that the banks and financial institutions dominated. No more. That went away in 2010 as the buy-side institutions were so upset with the banks that they started doing their own research. They started doing their own instrument development, and that evolved the ETF market much faster than it would have happened with just the banks doing the ETFs. So you have a huge shift of power. There's a war going on between the sell side institutions and the buy side institutions. And they have completely different roles than they did even a decade ago. And the buy side is dominant. There are 63 million American families with 401k or IRAs or some sort of retirement in the stock market. That means that there's probably twice as many because most families have two wage earners and they have a 401k or an IRA or whatever. How much money do you think transfers between hands, between buyers and sellers every day on the stock market? Any idea at all? Any idea at all? Think about it. How much money is transacted back and forth every day on the U.S. stock market? $225 billion. This is not a small market. This is not a mom and pop. This is not me against the Wall Street guys. This is a very complex market that we need to streamline and simplify using stock charts. It's extremely important that you learn to recognize which footprints are there for which of the different market participant groups so that you can identify what is most likely to occur next. You can learn every strategy. You can understand supply and demand. Let's talk about supply and demand right now. Supply and demand is not a factor in your trading. There's tons of supply. Every mutual fund that has a trust, every ETF that has a trust, you can borrow those shares and trade short term if you're a professional. So professionals are trading all the time on the long-term investments that you hold. They just trade short term back and forth. They may sell short, they may buy long. So it's very important that you understand what's going on because GameStop, which is what I have up on this chart, is a prime example of the retail side being totally misled into what actually happened. So let's go through what actually happened. We have a situation where if we go back in time, we can see that there were institutions quietly accumulating this stock long before the MEMS groups and the Reddits started trading it speculatively. There's quiet accumulation going on in here. The buy-side institutions are buying right here, then the pro traders take over. Let's talk about professional traders for a minute. There are professional trading firms that are independent of both the buy side and the sell side. There are independent professional traders who are extremely good at what they do. There are floor traders, the professional floor traders, the proprietary desk floor traders. There's all kinds of professional traders, and they're a huge group. Huge. They always look for quiet accumulation or rapid accumulation. Quiet accumulation is when a very large buy-side institution has decided to acquire a very large sum of shares of stock, maybe 10 million shares or 20 million shares or whatever. They can't just go out and buy a huge amount unless they go directly to the company, and they may not wish to do that. Sometimes they do. What they do is they set up a time-weighted at average price order. The orders that you have are very limited. You have at market, you have limit orders, and so on and so forth. But you do not have any of the professional order types. The professional order types control price, manipulate price, and so on. So you have the sell-side institutions, the buy-side institutions, your professional traders who are trading. They all have different footprints on the chart. You have corporations doing buybacks. But do corporations actually buy back their own shares of stock? No. The bank of record buys those shares of stock for the company. So the banks are being hired to buy back millions of shares of stock. Apple had the largest of all of the buybacks over 2018 to 2020. They stopped during the collapse of the economy, but they have resumed again. When a buyback is going on, price moves up. They are removing shares from the outstanding shares, and the banks of record are trying to influence and manipulate the price to make it move up. So it moves in a certain manner that is entirely different than when the buy-side institutions or the derivatives developers are quietly accumulating the stock. When the buy-side institutions and derivative developers are acquiring a stock, they do not want to pay more than a set, very narrow price range. They're able to set the price and have it ping on that price and set that order because they're in dark pools. The dark pools are alternative trading venues. All of you should know about this now, but you probably don't. There are the stock exchanges. There's about a dozen of them. And those are all public, and all of the information is pertinent and relevant at that moment. Everybody can see that, of people coming up and orders flowing through and so on and so forth. The dark pools are hidden. It's called a dark pool because it's a dark pool of liquidity. And this is hidden liquidity that is available to short-term trade or long-term invest. And they do their transactions off of the exchanges. They very rarely surface onto the exchange when they used to 20 years ago. You would see these huge lot orders coming through, but then the day traders, the professional day traders, would trade against the institutions. So then we had the change from fractions to decimals in 2002, and that crushed the professional traders who were trying to trade against the institutions. They couldn't make any money at it. So what evolved out of that situation were high-frequency trading companies. They emerged and evolved from day trading professionals to high-frequency trading companies. High-frequency trading companies cause these huge, gigantic spikes of volume on the chart. They also have a tendency to gap the stock up or down before the market opens. Most of the HFT activity is just before the market opens. They fill all the queues with these small orders, and the computers that open the market are adjusting based on all this order flow that they see before the market opens. Most of the time, retail traders with gurus telling them what to do try to chase these runs, but you can't. You have to get in before, knowing that pro traders have set up triggers to trigger the HFTs. The HFTs are an algorithm. They're not a person at the desk. They're an algorithm. They either go after retail side indicators, or they go after retail side social media chatter, or retail side guru recommendations. The reason that we have so much AI and machine learning capability right now in the sell side and the buy side institutions is not because they're going to eliminate their floor traders as the retail assumes. They're going after you. They want to know where your social media is and what you're saying. They're looking at you on any area where you have chat rooms or open community conversations with each other. They're listening, they're watching, and then they're able to plot and get in ahead and also have the HFTs trigger and you chase, and they make a lot of money. So this GameStop came up on my quiet accumulation scans. I have scans just for my students that are quiet accumulation scans that show that there was quiet accumulation and some pro traders going on way before the mems and Reddits decided they were going to kill the hedge fund. They totally don't. You don't. Hedge fund selling short is a very short-term situation, especially for the sell-side institutions, the hedge funds, any HFTs. Anybody selling short on the professional side is not going to hold that sell short for very long. Those lists of sell shorts are a month old by the time they're presented to the retail side. So those orders are already done. Now you look at this chart. We have quiet accumulation going on. Then all of a sudden the MEMS groups think that there are sell shorters going to sell short and push the price down on GME. Well, first of all, that's illegal. Sell shorters are not allowed to drive price down deliberately. That's movie stuff. That's TV fantasy. There are regulations against that. There's no regulations against driving or manipulating price up. buybacks do. But there is one going down. Why is that? Why is that? Why is the SEC only concerned with not letting price fall or being pushed down artificially or being having lies spread about the company, rumors spread about the company? The Reddit groups actually spread lies about GME. It was not under any kind of attack that would have caused it to sell short. And Citadel was only angry because Robinhood shut off everything and they were making a ton of money. So why would this accumulation happen ahead of this Reddit information that they got from the social media that this was going to happen? And then the Reddit groups came in midday. Reddit groups and MEMS, if you want to keep an eye on them, they come in midday. So look at your intraday charts and look and see what's going on midday, because they always come in midday. That gives the professional traders tons of time in the morning to set up things to trigger them, to get them inspired to start buying. So who's manipulating who? The MEMS and the Reddit groups that tried to kill the hedge fund didn't kill anybody. And they almost destroyed Robinhood. So you have to wonder, was any of this to harm Robinhood? Because all of the information you have on this is not accurate. The most damage was done to Robinhood and to those investors who got in late, and then it started to crash and come down, and so they lost quite a bit of money. Anybody who bought in this area that was a retail investor or retail trader lost if they couldn't get out until here, and this is about where they got out. And if you go forward on this chart over time, you'll see that it's going nowhere. Buy-side institutions made a lot of money. Pro traders made a lot of money. You have to be aware of what's going on the professional side, or you're going to get whacked, because they're paying attention to every single social media little thing, every tweet, every Twitter, every little tiny thing that you're doing, because they can see the groups. And when they see 1 million retail traders all trading the same thing, they get in ahead and they make money. So you have predators who are stalking. You have manipulators who are driving price upward usually, but sometimes down. You have influencers that are telling you what to buy, recommending stocks, giving you information, influencers who are making a killing off of you. Brokers made a fortune last year. And yet you are trading for free. So how is that? Why are you trading for free? And they're making a lot of money. How does that work? How does that work? Well, you're actually paying a lot more for your trading than you did when they were charging fees and services. So that's what's very important and very, very critical to keeping track of. So GameStop is a very good example of, my students knew ahead of time that we had quite accumulation here. They could have chosen to trade that or not trade that and then get out. But there was no particular sell short opportunity present at that time when GameStop was being speculated by Reddit. There wasn't a lot of sell short going on because that had happened earlier. Your sell short lists that you can get on the internet anywhere are usually a month old because they only have to report their sell shorts, what they sell short, once a month. So be very careful what you do, because you may often find that you are in a stock that is not what you want to be in. And I have some stocks that we're going to talk about and go over a little bit to look at that. We also have small funds managers who use VWAP orders, and VWAP orders only trigger when there's very high volume. And the extremely high volume that occurs at the first of the day or slightly into the first few minutes of the day is HFTs. So smaller funds and retail traders who think they're buying into dark pools or buy-side institution quiet accumulation are actually chasing HFTs. And there's a lot of money that's lost there. So you have to understand. So let's review a little bit at this point. We have sell-side institutions, buy-side institutions. We have a whole plethora of professional traders making millions. They work for sell-side, buy-side, and independent. We have HFTs, which are an algorithm. It's a computer running on by itself. And we have smaller funds managers that are very small, under 3 billion assets under management is considered a retail side by the SEC. They no longer require that they submit all of their holdings every 3 months like they do the large institutions. And then we have the retail traders, we have retail investors, we have odd lot investors, we have fractional lot investors, and we have the Reddit groups. And the Reddits do, with the millions of people that participate, they can move price. So let's look at a couple of charts that I picked up. Now, unfortunately, I selected these stocks last week because I wanted to be ahead of the time and be prepared. So what we had here is we had some quiet accumulation that is in the center of this area. They hide their accumulation, and my large lot versus small lot indicators that I have for my students reveal where they're buying and what price range they're buying. Always afterward, there's little runs that move up. And this is a pro trader run. It's very controlled. It also overlaps a little. You see how it starts the day down and runs up. Sometimes pro traders will do first of day, end of day, if they want to entice retail traders to trade. And so that little gap down is the buy on the dip or a limit order, and then it moves up. Meanwhile, they're holding for the whole run. And this is a breakout pattern. Again, there's some quiet accumulation going on here. And then a pro trader engulfing white to trigger HFTs or retail traders, and then moving up. And it will continue to move up sometimes. The thing with professional traders is once you learn how to see their footprint and where they are on the chart, and that they always follow quiet accumulation or rapid accumulation by derivatives developers, you can get in with their transaction pretty confidently because they continue to hold. Most retail traders are playing with scared money. So they get in and they get out, and they get in and they get out. Oh, I'm going to take 20 cents off the table, and then I'll move on. Oh, I'll get 20 cents off the table. Well, frankly, your trading is costing you more than you're making. You just don't know it. And you're not paying yourself per hour. How much per hour are you worth? How much hour are you worth per hour? Because that's critically important, because you need to be paying yourself for trading, because trading should be a business. The IRS has a trading as a business status. Otherwise, you're a hobby trader and you can't take off all your deductions or your losses, and you shouldn't have any losses. You should be making money. You should be making money after your trading. There's no reason not to. So by understanding the relationship between volume, large lots on one side, smaller lots on the other side, or large lot versus large lot, who is in control of price? If we have banks of record buying buybacks, they're going to drive that price up, and it's going to go up and up. You'll see that in Apple, you'll see that in Amazon. Those were buybacks for the past several years, and they caused the stock to move speculatively. Even Tesla was huge in buybacks for a period of time, and then they split their stock. So if you understand that, oh, that's a buyback, you know with great confidence that that's going to continue for several days, because the banks traders set the TWAP orders to trigger and move up and trigger and move up and trigger and move up over time. Very important thing to know. You know who's in control of price. You don't want to be in a stock that is being controlled by retail traders, because they have this impulsive, non-technical reaction to everything, and they sell too soon and they lose out on the big gains. How many of you have gotten into a stock, got scared, sold it, and then watched the thing go up? How many of you are options traders? I want to tell you a little story about options. So this stock moved up to a certain point, profit taking. The pros are out. Now this is a quite a selling mode, and it starts to go down and more selling mode, and then it gaps by HFTs, gap it down, and then it runs down. It's finding support around this area. So this is a mid-trend correction. And mid-trend corrections are something you're going to see because this is a bull market. Our bear market started in 2017, end of 2017, and it ended in 2020. It was an industry bear market, and it was well hidden. Why? Because Apple and Amazon and all the big guys were buying back all their shares of stock and driving their prices up. And that drove the Dow up, and that drove the S&P 500 up, and that drove the NASDAQ up. Why? Because most of those indexes carry the same components or very similar components. So that's why the 2018 didn't show a bear cycle, but in the industries, all the stocks are moving down. Just a handful of stocks moved up. So it was well hidden, protected a lot of 401ks and so on. So did the buybacks in 2020 to drive the market makers, the big banks, to drive the QE money back and get the stock market stabilized. So it didn't defuse on us and make it so we couldn't get in. Now, what's wrong with this chart? It did move up finally after this, but this stock is not held by a lot of institutions. It's held by a few. However, it was being chattered about somewhere on some social media site by a guru. And so we have some resting day patterns and some pro traders. They set it up, and because of their activity, it has a volume spike that runs up that's HFT driven, and HFT driven, again, a resting day here. So we might have some more moves up. You have retail traders involved in here, some pros, but mostly the pros start in right here, and then they start moving up. By understanding who is in control of price, you will have a better idea. You never want to trade with the diciness of a retail trading group dominating the price, because they create the volatility. They don't hold the stock. They're not confident in what they're doing. The slightest little thing scares them. They can't see the footprints of the large lot professional traders getting in. They don't know how to react to that. They don't know when to get out. They don't really understand technical and relational analysis, because the relational analysis will help guide you as to what's going to happen. Now, this is a very steady sideways pattern. You notice how many times it's very close to that support level. This is a technical support area. This is a very dicey area where the retail traders take control, and then they start selling, and others, you have HFTs in here, see the spikes, and then it quiets down. And then you have a little bit of accumulation, a little bit of accumulation, a little bit of accumulation. It's spread out over time. And you have to learn to identify that, because you want to get in with the pros and then ride it all the way up. I want to talk about options a little bit right now, because a lot of you are probably options traders. And a lot of you use the put-call ratio, right? Right? Yeah, if there's a lot of puts, that means the options market knows that the stock market is going to go down. Well, a few years ago, a brilliant former market maker for options, very gifted, contacted me and asked me if she could learn technical and relational analysis from me. And I was a little bit surprised, because she's a market maker. She wanted to learn because they're developing a product that was astonishing for options trading. And it was amazing. And so I picked a few stocks for her, and she came back all excited. And she's like, "Martha, you wouldn't believe these large put on this stock." And I'm going, "Really?" And she says, "Yes. And I bought up every call I could get. They're dumping the calls like crazy, and I'm buying every one of them." I said, "Really? And do you know why she was buying all those calls? Do any of you know why she's buying all those calls? An options market maker, one of the smartest people I've ever met. Why is she buying? If the options market puts tells you that the options market knows that the stock market's going to go down, what is a brilliant woman like that buying calls?" Because she could find the 5 million share lot that a professional trader bought over a period of a few days ago, before I gave her the little signals that pro traders are in this, pro traders are in this stock. I can see the large lots. And she says, "You're right, you're right." And the stock moved up the next day, and it moved up the next day, and it moved up the next day, and it moved up the next day. Now, it was a 26-point gain for that stock. She made a lot of money. She was convinced that relational technical analysis absolutely worked, because she could find those pro traders. I said, "That's a pro trader," and she could locate it. And so she was very convinced, and she incorporated it into it. And that company was Livewall, and they are now part of CBOE. using the strategies I taught her. So puts are used by professional traders. Write this down on your sticky notepads, please. The put-call ratio doesn't necessarily tell you that that stock is going down. The reason that this wonderful, very intelligent person wanted to learn technical analysis from me was because she saw that the buy-side institutions were using puts as an insurance policy against very large, somewhat risky entries. And so they let those puts expire worthless, or they sell them for very little. They're not worried about making a profit on the puts. They're wanting to protect that 5 million share order that made a fortune. So when you see the put call ratio, you need to go to the charts and say, are they on the buy side or are they on the sell side? Now in 2019, February 2019, a professional trader that trains with me said, Martha, they're buying puts, they're buying tons of puts. The market's going to go down. I said, yeah, it is. Look at the charts. Look at the charts. The professionals are all getting ready for a big down. They didn't know that there was going to be a lockdown. They didn't know that there was some sort of crisis. They just saw that the market was ready for its third leg of the bear market. It crashed even deeper. So by understanding which of these patterns are pro trader footprints and which are not is critical. We have a little pro trader footprint right here, and then it moves up, and they're holding because this is quite accumulation that is going on. So they may buy in here at this little push and then get out, or they may hold and then have it move up even further. There's a lot of retail traders. See how dicey this is? Hysteria. These are retail traders. Retail traders' chart patterns are hysterical. They're very nervous. They're very nervous traders because they don't know what's going on. EPIX, I looked at this chart earlier and I said, okay, pro trader footprint right here. And then of course, then it moved up. So I can't show you that because it's already happened. But what we have going on in this market is a lot of things that are causing a lot of confusion for people and a lot of misunderstandings about what is going on in the market. Selling short is a short-term trend action. When you see this long tail, those are buy the covers. It may go down again, but a lot of times you will have your first of day, end of day professional traders. So they'll sell short first of day, and at the end of the day, they'll buy the cover. Now, the professionals also have an end of day auction. This is exclusive for auction for the professional side, for traders. It is not available to the retail traders, but it does happen. And if you look at intraday charts, you can see the direction that they're intending the stock to go the next day. It's very valuable information. So it happens the last 3 to 5 minutes of the trading day. It often reverses, like we had a sell-off one day last week, and then all of a sudden the next day, futures are up. But if you go and check all the charts that the professional traders were in, you can see that they were buying the cover, buying the cover, buying the cover. And so they got out of the stock and got ready to buy the next day for the next trading day as the market moved up. So that's very valuable information for you who day trade. It actually, day trading is holding for an entire day and selling the next day. That's why it's FOD, EOD. If you're buying and selling during the day, it's intraday trading is what it's called. So you need to define that if you're a day trader. If you're a day trader, you need to track the professional traders, because if you don't, you're going to have a very difficult time. Supply and demand is not an issue. I've said this before. Supply and demand is not the equation. There is tons of inventory that can be traded short term. And as I said, there's $225 billion exchanging hands every day. So where is that money going? It's short-term traded. Everybody is short-term trading. We can see that what's happening here over this stock is that it was very choppy and sideways. This is actually a trading range. Trading ranges are extremely hard to trade, and a lot of people try to trade them using various techniques with bands or other things. But what you want to look for is a compression pattern. What is a compression pattern? A compression pattern is two things. It is a compression of price. It's a deliberate intent to compress price. There's only one kind of order that can compress price this much. And it is not in your brokerage account. When you see a compression of price like that, that is like pushing a spring together. So you have this wide trading range, and it gets narrower, and it gets narrower, and it gets narrower, and it gets narrower. Trading ranges break to the upside most of the time in a bull market. And make no mistake, we are in the bull market of this decade. Anybody who says this is a bear market is not looking at the charts. When I was studying what was happening in 2018, I said, this makes no sense. The Dow is going up, the Dow is going up. So I went through and I studied all 5,764 charts. I studied all 142 industries. And I said, oh, we're in the bear market. We're in the bear market. And I told my students, we're in the bear market. It ended in 2020. We may have trading range markets. We may have a period like we had in 2014 to 2015 where it goes sideways for a while and creates this little sideways trading range, but it's still very tradable. It's not a bear market. A bear market has to hit at least a major 3 legs down, which did occur. You can see it on 4,000 charts. Right now we have about 6,500 charts, listed stocks that you can trade. When you have a compression pattern of this type, the tighter the compression, the more control the professionals have over it. As they gain more and more control over price, that's like a spring pushing down, pushing down, pushing down. What happens when a spring is released? What happens when that little bit of news, oh, so quite accumulation, Fidelity has been buying such and such a stock. Vanguard's buying such and such. BlackRock is adding its ETFs to its ETFs in this industry. What happens when that news gets out on social media, chat rooms, TradingView, all these other places? What happens? Everybody starts buying and it releases. The pro traders don't have to make the runs. They just have to do the setups. And then it triggers and it moves up and has a strong run up. There are some retail traders in here pushing price down, but this stock wants to move up. We have another trading range. Now we have a breakout wave trend pattern. So what happens here is we have a breakout pattern. Breakout patterns are usually HFT. This was an HFT breakout pattern. You can see the volume bar down below showing the breakout. And then we have runs up, a couple of low resting days and a couple of more runs up that are going on. If you want to get into these, you need to be able to consider where the breakout is going to be controlled and where it's going to break out. You can always ignore the wicks and tails of the retail side activity, and you want to see if there's any transactions prior to that. They were trying to sell this stock short, but it had some good news and it pushed itself up. So this is a very important factor that you need to keep track of. Also, we have a little bit of banks of record buying some shares back of this stock earlier in this year. So this stock is going down. And it's going down, and it's going down, and it's going down. What is wrong with the stock? And it gaps down, HFTs gap it down, big gap down, big run down. That's the prettiest thing I've ever seen. You know why? Because when HFTs gap a stock down after it's been trending down and it's lost more than 50%, that identifies where there's likely to be a buy zone. And a buy zone is a very narrow price range that breaks out and moves with strong momentum. Now, this is a very inexpensive stock, and it doesn't have a lot of percentage shares held by institutions. I always check fundamentals as well to make sure that I'm accurate with my fundamentals. Right now, I can strongly say that this is a bull market. Why? because we have billions of dollars of new money coming into the market every week. The money flowing into the market is going into stocks, and they're placing that, and they're buying stocks. They're building their ETFs. They're building more units, and there's more and more money flowing into stocks. As long as there's money flowing into the market, the bull market will be fine, and it will go up. And there's a lot of people that the American family has the lowest rate of debt in many, many years, and it has the highest rate of savings account for many, many, many years. Why? Because they couldn't spend their money on eating out and things like that for a whole year and a half. And so they paid off their debt and they saved some money. And everybody's going, oh, the world is coming to an end. Oh, we're going to have a great bear market. Ah! No, I'm sorry, but look at the charts. Trust the charts. The charts cannot lie. The charts tell you what's going on. They tell you who's in control of price and where things are going to happen. So you want to be actively involved in understanding the different market participant groups. The different market participant groups define the price action. Is it very tight? Is it wide? Is it irregular? Is it extremely consistent? Are the professionals opportunists? Yes. Are professionals influencers? Yes. Who's the predators? HFTs. Sell-side traders, sell-side institution traders. And a lot of recommended gurus who recommend stocks are predators. They tell their group, oh, buy this stock, I bought it. And then as soon as their group starts buying it, they start selling and taking profits. So you have to be careful and have to understand the market and what's going on, because it's totally different than what you think it is. If you join a chat room, they can see it. If you join a social media group, they are tracking everything you say. So they know way ahead of time what's going on, and they can jump in before you. The HFTs, that's what they mostly do, is they go around with their AI and their machine learning, and the computer learns, and so it automatically sets up all these orders on these stocks that you've been talking about, and it gaps up, and everybody going, oh, I wish I could get into that stock. Well, you need to start paying attention to the pro traders' activities, because they will tell you that their setups are showing that there's going to be a trigger on that. There's going to be a trigger on that. This makes swing trading very easy. Platform position trading, which is great. This is a platform position trading stock. You would get in lower in here, and then you would just ride this all the way up, and you could make a huge amount of money for monthly income, or for this is for people who are busy, have a career, can't trade every day, can't day trade or intraday trade, can't swing trade, they're just too busy. Platform position trading is very, very lucrative, and most of my students make a really good living off of the platform position trading that I teach. And this allows you to get into the stock and quiet accumulation, and then you just move your trailing profit stops up, and they should never be percentages. Percentage profit stops. Those can be seen by HFTs, and they will whipsaw you out every time. If you hate stop losses, if you feel that stop losses don't work, it's because you're using a percentage and everybody knows it. Okay, so don't use percentages. You have to use technical analysis, relational technical analysis, getting under the support level that either quiet accumulation has provided to you or professional traders have provided to you. So remember that there's a lot of different things that you can do. You can join the buyback club and just wait for banks to show that they're going to do some buybacks. You can piggyback off of the professional traders. They're getting more and more of the business of the small mutual funds, because the small mutual funds have been trying to trade themselves, and they're losing a ton of money because they keep using VWAP, and they can't understand all that volume and it doesn't go up, it goes down. All that volume and it doesn't go up, it goes down. It's like, it's not, that high volume is not dark pools. It's not buy-side institutions or derivative developers. They don't do that. They don't create those huge spikes in volume. They would be caught dead if they did. They're not going to. They're going to spread that accumulation over out an extensive period of time, and you're going to have to see it with a large lot indicator. And you're going to have to identify that. So you want to keep track of things in a different mindset. You have a strategy, it's working for you, then it stops working. Then you need to go back and say, who's in control of price when I was trying to use this strategy? Because more likely than not, all strategies work, but they only work in certain situations. Okay? So you want to be very careful with whom you are trading with and who you are trading against. Reddit groups have a tendency to trade against the professionals, and it's like, and they lose a lot of money. It's really damaged Robinhood. They've had a pretty weak earnings report. It's sad that they've IPO'd at this level because they were desperate for money, but it was really sad because it's a very clever broker system. Now I'm going to say something about broker charting software. MetaStock is a superb provider for charts. Their chart data is clean and extremely accurate. You can take it to the bank. It's accurate. However, brokers don't have to follow such rules. They don't have to make sure that the data is perfectly accurate and that it is coming from the national clearinghouses and the data feed providers and that it is proper and set correctly. So you may find that your broker's data is not correct, that it's an error, and this can cause you losses. You need to use a company like MetaStock. MetaStock is awesome because they check their data, they make sure it's accurate, they make sure that all of the information, volume, and on all of the other indicators that I use, because I have a bunch of different indicators that I use that I've created. These are my own indicators that tell me what's going on and happening. This is analysis of volume over time. So volume declined a little bit and then it went up again. Now it's going up again. So that's a volume indicator that I track things with. This is flow of funds coming into it. So flow of funds are steadily moving in. So the percentage of shares held by institutions is going up. You always want to be in stocks for position trade or longer term, intermediate term hold that have this going steadily up. It's an excellent indicator. We have the RSI, Relative Strength Index. I use a crossover because what we're doing with Relative Strength Index, and Jeff will promote. I have a free gift for one of you today on this. That's the 8-week indicator course on my RSI that covers all aspects of how you can use RSI with all kinds of different indicators that you have. It's a comparison indicator. It's not just an oscillator. So we're comparing the prior price to the current price back in time. Extremely useful in analyzing where pro traders are working and going on. And so I have a variety of different indicators that are going on and tracking. This is the long-term look of that stock. So it's pretty speculated right now. But as it stands, it was a great run up right here. So you have an entry day here in Gold and White pro trader setup. Solid whites are usually your pro traders. There's some indecision here a little bit. These are retail traders also in the stock, and then it moves up very nicely for a very stable amount of profit. And MU. This hysteria, this is an hysterical stock. This stock is volatile. A stock running up like we saw on the prior TRNS is a velocity run. A velocity run is a run that runs up with very little gap, very little overlapping of candles, and mostly solid whites. That's a velocity run. A momentum run will have some overlaps and some wicks and tails in it. So there's two different kinds of fast-moving running stocks. When you get a chart like this, the retail traders are in this, and they're in and out, in and out. This is an impossible chart to trade until it stabilizes, and it still has not stabilized. What's going on is quiet distribution. This company is not keeping up with the new semiconductors and all the things that are going on, and there's slow rotation going out of this stock at this time. So it's slowly trending down over time because hidden within all of this buying and selling and buying and selling, we have institutions that are quietly rotating out. Rotation means they're taking money out of one stock and putting it into another stock. And I see that I'm at 10:54, so I'm going to stop here and I'll take a few questions. Yeah.
Hey, Martha, are you waiting for me?
Yeah, I'm waiting for you. Do you have any questions that people have?
Thank you. I'm sorry. I thought I heard you. And then, okay. Amit wants to know, is there a MetaStock add-on for Martha's presentation? And so I thought it might be a good idea to talk about the course and, you know, how people can get the indicators and the quiet accumulation of the stuff that you're talking about.
Okay. We took 2 years. I hired a programmer because I wanted to take my professional indicators were written for my floor traders. And they were written years ago, and the only thing that was available at that time was a very sophisticated trade station that doesn't exist anymore. It was awesome, and we spent $10,000 a month for the trade station platform. It was awesome. I wanted to take my indicators that I developed there, and I wanted to move them to MetaStock. So I hired a programmer. We took about 2 years to develop all these indicators to make them work on MetaStock so that my students that use MetaStock would have access to this. A lot of people think that every indicator writer should just hand over their indicator and let everybody be free. So I'm going to tell you a little story real quick here. I was at a professional, the CMT Organization Association, and we had 5 of the 6 major banks in, and their TAs were there. And it was so thrilling to talk to some of the best in the business, TAs in the business, technical analysts in the business, working for the sell side major banks. And one was a woman. And she got up and explained how she'd done all these indicators for her bank and everything. And she was there to promote for her bank, and her bank was trying to sell to buy-side institutions these wonderful indicators that she had produced. And a hand went up from a gentleman near the front, and he said, "Well, I'd like to have your indicators. Can you send them to me?" And she just stared at him for a moment and blinked. And she said, "Excuse me?" And he said, "Well, yeah, I'll give you my email and you can send me those indicators. I'd like to have them." And she said, she kind of looked around the room, and I was looking down, and then I looked up and I smiled at her. And she says, "Oh, retail." And just that much. She says, "No." She says, "I make a lot of money." Let me repeat that. I make a lot of money selling my indicators. The problem with technical analysis in the early years in the 70s and 80s is that all the indicator writers for the retail side wanted desperately to get more technical analysis out there. And they thought if they gave away their indicators, that then more people would use their indicators. Well, at that time, it wasn't the 90s where there was lots of retail traders coming in, because finally there were brokers online. The professional said, if it's free, it can't be worth anything, can it? It was a huge mistake, huge. The buy side and the sell side, everybody on the professional side expects you to pay for their services. If you have a career, if you work at something, if you're a programmer or an engineer or whatever, do you work for free? No. I do not give my indicators out for free, because unless you have the course, you cannot understand how to use them, and you just become frustrated, because they take a little bit of practice to understand, because there's so many little signals within them, because they're professional indicators. They're not just the common indicators that are available to you, although I do use RSI with RSI that I've developed on that. So the course is a professional course. We have 3 courses for different groups. We have a beginner's course, which is a standard methodology essentials. We have the premier course for those of you who are experienced in advanced, and we have the elite course for my professionals. I have quite a few professional brokers, professional traders who are all taking this relational technical analysis to get on top of it, because that's where everything is going, because that's where it's headed. So those are available on my new website. And I will give you a link to go to sign up on the public site. My student site is closed. It's a closed campus, and only students who've taken the course can get access there. It's a really cool site. We just set it up, and I'm so excited because it's just been thrilling. They have everything online. They have their test packets, everything. So it's all automatic, and you can watch the video. You take your test, you know immediately where you need to review. We go through, there's a certificate of completion. You join a discussion group for that. You have the community group where all the traders get together that are my traders, and they communicate. So they get to hear the professionals, they get to hear the beginners. Everybody is in that and learning and understanding. Since it's a closed campus, the AI and the machine learning can't get access to what we're doing. It's not available out there. So that's a very, very important part of what I offer. I'm going to close this out. So Jeff, do you want to do this or shall I?
I want you to do it.
Oh, because Jeff and I have been good friends for so many years, and he said, you know, do you have a course we could give away? I said, sure. We have a free online course. The value is $1,500. The RSI Indicator Online 8-week course comes with notes and tests and everything else. You take it online, and it will be free to somebody who wins this. How are you doing that, Jeff?
I want you to pick a number, Martha. Let's go
Okay.
anywhere between 1 and 10,000.
1 and 10,000. Okay, I'll pick 532.
Okay, let me tell you who that is. That is, and I'm going to remember this time not to use a last name. It is a Paul S. Out of the USA.
Okay.
And since there's a lot of Paul S's out there, Paul S, your email, if your email starts with go fast, something, 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 then you're going to get an email from us about how to claim your prize.
Okay. Yeah, they can also go to info@technitrader.com to start the course. We'll show you how to get into the student area and study that and get ready so that you can take that course. It's at your own pace. You can take it at your own pace. And the students just love this course. That's why I picked it. It just blows them away because it's not just RSI. It's a dozen other indicators with RSI. So it really digs you into the study of indicators. I have a lot of indicator courses, and I find that students just love them. And I just want to thank you. We're all very glad here at TechniTrader that you attended today. If you want to learn more about TechniTrader, this is where you should go. So you might want to write this down so that you can come and visit us and experience our training. We have a learn and earn, and you can take a free course, and then you can learn, and then you earn credits towards your course. So this is how we do our marketing. It's very laid back. Either you're really interested and you're really excited and you want to learn relational technical analysis, or you're happy and you have what you want and you don't need us. So it's not a hard, I just don't do a hard pitch. I just don't. I'm so thrilled that I could be here, Jeff. I had a lot of fun. I hope everyone learned a lot. I know it's a lot to cover, and it's quite different than what you normally hear, but it's important that you start thinking about looking at your charts in a new way and saying, okay, who's in control of price? Are they quietly accumulating? Are they quietly rotating? Because rotation will not move a stock down. Is a pro trader setting up to make HFTs trigger? So I want to get in right away. Those are all things that you can learn from a relational technical analysis and the indicators that we have with the magnificent MetaStock charting program. They have just, I mean, it's just great. And there's so many things that you can do with it. And again, it is very clean data. The most expensive part of being a professional is data. It has to be clean because the professionals are trading on the millisecond, and they're trading penny to half penny spreads. A half penny spread on 5 million shares at $200 a share is a ton of money. So you want your data to be clean, and MetaStock, we only deal with very few charting software programs. I'm very strict about who I select to recommend for my students, and MetaStock is one of just 3. So MetaStock is there and has been a great partner to us all these years. Thank you, Jeff, for having me come.
Martha, great job. Kyle says, I'm loving this presentation. Thanks, Martha. And then
You're welcome.
L.Ann says, me too. Yeah, great job,
Great.
Martha. It's
Okay,
good to have
thank
you.
you.
All right, thank you. All right, very good. Thank you, Martha. Let me go ahead and kind of see it here. Okay, we'll go ahead and do this. All right. And then let's see. Let's go ahead and make me the presenter, show my screen, et cetera, et cetera, et cetera. Lights are coming on. Okay. Let me go ahead and just give me 2 seconds here. Let me kind of go ahead and get back into the presentation. I do want to spend a second to say thank you to Stocks and Commodities for sponsoring the event today. They have a 17,000 trading article archive, 1.3 million subscribers. They've been making the Stocks and Commodities magazine since 1982. They do a great job. I want to say thank you for them for sponsoring the event. I also want to say thanks to CMT Association for sponsoring the event. They do a great job as well. They've been sponsors for a couple of years now. We, of course, for MetaStock, we've actually been winning the Stocks and Commodities Award for 28 years in a row. With MetaStock, you can scan markets, test trading ideas, do forecasting. It's been a tool that we've been working on hard for the last 30 years. What we're doing is, so we have pricing that starts at about $69 per month. What we're saying is if you want to try out MetaStock, you can try MetaStock on a buy 1 month, get 2 months for free. So you can do that at metastock.com/conf-promo. And you can also get in touch with us by giving us a call at 800-882-3040. We do have a little bit of a timing issue. So please be patient right here while we play. Let's see. Oh, well, okay. Give me just a second here. We do have a little bit of a timing issue that I need to sort out. And we're going to display a technical issues. Give me just 1 sec. All right, our next presenter had a little bit of a time miscommunication, and he is on his way. So he says he'll be here as soon as he can. What I'm going to do is a lot of the questions that have come up, if you have questions about MetaStock, ask them. But what I'm going to do is an impromptu talk about how to scan in MetaStock and how that works, just to try and entertain you. If you do have any questions that you want to look at or talk to ask, now is a great time because we have a very unscripted moment right now. So in any case, let's talk a little bit about the candle profit systems, how they work. One of the questions we get a lot is like, how do you find opportunities? And what MetaStock is it's a very, very good utility for actually doing that. And all of the presenters that we've had on today actually have scans that they've built for MetaStock. So, but just using Steve as an example, what I'm going to do here is I'm going to go ahead and jump in and just show you kind of like a little bit of a highlight in terms of how our scanning tool works. So right here in MetaStock, what I've done is I've opened up what we call our Power Console. And with the power console, there's also obviously a number of tools that you can actually go in here and use. And I actually did show this on the CPS earlier, so I'm going to show it on around the horn so you can get an idea of how that works. Right here, what I've got with around the horn is I've got the 8 different explorations that you can use. And one of the things that we put together as part of this scan is just called an all pattern scan. So if I want to go in and run a pattern scan in MetaStock for any of Dave's patterns, like the idea is I want to be able to find something that works today, I can run scan just about anything I want. And really with Refinitiv, I do have the ability to scan anything I want. So for example, right here, and I talked about this earlier, but we do have 300,000 different securities you can scan for. We have hundreds and hundreds of markets across the globe. And what I'm going to do, though, to keep it fast, because Fausto is going to be joining us fairly soon, is we're going to scan the Dow Jones Industrials as well as the S&P 500. So there's about 500 that we're going to run right here. And what I'm just going to do is I'm just going to run that around the horn all pattern scan. Now, I love the scanner myself personally because it does offer the ability to go in. And as a trader, a lot of times, for me personally, I work pretty crazy during the day. A lot of times I'll look at the market, and we're here in Utah. I'll be looked down and it's like 150, right? And I'm like, 150. I need to be able to find opportunities now. And the market's closing at 4 o'clock. And so I'll run a quick scan. And what I'll be able to do is very quickly, you'll notice that we're 98.3% done. Very quickly, I'll have the ability to go in and say, okay, well, based on the patterns that we're looking at, here are the stocks that have either a 3-2 buy, a 3-2 sell, a 3 yes buy, based on Fausto's thing. So from there, of course, I can go in, I can open up the chart. We can attach the expert advisor. We can kind of look at the commentary. And it offers us a very, very smooth way for us to kind of, one of the things I absolutely love about MetaStock is our ability to kind of ignore the noise that exists in the marketplace and focus on the opportunities that exist. Fausto, I can see you there. And I notice you're having some audio difficulties joining. So what I'll have you do is in the control panel, click on the audio tab, click on no audio, and then click it back to computer audio. That'll usually get you connected to the audience or to the audio. If that doesn't work, the other thing that you can do is unplug your headphones and plug them back in. So let me go ahead and kind of just, oh, he says he can't hear. How is he going to hear me saying that? Let's see. Okay. Okay, let me go ahead and send him a bit of a message. Send. Okay. All right. We're just getting this all kind of squared away. Apologies about the kind of the delay. I did curse it earlier when we said we were.
All right, how about now? Could you guys hear me okay?
Fausto, it's good to have you.
Jeff, how are you doing? My God.
Now,
I just landed from Vegas.
Oh, did you? Okay. Well,
No. That was yesterday, but I was still trying to get used to the time zone.
Oh, okay. That makes sense, actually, now that you say it that way. Do you want me to introduce you with the cruise story or the baby story?
You know what? You pick it this time because the way you explain, I don't know which one you think is the favorite and the best.
I like them both. So, but we'll go with the cruise one. I want to introduce you to a man that's very, very good at talking about how like level 2 and level 3 work. Very, very distinguished in that. One of the things that he doesn't talk a lot about, mostly because he's a humble man, is the fact that he went on a cruise and one time was rated the most handsome person on that cruise. So he's also very dedicated, and we love having him here. Fausto, I'm glad you could join us. I'm glad we have your audio. I can't see your desktop right now.
Yeah, I know. I'm trying to share that now. Hold on.
I do like the logo, though.
Oh, thank you. All right, hold on, almost there. There we go. There we go. Let me know if you can see that. Okay.
Yep, looks good.
Perfect.
Wow, that is just probably a person right there on the right that did win that competition I was just talking about. It's one handsome dude, is all I'm saying.
Beautiful. How's everybody doing now in the meantime?
We're doing great today. I'm going to get out of the way. We can
Good,
hear
good,
you.
good.
We can see your screen. It's all you.
All right, perfect. Just looking at the chat. Just want to make sure we could see my chat away. Questions. All right, there we go. All right, perfect. All right, so I'm ready to start whenever you are.
It's all yours. It's all yours,
All
my
right.
friend.
And you know what? To make it even more fun, I'm going to share my webcam if it's okay. There we go. All right, perfect. Hopefully everybody can see that okay. All right, good. Welcome everybody, and sorry for the delay. Hopefully you guys are having a great time with MetaStock. I tell you, I've known them for so many years. It's always been a pleasure to come and speak in their behalf. But today I'm going to talk about something that maybe some of you are very new to this, which is called false breakouts. So I can still hear you, Jeff. Oh, did Jeff could mute himself? But has any of you ever seen me do a presentation before? Just give me a chat back in the room. Just want to see if anybody has seen it before. Just give me a chat and the questions. Yes, no. DTI, you did. Okay. Cameron, you haven't. Okay, good, good. Anyone else? Well, there's a lot of people you got in here. Oh, several hundred thousand. Oh, 700. Several hundred. Good to see you, TJ. Good to see you all. All right. So anyway, let me just change the slide and get right into it because I don't have too much time. Just a quick little risk disclosure, which you probably all hear from all the presenters. Results can vary from student to student. There's no guarantees or promises and no warranties that are going to be suggested it's going on. Listen, there's a very, very high risk when it comes to trading. I think we all know that already. Just, you know, you could lose a lot of money do it. But please take this as more of an educational lesson than anything. So this is what we're going to learn today. We're going to talk about how to spot market traps, strategies. We're going to talk about how to execute successful entries and exits. We're also going to talk about how to implement proper risk management techniques and how to find the best stocks to trade, because it's all about risking the least amount of money with the high amount of reward. That's where it comes down to it. But before we get started, everyone, I have a quick question to ask everybody. How do stocks go up and go down? Can anybody answer that question? How do they go up and go down? I know it's a dumb question, and sometimes I ask for a dumb answer. Exactly, buyers and sellers, right? So by knowing where the buyers and sellers are, we're not here to talk about the past, we're here to talk about the future. The future is, where are those orders? And because it's all about having entries and exits. Big thing is not to learn how to make money, it's how to stop losing it. And that's what we're gonna focus on. Now, you know, just very briefly, I don't wanna bore you with an intro about myself, but I've been doing this for 25 years. I love what I do. I've been featured at some of the biggest brokerage firms in the industry. There I've been featured at the NASDAQ talking about something called NASDAQ Total View. The reason why I teach is because I'm looking for traders to trade with. That's really what the ultimate goal is. If you want to be a good trader, you have to surround yourself with good traders. Fortunately for me, I live here in New York. I was trained by some of the best in the industry, but eventually when you get good at it, you want to go on your own. And that's hopefully what I'm about to invite everybody here to come in and step in and do the same exact thing. To come in, I want to invite all of you to come into the trading room. I want you to see how the MetaStock platform works so great on some of the tools that we use and all that good stuff. But before we continue, could everyone just tell me, what kind of trader are you? Can anybody tell me what kind of trader are you? A stock trader, an options trader, futures, Forex? I don't know. Just kind of get to know a little bit about everyone that's here. All right, as you guys are filling that out, I'm just gonna let you know, I am an actual, oh, don't say that, TJ, a losing trader, don't worry about that. Jimmy, do a little options. What about you, Wayne? What about you, Tyson? Mike, Julie? All right, now I'm an actual stock trader. I'm a day trader. What that means, I get in and out of stocks at the course of the day. I just try to focus on my day's pay. That's it, you know? It's basically black and white. It's pretty easy in a way of looking at it where when you do other things, it could be a little more complicated, but it's just mainly just finding what's best. Now, let me just tell you this. This is what I learned a long time ago. If you've been doing like, you know, Raj, you're doing options, Benson, you're doing Forex, and Neil, you're doing stocks. Let me just tell you something. If you've been doing something for more than 60 to 90 days and you're not making money doing it, it could be the person that's trained you, or it could just be something that's not your style. So it is time to do a change. I know why we're all here. We understand the value of trading, how much money you can make. But just to let you know, I've tried a little bit of everything. Yeah, it could be like marriage too, you know. But you might have to. You might if it doesn't work out sooner than later, you're probably better off for a change. Now, why are you here? Now, listen. The main goal is this. It's not. You're not here to start to making money. You're basically here to stop losing it. That is the big thing that you have to focus on when it comes to trading. Now, the other big thing you have to ask you, who's really trained you? Because to be a very good trader, you got to surround yourself with good traders and people that are very successful at it, which, by the way, I'm going to invite every single one of you to meet all my traders in my trading room. So let's begin and get right to it. Have you seen these stocks in the past 30 days? Let's talk a little bit about them. All right. Did you guys see DWAC, PHUN, PPSI, BKKT? What do they all have in common? They all end with 4 letters. But do you know, did anybody here trade any one of these stocks or seen what happened to them? I mean, this one, hold on, let me get my look. You got the DWAC on the top left. I mean, that thing in one day went from 12 to 40 to 180. That was that Trump stock, that new Twitter that he came out with. PHUN was the same thing. PPSI stock went from like 4 to 12. Look at the bottom, 8 o'clock in the morning till about 3 o'clock in the afternoon. BKKT, this one, you know, stock went from 10 to about 57 in about 2 days. I mean, this is amazing. People are like, where do you find these stocks? I heard about them. I've never seen them. Listen, it's not hard to find them. You know what the hardest thing to do about them is when to take a profit, when to move on. So EVGO, another one. You know, look at all it. AVAR. I mean, look at these stocks, 12 to 15. Newsy, 12 to like 30. This is all in one day, by the way. LCID, 28 to about 39. I mean, there are some really big winners out there, big runners. But how do you find these stocks? People always ask. Well, it really comes down to, you know, a better question is, what did all of these stocks really have in common? All right. They all started in the pre-market. Now, I can always get people always ask me, I don't really know how the pre-market works. I heard you can't trade it. Listen, we launched a new alert service where, you know, a lot of people here might not be able to access that information, but like a lot of that pre-market trading is which leads into the market open up. Now, let's look really quick over here on what's called the top gainers and losers. Now, MetaStock has a really good scanner. It starts early in the morning. I don't know if you guys have access to it, but when you come to my trading room, I'll show you a little bit more about it. But their scanner works amazing. It scans the pre-market and tells you everything that's moving in the pre-market. Now, remember, it doesn't matter what you trade. You're just here to make money. Please keep that in mind, all right? Because there are companies that I cannot stand. It could be their working patterns. It could be their labor. It could be political. It could be everything. But at the end of the day, I'm a trader, and I'm here to make money. So there's a lot of stocks like, oh, I don't believe in EV stocks. Okay, great. I know you like your gas car, but you know what? They're moving. You know. Oh, I don't believe in military. Well, you know what? If we're at war, what do you think's going to happen? You want to short those stocks? No. But a lot of this action you'll see happening in the pre-market. Looks easy, right? Well, wrong. It's not. Everything looks easy on paper, but what you have to make sure you're not trading at the wrong times. Let's go back to this stock, BTTX. Now, if you notice BPTX, really started making some movement right around the morning, and then it ran from like 12.50 up, and it ran going all the way to about 12 o'clock. It ran all the way to about $29. But then it dropped off, off its high, went from 29 down to 18. Now, why is that? Why would the stock go down? Could anybody answer that question? Why did it go down? Why didn't it continue to go up? Let's look at this stock, LCID. Looked great before. Stock went from 28 to about 39 up until, what was that, 9:30 this morning, up until, 1 o'clock in the afternoon. But then it tanked. It went right from 39 down to 33. Ever buy a stock, and as soon as you buy it, the thing goes down, and as soon as you sell it, it goes up? Well, it's not the market levels. It's a lot more than that, okay? How do you avoid these false breakouts? You follow the money. That's it. You follow the money. What does that really mean? Well, Mark, pump and dump, was some people putting that in there, Barton. Listen, it's nothing about pump and dump, all right? If you really think trading is a bunch of liars and thieves, and you don't like them, then maybe you shouldn't trade. Don't take it in a bad way, but maybe you just don't understand, but if you knew they were pumping and dumping, wouldn't it be nice to know when they're pumping it up and when they're dumping it, so you're on the right side and the wrong side? Well, let's look at this. Does anybody here use something called NASDAQ Total View or Book Viewer? Anyone ever heard of it? Anybody use this stuff? This is not the Fausto or the indicator or the MetaStock platform. This is actually the exchange itself. Anybody here have it, use it? Wow, we're getting a lot of no's. Okay, well, what I'm about to show you, and let's think about this for a second. You want to know entries and exits, right? The way you're going to know entries and exits, you have to know where the buyers are and where the sellers are. Now, this is basically a seat on the exchange, okay? So now what we have right here, and let me get my little marker here. Maybe it can help you guys out a little bit here. Here's my pen. Okay, so let's look back up here. Let's do some drawing. These are our buyers. These are our sellers. You got 3 columns, 1, 2, and 3. 1, 2, and 3. Now follow me closely, ladies and gentlemen, because this is really going to get really intense. This is where I don't want to lose you. First column tells you how many orders are out there. The second column tells you how many shares are looking to be bought. And the third column is telling you the price. Whoever wants to buy the stock for the most amount of money is up on top. Whoever wants to buy it for less money is down at the bottom. Whoever wants to sell their stock for the least amount of money is up on top. Whoever wants to sell for more money is down at the bottom. So what you're looking at is a negotiated market. These are people out there that want to, that around the world that are looking to buy the stock and sell the stock. So this is basically a seat on the exchange. This is the NASDAQ market. Now, let me change the slide here. How do we utilize it? Well, very simple. Here's a stock, whatever symbol, OCGN, right? And let me get my little dot over here. You could see the stock was trading at 11.45 right here, okay? Stock went all the way down to a price of right around $10. Dropped about $1.40, been a nice short. But for some reason, it stopped. And not just stopped for several minutes. And then eventually, after about 10:45, after 15 minutes, decided to pick a direction and go back up, back to 10.50. Now, why did it stop at 10 o'clock, $10? Why did it stop at 9.50? Why not 9.20? Why 10? Well, the reason for that is this. When you look at the exchange, you'll notice over here, what makes us, you have to understand something. What makes a support level is buyers, okay? You cannot have a support level without those buyers. Right here, you could see that there was a 310,000 share buyer, and there were 11 different orders out there that make up that 300,000 shares at $10. Now, when you're looking at all these other numbers, 2,000, 200, 500, 3,000, 310,000 shares. I mean, why would anybody want to buy 11 different people around the world want to buy a stock at $10 and more or less be about maybe 20 to 50 times more than the average order out there, maybe even more, 300 times sometimes, because obviously they want to buy it. That is called a demand. That is what you call a support level. So what do you think the stock does? It goes back up. Now, let's continue. That is a entry. Let's talk about a exit, okay? So here we have a stock. And let me get my little crayons. Let me draw up and have a little fun here. Here you have a stock that started right around here at, at this price right around here, around 460, went all the way up, stopped at 7, came back down to 460, went right back up to 7, came back down, and you could see it several times. It hit resistance, resistance, resistance. Why would it hit resistance? Well, I don't know. Oops. Hold on one sec. Oh, sorry about that. So maybe because there was a, 243,000 share seller out there at $7, and there was 83 different orders around the world. Think about that. 243,000. Listen, there are 1,000 share sellers. 30,000 is pretty substantial. A hell of a lot more than you might buy. Okay. Of a $7 stock, but 250,000. What do you think's going to happen when we get to that big resistance? Oh, kind of explains it. Think about it. You could have bought it, made, let's say 5, okay? $2 long, $2 short, $2 long, $2 short, $2 long, $2 short. You know $2 on 1,000 shares is, ladies and gentlemen? And you had 1, 2, 3, 4, 5 different, 6 times had a chance to do it. 1,000 shares, $2, $2,000, do it every day. You're talking about a $500,000 salary. Now you know why people love this job. Let's go to the next one. Let's look at this stock right here. Ready to have some fun? I don't know if anyone ever tested you before, but could you guys tell me, we're looking at a stock right now, any. Is this stock moving up or down? Let's see how you answer this question. Up or down? Glenn, we didn't get to that yet. Glenn's asking about spoofing and stuff like that. We'll talk about that. Well, listen, if you said the stock was going down, congratulations, you just passed, the first grade of trading. Now, I know it's a dumb question, but now my question to you is this. Is this stock going to zero? Could happen, right? What do we need for the stock to go up? What do we need? Exactly. You need buyers. Do you see a buyers on a chart? No. But let's go check over here on the NASDAQ exchange. And we work our way down. Obviously, we're looking for buyers. The buyers are located on the left-hand side. And as we work our way down, we've got pretty substantial buyers, 2,000, 8,000, 11. But you know what? When you go down here, you have 132 orders. You got 177,000 shares. Wow, that's a lot of shares, don't you say? Wouldn't you say? So let's go check this out. Damn, would the stock do? It hit the 7, and about 10 minutes later, it shot from 7 and went right up all the way to 780 in a matter of, an hour. 7 to 710 to 780. What is that? 70 cents on 1,000 shares. $7,000, $800. I'll take that. And I know you would too. But you understand the concept of entries and exits. An entry is where everybody else is entering. An exit is where everybody else is exiting. But the issue with with traders is they're focusing on the past. Have you ever focused on the future? Well, The future is where those orders are. So, did I lose anybody, by the way? Anyone get lost? Anyone, anything seem too complicated? Good. All right. Let's go back to NCTY. All right. So here we have a stock that goes from $10 all the way up in about, I don't know, about an hour, it goes to $13.80. Okay. Now, where's the resistance levels? Well, you can't see it on a chart, but the game plan is, well, let's not be stupid. And let's say, okay, where's everybody else selling it? This is level 3, Jim. This is level 3. And by the way, when I invite you all to come in my trading room, wait till you see when I show you level 4. You're really going to fall off your stocks. So if you really like charting, you'll like that. So let's look at NCTY. Where's the resistance levels? Can anybody tell me? We're looking at the stock we're looking at the stock NCTY, and remember the goal is where's resistance? Let's go back. Let's go look where the orders are. Where do you think, in theory, the resistance levels would be? Well, if you said 1388, congratulations, you're right. 60,000 shares, absolutely. You know what? If I had a choice to see a 500 share seller versus 60,000 share seller, I will go with the 60,000. Okay. All right. So let me erase this. Let me change the slide. And when you go back to the chart really doesn't show you that. Chart looks like it's going to break a new high. Now, don't tell me, oh, it's got a double top, it's got a triple bottom. Listen, the trend is your friend. You don't buck your trend, right? So you could see clear as day the stock is going higher. But guess what? You ever look at that candlestick? Goes from 1340, drops literally like a $2 in less than a couple of minutes. Talking about getting crushed, okay? Getting destroyed. Well, why did it go down? Well, maybe because that guy hit the bid and he executed all those 100 share buyers on the bid. He's probably the one is the reason for it to go down. Well, we didn't get to that yet. Could he have got filled? Absolutely. But we didn't get to that yet right now. Right now, we're here and just following the money. All right. But I'm glad you brought that up because that's the next slide that's coming up. Now, what we call them here at Cyber Trading University is iceberg orders. I came up with that word about 20 years ago. It was right around the time when the movie Titanic came out. You know what? Beautiful ship, wonderful people, but they were so concerned about the beauty of this ship, like everybody else with their trading platforms and the 6 monitors that they have, never thought they had the right tools because if you don't, it didn't work too well for the Titanic, unfortunately. So that's basically what we're looking for is iceberg orders. Now, to mention your other question that somebody brought up, he goes, I often get asked this question at webinars. How do you know these are real orders? Well, listen, come to my trading room. We'll use your money and we'll see how fake they are. But the bottom line is this. Do you guys use the time and sales window? You ever read any of the old books? They're called tape reading. I'm an actual tape reader. So how do I know those orders are getting executed? You read the time and sales. So we have them segregated in 2 colors, red and green. Green means transactions are going off on the offer. Red means transactions are going off on the ask. Now, to get to your question, one of the traders in the room. So how do you know these orders are going to get executed? So let's look at this example right here. You'll notice the stock right here had major resistance levels right around here, right? And it was hovering there for about, I don't know, about an hour and a half, right? And there was a 120,000 share seller out there. But if you look right here on time and sales, look at all these green orders, 1,000, 3,000, 5,000, 5,500, 1,300. Green, green, green. What was happening is this guy on the offer was somebody was buying it from him. And by the way, that could happen. Right? That could happen. But it's going to take time to go through, all those orders. It's going to take a little time. And it did. And guess what? It went past that 1450 and shot up all the way to $16 in a matter of about another hour, which would have been a really nice profit. So yes, this is going to be recorded, Sandy, so you'll be able to get it. All right. So think about it. Can stocks break, big iceberg orders? Of course they can. How do we confirm that? Time and sales. How many of you use the timing sales? Doesn't look like that many. Remember, you have to follow the money. If you want to understand where entries and exits are, well, you better make sure you know where those other orders are that make those entries and exits. Now, what happens if we break a big support level? Let's look at this example. 100,000 share buyer on the bid right here. Look at that. Big, big buyer right here. And you could see it right there. It basically took about an hour with all these orders getting executed, right, to take this guy out. And sure enough, once he was done, boom, thing goes from 1290 all the way down to 1180. Yeah, how's that going to work out for you? That didn't feel too good. Actually, a little less than that. Literally took about 30 minutes, about an hour and a half just to go all the way back down to 1180. I mean, that hurts. That hurts, fellow traders. All because you didn't see the orders. That would have been a nice scalp. I totally agree with you. But supports and resistance levels get broken all the time. We know that. And how do they get broken? Because somebody executed them. But that's not what my indicator told me, right? We look at some indicators, you got a lot of things moving on around there. Now, I'm not here to knock indicators because I know there's some great presenters here. That's all they work on. But for day trading, it doesn't work. What day trading does, we're like the Marines. We're the first one in. So if you want to be a good swing trader, investor, or option trader, you have to understand what's happening over the course of the day, which will trickle into those swing traders and those indicators. But by following those orders, it just makes things a little bit easy. Otherwise, you're going to be like this guy, confused, think you're playing a video game, and it's just not going to work out too well. And that's why we work on a lingo that's called the KISS method. Keep it super simple. Listen, every one of you need a mentor. Every one of you are going to need a coach. Everybody here needs to trade with a team. You can't do this by yourself. And a lot of you are going to need more than one mentor because not that they're bad mentors, it's just that maybe it's not your style. Maybe you don't get it. Or maybe they're too advanced for you yet. I have a seventh grader, and I have a freshman in college, and I got a senior in college. I don't think my seventh grader is going to be able to compete in college. He will, but it's going to take some time. Now, Hussein says, how do you catch those movements? Well, that's something I'm going to invite all of you to come into my trading room. How many of you here would like to see this live? This looks pretty good on a PowerPoint, right? But wouldn't you like to see this live in the market? Great, because in about less than 10 minutes, I'm going to invite every single one of you to come and watch me do this live, okay? But you got some great presenters here, so I don't want to take too much of their time. But I'm going to invite every one of you here for 1 week to see and me to show you these big iceberg orders. But please keep in mind, you don't have to kill it to have a successful career in trading. How many of you here would be happy just to make $100,000? Right? Well, guess what? You buy 1,000 shares of stock, 50 cents. It's $500. I mean, here you have a stock we're looking at. It ran from 9:30 in the morning up until 1 o'clock. It ran from $28 to almost $40 a share. 28 to 39. What is that? 10 points? You don't need 10 points. 50 cents, you tell them you couldn't jump in at 10:30, 11, 12, 12:22, 12:40. You could have made your 50 cents somewhere. Hey, if the buyers kept showing up, you're going to buy. But you know what? Can you lose? Absolutely. And why would you lose? Because you got greedy. Now, what I want to do for everybody here is I want to invite all of you in the original trading room that I started 25 years ago. Okay, we're gonna have live audio commentary. We start at 8 o'clock in the morning. We're end around 10:30. Then we'll trade the afternoon. Like right now, we have a live audio breast going on right now. I don't know if you guys could hear this. And it fell right back down there a moment ago. Just trying to hold it. Ends up failing to hold that and breaking down from that point. And let's jump to the 6-hour graph. What you just heard is one of my instructors, Josh, is doing a 2:30 meeting. Now we're trading going into the afternoon. Now, this is the original trading room. I started the first one because I was actual day trader, and back in the past, the only way to actually get this technology is you had to work for somebody in an office. I'm like, well, I kind of monetized the social media aspect of it. Believe me, 25 years ago was a long time, and we definitely moved on. Now, let's take some questions that came across that I want to answer. All right. Does this strategy work in volatile markets? My God, yes. And you damn well better know how to do it, because if you don't, you're going to blow up your account. Next question that came up to me in the room: how much money do I need to get started? You don't really need a lot of money to do this. That's a misconception that people have. I mean, honestly, I don't trade expensive stocks. Why should I? I'm not going to trade a Facebook stock, a Tesla. And then people are like, well, you could trade the options. Yeah, well, you know what? No, that's a strategy, not trading for leverage. All right. If I could trade an inexpensive stock to make the same 50 cents on like a $5 stock, why would I trade a $50 stock? Yeah, then you're going to need a lot of money to do it. Halts have been an unbelievable type of trading that we've been doing all day. We actually had a lot of good halts today that moved pretty nicely. I don't know if you saw them, but this works great for halting. We can actually see it as it's going up. David, does this work for crashing? Well, let me ask you this. Whatever goes up comes down twice as fast. So if you want to know and monitor crashing, you better make sure you're following the big boys. All right. You better make sure you're following the big traders out there. Let me bring this up over here. Now, another thing I want to show you is right here. Hold on, let me bring up something a little bit easier for you guys to see. Now, there is something called level 4. I don't know if you guys ever heard of this. All right, so let me bring this up right here. This is level 4. All right. Can everybody see this okay? I think you should be able to see in a second. Just let it load up. Is it coming up? No, it's not coming up. Hold on. Could you guys see level 4 really quick? There we go. Now you should be able to see it. Now, here's a stock that we traded this morning. Did you guys hear about PLTR? PLTR right at the morning went from $23, shot all the way up to about $23.50 and came straight back down to about $23. Now, why is that? Why did it stop at $23.50? Okay, you see right here, and let me get my little pointer. You guys can follow along. This guy was out here for about, in pre-market, right around here at $3.50. So the stock had a big run up, and it shot all the way up to $23.50. Once it got to that big buyer out there, let me see if I can zoom in there for you. You could see it. That was about I don't know, I think that was like 120,000 share seller. Once it got close to him, boom, thing came right back down to 23.07. You know, and guess what? He's still out there. He added to his position. He's got another 100,000 shares out there. Everybody see that here on the right? Okay, now listen, you got 1,000 share sellers, 6,000, 13, 100,000 shares. He's been out there. And guess what? He's not going anywhere. until someone buys it or whatever. And you could see right here in the morning, right around 23, there's 116,000 share buyer at $23. That's why he'll never go past that unless somebody executes him. Now think about this. How much smarter and trading decisions could you make now that you could see the orders, right? You could see the big block orders out there, right? Wouldn't that be fun to see that? Oh yeah, you're definitely good. Now this is what I want to do. I want to invite I got about another 5 minutes. Now, before I tell you about this crash course that I'm going to invite all of you guys to come for $9, okay, which is a 1-week training course, I want to pick out a stock, okay? Can anybody tell me a stock that you traded today? Anybody trade anything that was pretty good? And I'll look up and we'll see where the orders are. I mean, there were a couple of good stocks that moved this morning, but let me pick something that one of you guys did. Was it CREX? Was it Ford? I don't know. Oh, QS. Definitely a great stock. Okay, so let's look at QS. Actually, that became a swing trade for us. Let me bring that up. That's a great stock. We own that stock, actually, not my trading room. But here's QS. So QS was a $170 stock, okay? And it's kind of built some nice momentum right here around 25. And then we were day trading it. And you could see right here, I had a really good day trade. And once it broke resistance levels around 32, look at the stock's doing really well. Now on the day trade, you could see had a really nice push in the morning and ran from 38, hit resistance here at 40, kept going up, making new higher highs. So I'm going to go over here on level 4 and show you what we got, okay? Just loading up the data. So give me a second here. Okay, so right here, you could see, you see this big red line right here? The stock went from $30, $39, went all the way up. It tested this big seller right here, 38,000 shares. He actually added to the position. See that right there? Hit that position right there. And once it hit 43, it came all the way down to 40. That's a pretty substantial drop. I mean, that stock had a really, really good run. But could you imagine owning the stock at 39 and selling it at 43 over the course of the day? Hell, if you had only half those shares, you made yourself a nice 6-figure a year salary. And guess what? If you weren't prepared to get out when he was there, you just lost it. And it came to this new buyer, not as much, but it came to this buyer. You see, he left. He's not there anymore. He supported it, hit that support level. Look, it went right back up. Did I lose anybody yet? Did that seem complicated? This is the power of following the money. This is what we do at Cyber Trading University. All right, so let me give you the link because I only got a couple of minutes left. Hold on, I forgot to get the link up for you guys to register. But by the way, I'm going to show you this stuff, all this stuff live for a whole week in the trading room, because I don't want you to think I'm not. We're making this stuff up. Here's our website, Cyber Trading University. Tap here to get started. Listen, it's $9. And let me just put this in there for you guys to link and click on that link right there. Or you can go to our homepage or our website and register right there. Okay. So a couple of more things before I pass it on to the next presenter. I got a couple of more things I want to throw in there. If you're really interested in joining, I have one last bonus to throw in there, okay? If you guys register right now, after a couple of days in the trading room, and if you're excited, I'll even give you guys a coaching session. Now, why would I do that? Because I want to make sure that you're a good fit. This is something for you. I don't want to go out there and make sure you get yourself involved in something that's really not for you. Oh, there it is, Jeff. Thanks for sharing that. He's got the short version of it. ctu.co, okay, /trial. Because listen, I hate seeing people lose money. And, I've known Jeff. If you love Jeff Gibley, I mean, I know him. My God, it's scary to even think about Jeff. It's probably almost 20 years, I would say. I mean, but who's counting, right? Jeff would love to do these, bring people to his events because he knows what we do actually works. And, and obviously you've got a bunch of people with different types of styles of what kind of you want to trade. But listen, do it for a week. If you don't like, I'll give you $9 back. Oh, and yes, there was another question that came up. We are not going to charge you anything past a week. We're not going to scam you. We're not going to go out there and tell you, we're going to hit you with a fee. No, listen, you don't want to continue. We don't want you to continue. There's a reason why I got a 5-star rating on Google. I'm endorsed by every brokerage firm in the industry, and I got an A+ rating at the Better Business Bureau because we don't train everybody. And a lot of you, believe it or not, really don't qualify, okay? But go out there. It's $9. You got nothing to lose. All right. You got about 5 minutes. Am I out of time right now? I think Larry's coming in right now.
No, you're good to go for just a few more minutes. He's coming.
Oh, you're watching on YouTube? Okay, great. All right, guys. Any last minute questions before I pass it over to Larry?
Yes. Yeah, we did have a question that I promised to ask. Can you hear me? Can you hear me, Foster?
Hassan, that's the least of your problems. Don't worry about what the cost after is. Well, we have several different ways of training you. Just do the trial first, and we'll go from there. All right?
Hey, Fasto, can you hear me?
We're not going to charge you, Peter, anything after the week. We'll discuss. Just do the trial first, and we'll worry about that last. All right? Total view is like $15 a month. It's cheap. I used to pay $1,000 a month for it. Now it's like $15. And back then, I mean, Larry would even tell you to be a floor in the exchange, you had to come up with a couple of $1 million to be on the floor of the exchange. So that was different. But listen, thank you very much for having me. I really appreciate it, Jeff. Sorry I came in a little bit late. But you got another great presenter coming in, Larry McMillan, very good friend of mine, old friend. I mean, he's another great presenter. So sit back and enjoy all and soak it all up, everyone, because just remember, you got to learn before you could learn. Thanks, everyone. Enjoy the rest of your day.
Thank you. Thank you, Fausto. Good to have you. I don't think he could hear me at the end right there. Hey, Larry, I do notice you're having a little bit of an issue with your audio. Let's go ahead and have you, there's two things that you can try. Number one, you can try unconnecting or just unplugging your microphone and plugging it back in. Or number two, if you go to the audio tab and just click on no audio and then back to computer audio, that usually will work it out as well. If that doesn't, well, hopefully that'll work. And then as soon as you get on, let's go ahead and have you just say something to us. So in terms of us, let's go ahead and kind of move a little bit more here. And Larry, we do have you starting at 3. Let me send this over to you. I'm just sending some notes over to Larry in terms of getting him on board with audio, 3 o'clock. Okay. All right, hopefully he'll be able to work that out. While he does, let's go ahead and change the presenter back to me. I'll go ahead and show my screen. And I just wanted to look forward real quick because Fausto was talking about it. So I do want to say thank you to Stocks and Commodities Magazine. Thank you, Stocks and Commodities, for sponsoring all of the events that we do here for so many years. We do appreciate that. They've been publishing articles since 1982, 17,000 articles, 1.3 million subscribers. Great sponsor. Looks like Larry, looks like your audio is connected, so that's great. We are, of course, MetaStock here. We are offering a buy one, get 2 free month trial on our awards-winning software that's actually been rated #1 in its price category 28 years in a row. And we'd encourage you to take advantage of that trial by going to metastock.com/Trader Summit 3 for 1. So looks like Larry was able to connect his audio. We do also want to say thank you to CMT Association for their support of the event over the years. Or actually, not over the years. They've sponsored, I think this is the 3rd event, but they're a brand new sponsor of ours, so we really appreciate them for bringing us online. Kelly Clement, can you hear me right now? And can you turn on your audio real quick?
I can hear you, Jeff. Yes.
All right. So what I want you to do you know why I've called you in here?
My guess is you want me to choose a number between 1 and 10,000.
Yes, and we're going to give away a free course.
Ooh, a free
We're
course.
going to give away,
all right. Is that all they're going to give us, a free course?
Yeah, well, no, that's not all they're going to get. They're going to get the Larry McMillan Home Study course.
Ooh, well, this is a very good course. This is exciting.
It's a seminar home study course. It's brand new. They just released it. And it's called Saturdays with Larry McMillan, which is it has a number 14 in the description. 14 seminar home study course, brand new. So we're going to get that. Did you pick out the lucky winner for the Larry McMillan course?
Yes,
what number would you
give
like
you
me to put?
Number 7,803.
Okay. And our lucky winner of that is Milton P. From the USA. Milton, what we'll do for you is I'm going to jot you down as the winner, and we will contact you with information on claiming your Larry McMillan prize.
Fantastic. Congratulations.
All right. Very cool. And if you're not familiar with Larry, Larry's our next speaker. Let's go ahead and kind of bring up the screen of him. He's probably one of the most prolific options presenters out there. Very, very well respected. Been doing option strategies, has some of the best books around option strategies. Has done a lot of webinars with MetaStock, and we love to bring him in just because he probably doesn't even need an introduction, but he got one. So Larry, let's go ahead and see if that audio works. How are you doing today? And I just push that button.
Yeah, there we go. I'm unmuted.
Yeah. Nice. Good to have you on here. We can hear you.
I'm good,
Little
Jeff.
touch and go right there.
How you doing? Well, yeah, I think you probably were always going to be able to hear me. I just couldn't hear Fausto for a while there. Well, we're good.
Yeah.
We're good.
Everything, yeah, we're pretty good at sorting these out, and we can hear you really well. I can already see your screen, so things are looking good. Welcome to the MetaStock Traders Conference. I'm going to get out of your way.
Okay. Good afternoon, everyone. We're going to spend the next hour or so talking about what our option-oriented indicators are saying about the markets. Pretty interesting time in the market right now, I think. So let's get started. We're also going to finish up with some interesting seasonal patterns that exist right now as well. Just a little background on our firm. We started out as a derivatives research firm, almost 30 years ago. And in the beginning, we were selling data, analysis, that sort of thing, consulting. But then in 2008, we moved into money management after some successful calls about the market at that time. So we're currently both a CTA, meaning commodities, and RIA, meaning stocks. We manage option-oriented accounts in both of those areas. And then, of course, we have some educational things like mentoring or this webinar, various things like that. I will be returning to this later, but we have set up a special website page at our website, optionstrategist.com/MetaStock, and we will be offering some deep discounts on both the home study course that Jeff just mentioned, as well as our top-end newsletters. So when I'm looking at the market, I look at these four indicators primarily, although there are others, and so we'll try to be discussing them all today, one way or the other. The first is the chart of the S&P, of course. I mean, if you're not in agreement with the way the market's going, then your indicators need some work, I would say. You can have times where the indicators are against the market, but generally that's not a good thing to be against the trend of the market. Secondly, we'll look at equity-only put-call ratios, both on the broad market as well as on some individual stocks and futures. Then market breadth is important, and we have a sort of option-oriented take on that. And then we'll look at VIX and VIX derivatives and various things like that as well.
Unmuted.
I have a couple of important rules. The first is oversold does not mean buy. So even though if a market sells off very sharply, let's say in February, late February of 2020, when we started the pandemic crash, I guess you could call it, we were oversold really after the first week, but we didn't bottom for another 3 weeks, a long ways lower. So just being oversold does not mean buy. We have to have confirmed buy signals. And conversely, and probably a little more apropos to the current market, overbought does not mean sell either. So a market can get overbought and stay overbought for quite a while and continue to move higher all during that time. So here's a 2-year, no, it's not 2 years, a 1-year chart of the S&P. And I've just drawn a couple of support levels on there. Last week, we bounced off that 4,600 level, which was the low at the time. So that's near-term support where I'm looking for my drawing tool here. There we go. So that's near-term support right here, right on that low. And then the next support level is the old highs from the summer and August, right around 45.50 or so. And if we break those, then that would be a problem. We move back into what had been this entire kind of decline trading range, which generally bottomed around the 4,300 level. I mean, there's a lot of other support levels below that. You can see there's a double test back in here. Those are all ones, but I don't really think we need to be too concerned with those right now. I mean, if we get down below 4,300, we might want to take a look at those. But right now we're in an uptrend. The market's been in a very strong uptrend really for most of this year. And depending on your horizon, really since March or April of 2020, or even March of 2009, if you have a real long-term horizon. So right now the trend is upward. All the moving averages are heading that way. As we'll see in a minute, so are the Bollinger Bands. So the only resistance right now is last week's highs at 47.20, which are the all-time highs. And then, as I said, we have support at 46.30. And then below that at the previous highs around 45.50, or maybe just a little below that. So we are maintaining a core long position because of the bullishness of the S&P chart. But we do trade sell signals or even buy signals around a core position. We don't always hold a core position, but with the market trending now, having broken out the new highs, that's the way we're approaching things. Now, I mentioned Bollinger Bands. So we do work with the Bollinger Bands, so it's a slightly different calculation. When John Bollinger invented the Bollinger Bands, he defined volatility as the standard deviation of daily price changes. And while that seems logical, that's not what Black-Scholes and other mathematical people use. They use the standard deviation of daily percentage price changes, which is a slightly different number. And so we need to use that number because all of our indicators are based on, or all of our modeling is based on Black-Scholes. So it wouldn't do for us to have a different implied or realized volatility than Black-Scholes is showing. So the way these modified Bollinger Bands work is that we draw the plus and minus 3 and 4 standard deviation bands. And then when the market moves outside of those bands, we set up a signal, and the signal is culminated by moving back inside. So this has been one of our better indicators over the years, but we did notice it was giving a number of false signals as well, usually very small losses on the false signals. So we put an additional criterion on it, and that we call that Macmillan volatility bands, MVB, and that is that the original sell signal has to be reconfirmed. So I'll show you what I'm talking about here. So here's the current chart of the S&P, and you can see that on the high band there, the top band is plus 4 sigma, and then the next band inside that is plus 3 sigma. So here in September, we moved below minus 4 sigma, that's the lower band, and then back inside, that gave us a buy signal right there. And then we hold till we get to the opposite band. So we held that to here, and that exited that buy signal. But now we're watching, and now we've just had a sell signal, and I call it the classic sell signal because this is based strictly on the bands and not the further confirmation that we require for the McMillan volatility band signal. So there's that 4630 level we were talking about before, and the sell signal came the day we hit that, but now the market's been moving slightly higher from there. And so our confirmation is that we need to see it close below here. So if we close below there, that will give us the McMillan volatility band sell signal. And we had back here, chart's getting a little busy. Let me erase some of that ink off of there. Back here in in July, we had a sell signal. You can see we barely moved outside and then back inside. And the market did go higher, eventually came down and touched the lower -4 sigma band. So that terminated that signal, which was about a wash. But if you were holding options, of course, over that time, you would have lost time premium. So it really was a small loss for our accounts. And then this signal back here was, it never quite made to the lower band. So that one was eventually stopped out for a loss. So overall, though, this has been one of our better indicators, as I said, and so we're waiting for this to confirm the McMillan volatility sell signal by falling below 4630. If it doesn't, then we won't sell on this move right now. By the way, we can draw these bands on anything, and we do. And so we have a subscription service where you can be notified daily by email excuse me, of all the McMillan volatility band buy or sell signals in stocks, ETFs, and futures. So it's a wide array of things, but they work pretty well. And you can run them over different time frames too if you want to. We're mostly looking at daily bars. The next thing we look at is put call ratios. And we use the equity only put call ratio, which is all stock options that trade. That's what we use to predict the broad stock market. I'll show you why shortly. But the theory behind put call ratios was invented by Marty Zweig back in the 1950s when he was getting option volume from barons who would take ads from the put and call dealers back in those days, and they would list how many puts and calls they traded during the week, separately puts and calls. And then he would add them up, and he started to notice that if there was a lot of put buying, the market tended to go up after that. And if there was a lot of call buying, the market tended to go down after that. So I don't know if he ever made a specific indicator out of it, but we have. And so the trick is to quantify what too much is. Is there too much put buying? Is there too much call buying? And of course, today's market's millions of options, millions of stock options trade every day. So we have to try to isolate the extremes. So typically, just as a quick example, suppose we're looking at IBM and we're looking for the to calculate the put call ratio on IBM. So at the end of the day, we sum up all the puts that traded, and separately we sum up all the calls that traded. We divide the two, we get the put call ratio. So since puts are in the numerator of the fraction, an increase in put volume will make the ratio go higher. Since calls are in the denominator of the fraction, an increase in call buying will make the ratio go lower. So the ratio tends to move opposite to the stock price, because when are you likely to get put buying? Well, that's when the market goes down, but the ratio goes up. And typically when you're likely to get call buying, well, that's when the market's going up, or when the stock is going up. And so that makes the ratio go down while the market's going up. We keep a 21-day moving average just in case there's something to Fibonacci. And this is theoretically how things should look. We post over 1,600 put call ratio charts on our website every day in an area called the strategy zone. And that's another very cheap subscription, but it works like this. I think you need to look at both the stock price and the put call ratio to make an informed decision. So let's say we have a stock and it's falling like this, and it's falling traders are going to be buying puts during a trend. Of course, they're right. But eventually, the put-call ratio is going to peak out, and it's going to make a local maximum in the put-call ratio. That is a buy signal for the underlying stock. So then the stock starts to go up, and the ratio starts to fall as people are buying calls. Remember, calls are in the numerator, so they're forcing the ratio lower. Eventually, if you come over here, eventually we get to a local minimum in the put-call ratio, and that's going to be a sell signal for the stock. So that's the theory. If you're looking at a put-call ratio chart with the stock overlaid on it and you don't see this inverse symmetry, then perhaps something else is going on there, like arbitrage or another distortion having to do with a specific event like earnings or something like that. But if you do see this, then of course those are the better ones to trade. This is not current, but on top is the chart of the S&P 500, and the bottom is the equity-only put-call ratio, all stock options that trade. So you can see the inverse symmetry that exists here most of the time, and that's why we use the equity-only put-call ratio to predict the broad stock market. So here's the current situation, and the most recent thing we had was this is the strictly equity-only put-call ratio based on volume. So we had a peak in the put-call ratio. Remember, again, a local maximum. That's a buy signal for stocks, and that came pretty well timed right in mid-October, and we're still on that signal. So this ratio is still falling, and it will be enforced until eventually somewhere it comes down here and rolls over and goes back up, forming a local minimum, and that would be a sell signal. Obviously, since the market's been going up most of this year, the buy signals have outperformed the sell signals, but some have been, fairly well timed and albeit short-lived. So, like this one, for example. So we've had a number of sell signals, even in this one over here. That one probably came a little bit late. But you can see that the local maximums tend to occur before the market goes up, and local minimum sell signals occur before it goes down. So right now we're trending down. We might even say we're overbought, but remember, overbought doesn't mean sell. So we haven't had a sell signal yet. By the way, over time, these ratios tend to go higher, but that wasn't the case in the huge speculative market that we really even still are in since the March or April of 2020. But the ratio last February got to the lowest it had been in 21 years. And that's pretty amazing because, as I said, the ratio tends to go higher. It only resulted in a small correction in the market. So before it was alleviated. But the number of call buyers in this market, which is what makes the ratio go lower, is huge and remains huge. So if you're following the equity-only put-call ratio on the CBOE or something like that, you see similar statistics. So right now, there's been a lot of call buying again since mid-October, forcing the ratio lower, but it hasn't given a sell signal yet. So with the advent of computers, of course, we could do a little bit more than Marty could do back in the 50s, and that is calculate the dollar volume of the option. In other words, how many dollars are being spent on puts versus how many dollars are being spent on calls. I find this is a better ratio. And we do it this way just at the end of the day to save pricing, real-time pricing data, costs, and everything. And we take the closing option price and multiply it by the volume that traded on the option that day. And so we're calculating the dollar volume that way rather than trade by trade. It works just as well. We've not had any problems using this over time. So again, with IBM, we make that calculation, let's say, for every option. Then we sum them up for all the puts, separately sum them up for all the calls, and divide the two. And that gives us the weighted put-call ratio, or the dollar-weighted put-call ratio, some people call it. But what we're trying to get at is the dollars being spent rather than just the volume traded in these options. So again, you can see this made a local maximum right here in mid-October, about the same place as the others. The other one, the difference here is that this was much higher, indicating that there had been when this correction that took place in September was visible in the index, but was much worse in individual stocks. If you look at, like, say, Russell 2000 or something like that, you can see it was far worse. So that forced this ratio higher. And so sometimes the dollar-weighted ratio will give you a better feeling for how extreme things are. So that was a strong buy signal, and we're still on it. Again, just like the other one, it's still trending lower. You know, somewhere it will come down here and roll over and become a sell signal. That's inevitable, but it hasn't done it yet. So this again, like the other put call ratio, the standard we call it, remains on a buy signal. So just to summarize those buy signals from mid-October are still in place, and when the ratio does turn upwards, that will be a sell signal. By the way, sometimes people ask, well, how can you catch the turn, or you just wait for it to turn? It's too late. We have a computer analysis program that kind of looks at these like a chess tree would look at a chess program, and it can make a pretty quick call on that. So usually we can catch the signal if it just rolls over for like a day or two. Sometimes it rolls over for a day or two and it's meaningless. It just keeps going the other direction it was going. But so this program is pretty good. So when you read our analyses in our own newsletters, you'll see that we often refer to the computer analysis programs, and that's what I'm talking about there. Anyway, what do we actually buy when we're getting these signals? Well, I would say mostly I'm basing my purchases, especially on the index, on the delta of the option that I'm buying. If I'm talking about stock options, then I'm also looking at implied volatility. But here, we're talking about broad-based signals. So here we're buying SPY calls or puts normally. The delta of a call option is how fast it moves with a relationship to the movement in the underlying stock. So it ranges between 0 and 1. 0 meaning the option doesn't move at all, so far out of the money. Let's say that even though the stock rises 1 point, the option doesn't change the price. On the other hand, it can be as high as 1, meaning the call option moves right along with the stock. So obviously, the higher the delta, the more the stock, the more the call behaves like the underlying. Now, I'm in the business of predicting where the underlying is going. So I don't want to predict the underlying correctly and lose money on the call purchase. So I want my calls to have a fairly high delta. If you're buying calls with very low deltas, then you introduce a second, more difficult criteria to fulfill. Not only do you need to be right on the underlying, but you need to be right in speed of the rise and and the magnitude of the rise. So what we'll typically look to do is to buy a call with a delta of 0.7 or higher. If we're going out a little bit longer term, then I might just buy an that'd be an in-the-money call typically. If I'm going out a little bit longer, let's say like 3 months or something, then I might just buy an at the money to keep my costs down. But that still has a delta bigger than a half. So I'm looking to gain right away if the underlying starts moving with me. And of course, as the underlying rises, the delta of my option rises with it. So do I ever spread? On TV, all these guys spread all the time. It's just ridiculous. No real option trader does that. I don't know why they do it. If they think they're trying to tell people how to risk less or something, but it's not smart. So when you spread, you cut off your profit potential. And I typically mean by a spread, they'll do a bull spread. So they'll buy a call, let's say with a strike of 100, and then they'll sell another call with a strike of 105, and then that's their bull spread. Well, what you've done, once you get to 105, you're done making money. So you just cut off your upside. And yes, that can be somewhat useful if the options are really expensive, but most of the time is really quite annoying if the underlying goes up that high. So I only use a bull or bear spread when the options are expensive. If you look at our newsletters, when VIX is roughly near 20, we're spreading in SPY, not just buying outright. So I know that people that furthest will say, well, you know, you're risking less money. You're taking in that sell, but you're not. When do you spread versus merely buying a call? Your risk is 100% in both strategies. If you buy a call, risk 100%. You buy that bull spread, risk 100%. So if you're worried about dollars, then buy a few less calls than you would have bought bull spreads. But the risk is 100% in both cases. So spreading is a big waste of time and a huge hindrance when you get a nice move in your favor. So if you do spread, I would suggest that you keep the strikes as wide apart as possible. So right now I said in SPY, we are spreading because of the high level of VIX. So on a call spread, we'll keep it 11 to 13 points wide. On a put spread, much wider, 22 to 25, because of the out of the money puts are more expensive in SPY. And then once you're in the spread, in a bull spread or a bear spread if you're bearish, once that short strike is hit, once the market reaches your short strike, you're pretty much out of gas at that point in time. So I would suggest rolling the spread. Sell the one you've been in, take the profit, and buy a new one with the lower strike being the current price of the underlying. So don't spread if you can avoid it, and if you do spread, keep the strikes wide and keep rolling your position if it gets to your short strike. So I want to take a look at some individual put call charts. These are useful, and when we look at these, we typically are looking for real extremes, more extremes than we would necessarily require from the underlying equity only put call ratio. So here's one, triple M. We've been following this for a while. We got a buy signal in there, a local maximum on the put call ratio chart. But as you can see, the stock was sort of stymied right here. Was not able to get above 183. So even though we had this buy signal, we weren't acting on it until it closed above 183. Well, it just did that. It closed there Friday, still above there right now by a little bit. So we are buying triple M at the money calls based on this buy signal here. Here's another one, Bristol Myers Squibb. You can see how pessimistic on this last move down here in the market or in the stock. People went wild buying puts. They were really buying them heavily all the way up here to, this is a weighted chart, so we're talking about dollar weighted put call ratio. And it reached, let's say, let's call it 120, meaning $120 were being spent on puts for every $100 being spent on calls. As you can see from the chart, that's very high. It never, other buy signals that worked out okay. There was one back here, and then another one back here. By the way, I said that we only use the extreme. So when I'm looking backwards over time, I want to be sure that the height of this put call ratio is in the top 10% of all the previous heights of put call ratio. So these little bumps along the way, like say that, would not be a buy signal under this methodology. So we look for extremely high or extremely low put call ratios when we're dealing in stocks and futures. Here's another one. This is a conditional trade in ConocoPhillips. Looking here, we see we have the sell signal. Actually, I had it in late October, but the stock has refused to break. It's been bouncing off this like 72 level a few times. So we're not going to take a position here unless it can break 72. I see today that it's at 73, so it still hasn't done that yet. So we're watching this one, and eventually we'll either take the trade or cancel it if the put call ratio changes course. We can do trade futures options on the put call ratios too, or use the futures options to create the put call ratio. So this is gold. This isn't a real recent chart, but I'm just using it as an example. The bottom line there is the put call ratio based on the gold options that trade on the old COMEX, not the ones that traded in GLD or something like that, just the futures options that trade on the COMEX. So that gives you your local maximums, local minimums. But what you can do with those, once you get a signal, then you can trade GLD options if there is a corresponding ETF. And most of the futures do have a corresponding ETF, so you don't necessarily have to have a futures account to utilize this information. Now, here's one that we have been in lately. That's this cattle. And you can see a couple of times we've got some big extremes in cattle. This one was a buy, kind of works its way slowly higher. And this one seems to occurred in around the 1st of October, seems to be doing about the same thing, working its way slowly higher. We will stay in this as long as this ratio is declining. Once it rolls back over and forms a local minimum, then we're out. But there are no real ETFs exactly mirroring cattle futures. There are some mirroring the entire meat complex and things like that. Very illiquid, by the way. So we're in this one trading the actual live cattle futures options, or you could trade live cattle futures as well, of course. So continuing on, our next topic is market breadth, and breadth is very simply, just the number of advancing issues minus the number of declining issues on any particular day. And we can do a couple of things with it. First, we can keep a cumulative total. This is a pretty popular thing to do. A lot of people do it. And then also we can compute an oscillator. Now, what we noticed a number of years ago was that the New York Stock Exchange data, which is what most people use for these calculations, is, I'm just going to say, overly optimistic. It's often giving you buy signals or failing to give you sell signals. And so we took a closer look at things. Really, this was about 20 years ago. Realized that a stocks only advanced decline line is much more interesting. And the New York Stock Exchange does publish something called the operating companies data. But we had a better thought, and that is, why don't we just look at what's happening in optionable stocks? I mean, we have them all in our database. We look at them every day. And now there's a lot of them. They've been adding them at a tremendous rate in the last year and a half, especially since SPACs got rolling. But right now there's over 6,000 stocks with options. So we use that data as well. So we calculate these oscillators and the advanced decline lines using both sets of data. So here's the stocks only oscillator going all the way back to 2013. By the way, our oscillator is calculated by saying today's value is equal to 90% of yesterday's value plus 10% of today's difference in advances and declines. A typical, very common way to calculate a breadth oscillator. So if you get below minus 400, you're oversold. You can see, since 2013, the market's mostly been going higher, doesn't get oversold too often. It did have these two monster oversolds. This is 2018, right before Christmas there, just a nasty market. And this is, of course, the pandemic low in April of 2020. But again, remember we said oversold is not being bought. So don't actually buy until it stops being oversold, like in here. So you miss the absolute low, but then you catch a bigger trend going forward. On the overbought side, the market's been overbought a lot of times since 2013. And by our definition, again, it goes above 400 here. But you can see that this the run coming in early 2019 that came off that extreme oversold, that's a big solid fat red area, very overbought there for a while, and then eventually gave a sell signal. Didn't really result in a big decline, although it's a little hard to tell from this 13-year chart. Here more recently, we've had a number of overbought conditions that are existing, and in fact, we're actually on one just right now. So again, overbought does not mean sell. So we had a buy signal back here that was came just down far enough to give us a buy signal in mid-September, and we've kind of been on that. This is September 2021. So we've been on that for a while. We got very overbought. Things looked good. I mean, when the market's making new highs, you want breadth to be overbought, but then it started to slip, and so now I'm not happy with the way breadth has been behaving in this market. It's been lagging. It hasn't been really keeping pace. And in fact, today, we're on the verge of a sell signal. So those buy signals in our breadth oscillators occurred in September. And these are our most sensitive indicators. They flip back and forth. You can get whipsawed on these things. But right now, if we have a day or two of negative breadth, we're going to get a sell signal. And as you might suspect with today's lackluster action, we are having negative breadth today. So looks to me, and of course the market's not closed yet. A lot of stuff can happen in the last hour, last half hour. But, you know, it's interesting. A breadth doesn't change too much in the last half hour. A lot of stocks make a directional move early in the day and then just kind of sit there for the rest of the day. So it's hard to move breadth late in the day unless there's a big move in the market. But it does look like we're going to be on the verge of sell signals here from our breadth oscillators, perhaps as soon as today or maybe tomorrow. Now, cumulative breadth is another thing. That's where we just add up the advances minus declines. That's the total for the day. We just keep adding that up over time. So for a long time, breadth was not really keeping pace, but then it began to. And so in recent years, we've seen the cumulative advance decline lines make new all-time highs along with the stock market. And when they're doing that, you know, that's fine. And we also follow the volume breadth, so cumulative, so volume on advancing issues minus volume on declining issues. We follow that. So recently, these have all made new all-time highs. Last week before. So that's good, and it does break a long negative divergence that had been dating back to June. In other words, the stocks only cumulative advanced decline line had made a new high in June and then just fell off from there. S&P made a new all-time high about 30 times after that. So it's a big difference, a big negative divergence. And a lot of traders have noted that over time in bear markets, there's a negative divergence typically that occurs before a bear market happens. Of course, what they don't tell you, there's a lot of times when negative divergence happens and then it just goes away and they don't have a bear market. And that's sort of what's happening now. So we had this negative divergence from the middle of June till the middle of November, and now it went away. Last week, the cumulative advanced decline lines went to new highs. And so my question is that enough? Is a 1 or 2 day move to a new all-time high enough to wipe out 5 months of divergence? In looking at past occurrences, it probably is, but it's certainly enough to stay alert. So a negative divergence, by the way, is not a sell signal. They say that the market negatively diverged through all of 1928 and 1929 up to the crash in September, October of 29. So obviously, shorting in the market in the early 1928 would not have been a great idea. So negative divergence just means, you know, stay alert, raise your trailing stops, don't ignore your stops, things like that. It's just a heightened state of awareness. Now, the fact that we've made these new all-time highs recently, I don't consider that predictive either. Some people will tell you that it is, but if you go back and look at when these bear markets started, the cumulative advanced decline lines often have been at new all-time highs recently, right before the thing broke. And so, you know, it's not predictive. There is a predictive thing. We will get. It's not a play right now. So it's really only useful as a negative divergence, which, you know, probably is not in play right now since we just made the all-time highs last week. So let's spend a little time talking about VIX and the VIX indicators. The first thing we should know, or you should know, is that the trend of VIX is important. The stock market trends opposite to VIX. The longer the time frame, the more the opposite the trend is. But even on a daily basis, it's about 75% of the time opposite. And so it's important to understand the trend of VIX. Secondly, spike peaks in the VIX are buy signals in the underlying buy signal for the stock market, not for VIX, actually sell signal for VIX. So let's take a look at these. By the way, when VIX is low, it's overbought, not necessarily bearish. Now, what do I mean by low? Well, typically in a bull market, and this has certainly been a strong bull market, typically VIX will fall to 12 or even 10. That happened in many times, over the course of the years, 2006, 7, for example, 2017, 2019, things like that. But it hasn't happened here recently. So if it does, don't get overly upset about it. When VIX gets low, that just means it's overbought, not a sell signal yet. I'll show you how the sell signals occur. So here's the current VIX chart. There's a couple of things on here. First of all, those Bs are a trading system that we built around spike peak buy signals. The red Bs are successful trades. The blue Bs were stopped out for a loss, typically a small loss, especially when the blue is followed by a red quickly, like here and here. Most recently, we had the buy signal here in October, right on October 1st, actually, that right there. And then that signal basically has expired. We have a trading system, as I said, and it lasts for 22 trading days. So that was a nice trade. Market's way up since October 1st, and we're out of that trade. And we did not get a new one. This little move right here was not, by our definition, the way we set up our trading system, that is not a spike peak. So VIX has not spiked since then. And today, VIX is only up 40 cents. We require a $3 rise in VIX over 3 days or less in order to consider it to be spiking. So VIX hasn't spiked recently, and it's not spiking. Two chartreuse circles there are what I call change of trend. So we look at where VIX's the 20-day moving average is in comparison to the 200-day. And we also look, of course, where VIX is compared to the 200-day. And if they're both on one side or the other, that's the trend. So, for example, right now, here's the 200-day, here's the 20-day, and then there's VIX. So 20-day and VIX are lower than the 200-day. That's a negative trend for VIX, which is positive for the stock market. Remember the trend opposite. But right here, we did have what I thought was going to be a pretty serious sell signal in that VIX and the 20-day moved above the 200-day. But it didn't happen. It was quickly stopped out by reversal back the other way. So we did put some trades on there, and we did lose on those. Now, I will tell you that normally that's a very strong sell signal, and we got a sell signal like that in late February of 2020 before the market broke down. So when VIX starts to trend higher, it usually is worth paying attention to. In this case, it didn't continue the trend, it came right back down. So just to kind of review here, VIX is not on a spike peak buy signal now. That last one was successful, but it expired. And so we're waiting for a new one to set up. Meanwhile, the trend of VIX is positive right now. That means that VIX and is positive for stocks. That means that VIX and its 20-day are below the 200-day. There was that brief reversal, but it came right back. So one of the things that traders have pointed out, and you read about this in the paper sometimes, is that VIX is really kind of high for considering the market's been going up for so long. VIX is above 15. And the fact that VIX is above 15, indicates a couple of things it could indicate. One is that VIX is based strictly on SPX options. So that means that big money is holding VIX higher because those only are traded by big money. And if they're probably buying puts, that's typically what happens. They're buying puts on SPX that inflates VIX. So if big traders are worried about the market, is that a contrary or direct signal? Some people think it's a direct signal, and so they'd rather they want to see VIX come back down, get lower to match the bull market. Recently, I would say within the last week or two, some theories have come out of Susquehanna Trading. That's an option-oriented trading firm that indicates that they think VIX is holding up here because of all the call buying that's been taking place. It keeps forcing market makers to pay up for calls to hedge the ones they're selling to the public, and then that eventually finds its way all the way around to SPX. So they're paying up for SPX calls. Frankly, I'm not buying that argument, but I just want to present it to you. It was even mentioned at Barron's this week. So In any case, if you look at a chart of VIX, which we did, I'll just back up there for a second, you can see it keeps bottoming around 15 and hasn't been down to this typical 12 to 14 or even lower than 12 area. And I'm thinking that VIX is going to have to get down there before this particular super bullish phase in the market that started in April 2020 before it ends. And typically when VIX does get down there, it doesn't end right away. So this probably more to go on the upside from this, just indicating that, you know, the VIX bulls have not thrown the towel in yet. So if for no other reason. Now, you can't trade VIX, but you can trade the VIX futures and the VIX options. So it bears to pay attention to those. And so we can look at what I call the construct of VIX. So if we look at VIX, let's say VIX is trading here, and then we look at the November futures on VIX, let's say they're trading here, and then the December futures, January, you know, February. The term structure of these futures, if it's sloping upwards like that, and they're also trading higher than the price of VIX, that's bullish for the stock market. So that's what is the case is the case most of the time, and it's the case right now. So this is what I call the construct, and it's bullish for stocks. On the other hand, if it goes the other way, as it did in you know, March of 2020, VIX gets up here, VIX rises, but the futures are all down here like this, and the term structure is sloping downwards. That's bearish for stocks. And when it crosses over from one side to the other, that's definitely, you need to be paying close attention when that happens. I'll come back to that point in a minute. So, as I said, it's bearish when the term structure slopes downwards. So here's, I took these prices this afternoon. VIX was trading at 17 at the time. It's actually a little bit lower right now, I think. Yeah, 1670, but it was 17 mid-afternoon today. And the front month future is November, and it was trading at 1741, and its premium is 41. So if we subtract the price of the futures, you subtract VIX from that, you get the 41. Now, the reason I have that white with the asterisk is just to tell you that you don't really completely have to understand how these VIX futures work unless you're going to trade them. But VIX options are based on VIX futures. And if you're trying to trade VIX options, you should spend some time learning about this. But just for the general purposes, know that the November VIX futures are based off of the implied volatility of SPX options that expire in December. So it's a little bit of odd thing there. There are weeklies and things like that. Anyway, you can see that the various futures prices going forward in time, each one's higher than the other one. And that results in the premiums being large too going forward. So these are all trading with a large positive premium, and they're all trading, and the term structure slopes upwards. So this is the positive condition for stocks that I mentioned before. Now, these futures have like a time decay. And so eventually they'll come down to meet VIX if nothing else happens. Don't get fooled into thinking that, you know, since futures are higher priced out in March, that traders in March are expecting the market to go down. That's not the case. Although I have heard people say that on television too, obviously not understanding what's really going on. So it's just, you don't even have to worry about that specifically. As long as this term structure is sloping upwards and the futures are trading at a premium to VIX, that's bullish for stocks. Now, if you don't have, you can find these futures, by the way, on the CBOE website, but also on any quote machine, the CBOE publishes these indices, different volatility indices. So VIX is a 30-day index. That's the most common one, but there's also this one, a 9-day, a 3-month, a 6-month, and a 1 year. And these are also current prices I put here, and you can see that they slope upwards too. So this is just another way of getting at the same thing. An upward sloping term structure is positive for the stock market. Now, so, well, I just said that. So I had indicated before that it would be bad for the market if these futures inverted in price. So the November futures are going to expire on Wednesday, day after tomorrow, in the morning. So at that point in time, December will become the front month VIX future, and then we'll be comparing its price to January, the second month. As long as December is trading at a lower price than January, everything is fine. But if they flip, if they invert, that's a sell signal, and some of those inversions have been your best tip-off to something really bad coming, like February of 2018, when the market seemingly collapsed out of nowhere, but VIX did explode, and this inversion did take place in advance, and you had time to act. So I don't ignore that sell signal when it happens, and I'm not in the business of ignoring sell signals anyways, but that's one you should definitely act on if it happens. And as I said, we need to see it settle there. So an intraday move is just a warning sign, but if they actually settle there, close there, then that's, you'd want to take action. So let's just summarize what we've learned so far, what we've seen so far. The trend of the SPX chart is bullish. It's making new all-time highs with some regularity. There is that classic modified Bollinger Band sell signal in place, but it has not morphed into a McMillan volatility bound sell signal yet. Put-call ratios are on buy signals. The breadth oscillators were on shaky buy signals when I created this chart. They might be rolling over to sell signals today. Volatility, the trend of VIX is bullish, and we don't have any spike peaks in VIX right now. So the trend of VIX, meaning that VIX is trending lower, is bullish for stocks. And the term structure, what we just looked at, is that's bullish for stocks too. So basically everything here is on a buy signal except for that perhaps modified Bollinger Band, and that won't really give a confirmed sell signal unless we fall below 46.30. So we're maintaining the core long position, and we do have some working sell signals out there in our daily newsletters. They will, the conditions to meet those are varying, but right now none of them have been met. So it's still a pretty bullish scenario right now. Market's acting a little tired, which is being most clearly evident through the poor breadth that we've seen recently. So I want to just mention two other things. One is there is a realized volatility sell signal that we pay attention to also. We can compute the 20-day historical volatility of SPX, and if that falls below 8%, that means the market's just gotten in too tight of a range, not going anywhere. That's an overbought condition. And when it rises back above 11%, that's a sell signal. So this is this is mostly 2020, actually 2019 and 2020. And on top is this historical volatility 20-day. And here's 10 is this line right here. So you can see here it fell down below 8 and then rose back above 10. That was a sell signal. Decent work. This one, of course, happened right before the big pandemic crash, so that was a pretty good one. Then there was another one here in September. So it was working well back then. This year, not so well. All these have been stopped out. They get stopped out when it rises above 10 and then falls back again. Now, obviously, if the volatility of SPX is rising, typically there are some problems in the market, but haven't really been anything big to worry about. So now we're setting up another one of these. The 20-day historical volatility of SPX has gotten down to 7, and that's current. So if it rises back to 11, which is going to take the market going down a little bit, so this would not happen, all by itself. If it gets back to 11, though, that will generate another sell signal here. Obviously, based on the fact that it hasn't been working so well this year, we're not taking huge positions based on this, but it would be worth paying attention to. And then finally, I want to wrap up with some talk about seasonality, because seasonal patterns are, I think, very valid. And there's been a number of them during the year, but we're coming up now to the end of the year. And there used to be like 3 separate seasonal patterns, but now they've sort of blended all into one. So we treating them like one. And that's basically that from the day before Thanksgiving till the second trading day of the new year, it's bullish, especially for the Russell 2000, for small caps. So that encompasses what used to be called the post-Thanksgiving rally. And even in a bad fall like 2018, there was a post-Thanksgiving rally. So that's an old trading system that people had. The problem with that is it's hard to determine when to get out. Then there's the January effect, which is basically when small caps outperform large caps. And it used to take place in January, but like everything else in the market, if something works, then people start front running it. And so the January effect has actually moved into December. So the post-Thanksgiving rally might get you started, and then you run into the January effect, and then eventually you hit the Santa Claus rally. And this is the well-defined one that Yale Hirsch created. That's the last 5 trading days of one year and the first 2 trading days of the next year. Typically, that's a very bullish period. So these 3 kind of run together, and we trade them using the Russell 2000 ETF options, IWM. So if you combine all 3 of the last 32 years, this has been you've had 26 wins, 6 losses. Your average of the wins and losses is a 3% gain over that time period. So 3% gain or so in a month. Last year was the biggest gain in the Russell on record, not percentage-wise, but point-wise. So last year, if you go look at a chart of IWM, you'll see that it was taking off pretty strongly right after Thanksgiving and just continued all the way into the new year. Now, IWM has struggled this year, but again, it's just now trying to break out. And so we will be playing this trade. There's no reason to skip this one. And just a couple of other, these are not something you probably want to trade, but it's a byproduct of doing that other research. So as you come into Thanksgiving, the market gets very illiquid, and sometimes there's big trading days. So they're always talking on TV and things about, well, which day is the best to trade, what have you. They're really not, none of them are all that great to trade. Here's Monday. Over the last 31 years, 16 wins, 15 losses. Wednesday maybe a little better, but Tuesday was actually the worst day overall, even though last year it had a 58-point gain. So basically, it's just random noise here, nothing really going on. And also the day after Thanksgiving, I know some people have some systems they talk about with that. Again, nothing happens. It's overall a 0.2% gain. This is all in the S&P. 18 wins, 13 losses, just nothing. Stay home, go shopping, whatever. Don't bother trading that particular day. So I mentioned the special that we're offering, and that's you can find that as well as the PDFs of this webinar at optionstrategist.com/MetaStock. And we're offering either 50% off on the new home study course, which is 14 series. We recorded them throughout the year last year, or in the last year. Or our top newsletters, there's 3 of them. You can get a 50% discount on any of those. It shouldn't ask you for a coupon code, but if it does, that's the coupon code. So just as brief, the Option Strategist newsletter is the one that has been published for 30 years. Complete track record is available on the website. The Daily Strategist is a twice daily newsletter that basically covers the same kind of strategies, but just in much more shorter time frame and in more detail. And then Daily Volume Alerts is where we we trade all the systems that we talked about here today, but we also look for unusual option volume as a potential clue to takeovers or other things that might be going on. Obviously, past performance is not a guarantee of future results, and there's plenty of risk in all of these forms of trading. We also have a YouTube channel. I invite you to become a subscriber on that. We record new market comment every Monday morning. And we have 2 other newsletters, which are much newer. One is Daily Put Writer. Like a lot of people enjoy writing out of the money puts for essentially income. It's replaced covered call writing as a strategy. And then we also have a special situation alerts thing where we're just looking for unusual situations in the market, and both have been doing very well as well. So that's my email address. If you have any questions, shoot me email. Here's the offers on this website, optionstrategist.com/MetaStock. As I said, you probably won't need the coupon code. You shouldn't need it. And if you're interested in our money management, there is a slightly different website you can go to, look at some track records and that sort of thing. So, Jeff, I'm going to shoot it back to you. Were there any questions? I didn't really see.
I don't have a lot of questions, but you can go to MetaStock or optionstrategist.com/MetaStock to take advantage of that. I do have a question for you, Larry.
Mm-hmm.
Will you help me select the next contest winner?
Sure.
I just need a number between 0 and 10,000. Actually, let's do 1 and 10,000. 0 won't work.
You don't think I was going to do that, did you? All right. How about 1,317?
Okay. And okay. That'll be the winner of the next contest. Not a lot of questions. Great job today, Larry. I appreciate you coming in and spending a little bit of time with us.
Okay, thanks, Jeff. Always glad to.
Okay. All right, and we'll see you at the next one. Okay. All right. Let's go ahead and kind of change the presenter back over to me, and I'll go ahead and show my screen. And while we're doing this, let me go ahead and turn on my lights and my camera, and we'll figure out who won that prize. So the number he gave us was 1,317. Let's go ahead and go in here. And let me just go to that 1,317. Hillary J. Also here in the USA. Hillary J. You have won the prize. You might be wondering, what prize did I win? Well, let me tell you about the prize that you won. Hold on just a second. Let me go ahead and copy this over here. And the prize that we are giving away right now is Wendy Kirkland's Wealth Building Weekly Newsletter. And so let me tell you a little bit about what that is. This is a full year of Wendy's Wealth Building Weekly Newsletter, which features a list of every stock flagged by Wendy's weekly system. And it will give you specific trade recommendations. They're posted online each Wednesday, and they will email you directly with that information. So it's a really, really cool prize. It was valued very highly, but I'm not seeing the actual dollar value on it. So in order to claim that prize, what will happen is I'm going to email you directly, and we'll confirm some information from you, and then we will send that information over to Wendy Kirkland's company, and they will actually go ahead and kind of give you the prize. So congratulations on winning that. Good job. Thanks for registering for the event. Let me make a note of that real quick, just because if I don't right now, we don't want to forget. Okay, there we go. If it's now permanent. All right. Let's go ahead and say thank you to Stocks and Commodities for sponsoring the event today. We appreciate the sponsorship that they've done. Again, they've been great sponsors since the very, very beginning, and I appreciate their work. I want to also say thanks to the CMT Association. The CMT has been sponsored like 3 or 4 of our summits now. They're a really, really good partner, very, very well-esteemed accreditization organization, and you can find out more about them at cmtassociation.org. And our next speaker is a very good speaker. I really like to listen to Bubba. He's very excited. He's very energetic. We love having him on here, and he's a really, really good talker or speaker. And so, Bubba, let's go ahead and bring you on here.
Hi, Jeff. How are you?
How you doing? I'm good.
I was going to come in quiet, but quiet is not my quiet is not what I do. So
I don't think I could imagine that as the as an adjective that has ever described you, Bubba.
are you seeing my screen, by the way?
We are. And so what I'm going to do, I'll get out of your way. It's your turn. Go.
Is it my turn? Do I have to start broadcast, or you're already starting it?
We're going. Yeah, the broadcast is going.
Okay, so I can just get rid of this little box in front of my face.
Yeah, I'm surprised just asking if you want to start the broadcast, but
Okay, what's up, everybody? Welcome aboard, and nice job by Larry McMillan. And in fact, every floor trader back when I started bought his book, Options as a Strategic Investment. But in the meantime, here we are, and I have evolved from a floor trader to a screen trader or a retail trader, and of course, an educator as well, after spending many years on the floor, which I'll tell you all about. But in the meantime, today we're going to talk about algorithmic trading and using mini and micro futures, which is what we use. I mean, we have a number of different ones. We use equities as well, but today is about futures. And if you have any other questions, you can always email me later, and I'll be happy to answer any question, as I will here today. But I know I always run short on time. So in the meantime, let's get right into it. And the first thing that I have to always share is the disclaimer, which you kind of saw right at the end of Larry's, but it is, options and futures involve risk, and past performance is never indicative of future results. So you have to be aware of all of that. And of course, my name is Todd Bubba Horowitz, and I've been trading for 43 years. This will be my 44th year coming up. And I regularly contribute to all the major networks. And every recommendation that I make, I trade myself. Okay. Nothing leaves my office unless I am in it as well, because I don't believe in sharing things that I don't believe are going to work. So if I believe they're going to work, I'm going to use them with you. In the meantime, if you've ever heard me speak before, I still speak in my Chicagoese, and there ain't no such thing as a free lunch. Nobody is giving away anything. Everything we do in this industry takes work. It takes disappointment. It takes excitement. But the best thing you can possibly ever do for yourself is to remain even keel and understand the models of what you are trading, because at the end of the day, it comes down to very simple things. And normally, emotions are the worst. And of course, if you look in the mirror, that is typically your own worst enemy. But today we're going to just talk about what are our objectives, manage futures. Everything we do, it's always the math. Okay, our portfolios, how you can take advantage now. And, as always, I will take any questions you have on any form of trading the markets, because as I have said, I've been around for quite a while, and I understand all markets, because at the end, all markets are really the same. And, every champion was once a contender who refused to give up. And this is what trading is about. Okay. It's about honing your skills and putting you in the best position. Now, the hardest part for every trader to recognize and to deal with, and that includes investors as well, is drawdowns. Okay. Now they're going to happen. Okay. There is no way that you're not going to go into losing streaks. Okay. It's a natural part of life, because if you at one time would just compare your own life and either your business life or your personal life, you go through ebbs and flows. Hopefully, the ebbs always make for better flows, and you make new highs, or things get better. And that is what we base our whole models on, is the continuation of every drawdown is really just another opportunity to get to new highs. And how we are using, or what we are using to do this, is our proprietary algorithm. And the algorithm is a mathematical formula which was really developed, through all of our different types of trading models. And of course, the things that I teach, because, I also day trade myself as well. And there are things that we use in all of our models that we could then actually automate and make it so that you could use these things on a regular basis and not have to get involved with the emotional side of trading, because of course, as we know, trading is emotional and people get emotional. And no matter what you say to me or what I say to you, we all have some sort of opinion. And I would bet that many believe that the markets are about ready to sell off. And as I say, let the market tell you what it's going to do. You don't tell the market what to do, because the market itself is absolute. Okay. It is the ultimate scorekeeper. Now, in mechanical trading, it's what we're doing. Okay. The major reason traders lose money in the long run is because they miss trades, because they get their opinion involved. They let losses run that they are in, and they take profits far too early. Now, I'm sure that nobody here has ever done this, but I've witnessed, okay, people that bought a couple of different, let's say, stocks, for example, and they bought one that they wanted to invest in for their IRA and one that they wanted to trade for a day or two. And what happened is the investment stock went straight up and they took the profit and ran away. And the trading stock, in which they should have taken their loss, they didn't. And they're holding it in their investment account, hoping that someday it comes back. Well, one thing about trading, you get rid of the weak and you stay long the strong. But our method does none of the three. Therefore, our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run. We always let profits run. That is because the algorithm was designed just to do exactly those three things. So why do you want to trade micro futures? Well, you know, the whole advent of the micro, okay, and I'm sure some of you have had a bad experience back in the day in the futures world when it was a churn market, you know, churn baby burn, and the pork bellies and all the crazy crap that went on way back when. But now markets are obviously extremely efficient, and there is no more of that nonsense because of all the rules that have put it into place. But when trading futures, you're getting great capital efficiency. Okay, you are trading and representing many of the same things as you are within the spiders, the IWMs, or whatever futures that you're trading. You can diversify the asset classes, which is important when you're building a portfolio model. The fees and commissions are lower. Okay, but the biggest thing is there's no FINRA day trading regulations, so you never get shut out. Okay, because you don't have that minimum $25,000 balance, and you cannot day trade. Plus one more factor, which I forgot to put here, but futures are also taxed at a much better rate than equities. Okay, so you get more use of your capital and you pay less of a tax rate. And I always screw up the number. I know somebody here will tell me what it is, but there is 1256 or 1056 income, whichever one it is. I can't ever remember. I've missed it maybe 1,000 out of 1,000 times, but it's one of those two, and I let my accountant take care of it. But micro and mini futures continue to grow. And if you've watched, they started out about 2 years ago with the mini S&P, IWM, NASDAQ, and the Dow. Okay, and now on December 6th, they're introducing the Ethereum micro. They already have the Bitcoin micro. So those became part of our portfolios because I'm also a believer in the crypto world. And the bigger that it gets, the more that we're going to be involved in it, because it is a great form of, first of all, trading, and second of all, of currency. And it's the new hot thing that is now being run on exchanges, which gives us a much greater advantage. So we get not only no pattern day trading rules, but we get also some tax advantages for trading them. And we get the cleanest products. You know, as you were listening, if you were listening to Larry, you heard him talk about volatility. Futures do not get affected by implied volatility because they are pure. They are absolute traded the way they are. Now, we're not active traders, so let's not get worried about that. We don't do that. Now, there ain't no secrets in this business, okay? You have to just follow rules, okay? You've heard and you've all succumbed to the secret indicator. the automatic guarantee that it's going to make money. First of all, there is no guarantees. Okay, there is no guarantees. The guarantee is that if you're diligent and you follow your rules, you have a very good chance to make money. Okay, if you vary and you become opinionated, you end up making nothing. You end up busting out, which over my years I have seen on the floor. I saw over 2,000 people break themselves because, again, you cannot be opinionated. You must trade the price action that is in front of you, that the market is telling you, because the market is telling you exactly what it's going to do. It is up to you to listen. Okay, so I will share the secret of success, and the secret of success is hard work. The secret of success is understanding to let the markets do what they're going to do and follow your rules. The secret of success is also the logic of probability. Okay, because our models are built strictly on probability. Okay, we are playing a probability model. Okay, and for you game players, okay, there are certain games that have a mathematical certainty to them. Okay, and those games that are off the top of my head are gin, bridge, poker, and backgammon. Now, every one of those games, the better player is going to win over time. In any given session, there is no guarantee of victory, but given enough time, okay, because the laws of large numbers will always play, which is why you have to use the logic of probability. And one of my favorite, and I get testimonials all the time, but this is one of my favorites because this is from a professor at Cornell, and I'm supposed to speak there. And I always laugh because I'm a high school graduate. But anyways, yes, Todd, very impressive market price analysis. Yours is the best in the world, most consistent methodology, most rigorous. Drop the emotions. Don't listen to the pundits who comment casually on based on reading the news. And of course, that is one of our things, which you'll see a little later, is if you trade the news, you automatically lose. You have no chance to ever catch the news. And the reasons are, it's very simple. Okay. Companies like Goldman Sachs, JP Morgan, all the big banks, they've already calculated the news. They don't get inside information, but there's enough information out there that they're paying millions of dollars a year to their research people to compile those numbers the same way that they're compiled when you see them. So the tape itself, this is not 1980 where we have, 50 traders in a small room with 2 LED screens. This is 2021 where everybody's carrying a computer as powerful as the one that launched the first Apollo rocket in their back pocket. You can check the market anytime you want. So the news is a waste. Okay. Now, professionals, use rule-based trading systems. Why? Because they make it very easy to trade. They take all of the guesswork out of markets. Okay. Again, just because you're following the rules does not guarantee the next trade you make is going to win. What it guarantees you is that your consistency, will win out. And if you can determine certain things, which we will also talk about, you will put yourself in the position to make money. Okay. And after all, you may like to hear what I say, but you're here to make money. Nobody is here just to listen. Everybody is here trying to figure out the best way for them to make money. When you're using a system like an algorithmic system, you have to be rules only, nothing subjective, and no gambling. If you're gambling, you are losing. It doesn't mean you're losing on every trade. It means net overall you're going to lose. You cannot have an opinion when you're using an algorithm. You're not timing trades. Trying to time a trade is an impossibility. It is a matter of luck instead of a matter of skill. You must make every trade that we give you based on your portfolio. If you have opinions, if you're emotional, if you have no facts, if you're handpicking, you will lose. It is that simple. Okay. Again, I'm a simpleton. I try to make things as to the simplest level because I know better. And again, after doing this for 40 years, 44 years starting, okay, there's no reason for me to change. It has provided me a nice living for my family and myself. And I only teach because I enjoy, not because I need to do it. Okay. Now the rules. Okay. Now, again, if you can't follow these rules, you should not ever become a member. Okay. To win at algorithmic mechanical trading, you must have no opinions about the markets. Zero, none, nada. Now, I always clarify that because I always have an opinion, right? Because I've got to talk on TV. Okay? But I never put my opinion into my trade, number one. Number two, my opinion, I shade it to where the algorithms sit at the time I'm on TV. If you violate rule number one, you will lose money. A trend is the basis of all profit. If you do not understand this, you should not be trading. If you pay attention to the news, you will lose. Okay. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money because the market knows how to punish those who have so much hubris. We never sell at the top. Okay, I can't pick the top. I'm lucky if I can pick my nose. Okay, that is for fools who insist on being right. Okay, as opposed to making money. Tops and bottoms, leave it to the people that want to blow up. They will make the market for you. They will create the price action for you. Okay, they're the ones that you're going to benefit from. There's an old saying on the trading floor. Okay, if you can see somebody's tonsils, give them whatever they want. They're wrong. Okay, that is the panic of markets. It happens every day, all the time. If the market is going higher and you are short, the market is right and you are wrong. If you're long and the market is going down, you are wrong. That's all. It's that simple. The objective in mechanical trading is to mirror the market. You want to always be doing what it's doing, and if you do, you will put high probability on your side. Trend or mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. And that is exactly how market makers made money, is by not picking tops and picking bottoms, but by following the rules and trading the paper that gave them a slight edge to the market so that they could make money. Now, our objectives are simple. We want to make money. Okay? We try to keep the variance small. Now, we just came out of a pretty nasty drawdown. But when we were at the bottom of it, I did say to my members, I said, look, we're probably going to make new highs. Okay. And certainly in some of the portfolios, we have started to already make new highs again. In those portfolios, and it's not new highs to the market, it's new highs to the portfolios because they're not always in the same direction. And there are obviously different products. But we want to keep the variance very small if we can. You know, obviously there's no guarantee that we can, but that is why they're designed the way they are. We want to try to keep some balance and also keep the drawdown small because we know they're coming. Okay, that is not, the question is never when. And actually, when you're going in some of my training sessions, I can actually give you a pretty good idea of one maybe around the corner. Just like I can give you an idea of when it's time to press up. And we try to use organic growth when we are pressing our portfolio, which means when you see the portfolios, we will have certain restrictions of how much capital it takes to trade those. Okay. And when you trade those, you want to make sure that you have double that amount of money if you're going to add on to that portfolio. Okay. Now, managed futures and algorithmic trading, you know, Richard Dennis, if you've ever heard of the Turtles, okay, was a friend of mine. Richard Dennis and I traded together on the floor of the CBOE back in the 80s. Okay. And he said, among many good things, but a good trend following system will keep you in the market until there's evidence that the trend has changed. Now think about that for a minute, because it is as valuable of a statement as you will ever get. Okay. You know, just because a certain stock or certain thing is happening, it does not mean the trend has changed. Okay. Successful traders will always follow the line of least resistance, which is with the trend. The trend is built off of those things, of people trying to change that trend. Now, if you've ever heard of a family office, you know, family offices are basically restricted to the extremely wealthy in the world. Okay. They get a lot of special perks. They get a special deal. Well, obviously I can't create a family office, but we create our own family office of a bunch of traders of different, you know, worths and lives that work together to try to end up at the same goal and make a lot of money. Okay. That's our goal, is to make a lot of money. Our goal is to continue to grow. Our goal is to continue to build. So we build our own family office, so to speak, so that, you know, we can have people, which goes to our chat room, which everybody's involved in, and they're talking, going through what's going on in the markets and so on and so forth. But again, it's the environment you can try to get into. And of course, our algorithms are very solid, even when they do go into some of these periods of drawdown. Okay. Now, emotion free, you know, it's hard. It's a hard concept to understand. But in the world of trading, you can never let them see you sweat, so to speak. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. Now think about that for a minute, okay? Because how many people do you actually know that make a living, okay, or make enough money trading, okay, on a shorter term basis that it actually could support themselves? And there's very few, because of course the emotions always get in the way, because you are your own worst enemy, and you do create the bad trade, that because you couldn't take the overall pressure of waiting for it to do what it was supposed to do. Okay. Now, when you're trend trading, price is everything. Okay. It doesn't matter what the product is. Remember, I don't care what the product is. To me, the product is immaterial. It is moot. It has no bearing on what the next trade that I'm going to make, because the product itself is just the thing that facilitates my next trade. You must ignore all news, okay? Because news will either overexcite you or will make you very nervous, and neither is good. You buy it when it breaks out, and you sell it when the trend changes, okay? And since we are always in the market, either long or short, we are never out. Any of our portfolios are always in the market every day. Every day of the year, we are long or short certain markets forever. Okay. You don't get out before the trend changes. You will find yourself giving up too much of the profit and never saving the losses. You must stick to the system. Okay. There is an old story, right? Amateur traders want to be right. Pro traders want to make money. Which one are you? Do you want to be an amateur, okay, and go see your proctologist, or do you want to be a professional and work on simply making money? Okay. Now, the secret to successful trading, okay, which there is a couple little secrets, but they're not really secrets, because I'm going to tell them to you. Okay. You know, I don't have the vault like George Costanza or Elaine. I got to tell you what they are. But their true magic, first of all, is within inside you. Okay. There's no crystal balls out there. Nobody knows what tomorrow will bring. Okay. Hopefully we'll all be here tomorrow. Nobody knows what's on deck. Okay. But what we do know and what we can establish is what is our win rate. Okay. And that's the very important thing that you must understand. And we have a win rate over years and years and years and years of 66%. Okay. So what does that mean? Well, it means that 66% of our 66 out of 100 trades make money. Okay? Now, again, it doesn't mean that you can't be 34% for a couple of months and go back to 80%. The average is 66%. Understanding your win rate, okay, is important because it will help you understand when to press, when to expect some potential weakness. Because if you're prepared for that weakness in your portfolio, it doesn't hurt as much as if you are continuing to wait for to be surprised by it. You know, we try to take out as much surprise as possible because it should be matter of fact. So your win rate is very important because it will really help you when it is time to actually add on to your portfolio through gains that you've already made. Okay, not by reaching in for and adding for new money, but from gains that you've already made. It will help you understand when is the proper time to add money from what you already have accumulated to move next. Okay, and of course the keys are always the same. Nothing changes. Nothing has changed in the 44 years that I have traded. Consistency, discipline, and patience. Okay, you cannot buy those things. You have to bring them inside of you, because when you're trading a probability model, you're trading that model, not the stock, not the future. The only thing you are trading is that probability. Okay, you must understand that the whole model, trading itself, no matter what model you're trading, is still always based on probability. Okay, it's a mathematical model, just like options, just like futures. The entire scope of the trading world is based on probability. Okay, and if you remember Rocky, what you need is a manager. Okay, look, we're going to help you manage. You're going to manage your own, but we're going to tell you and share with you what to do. Okay, but success equals long-term profitability. On a day-to-day basis, do I know what can happen today? No, I have no clue. Okay, I don't know what's going to happen today. Can I give you a guess or an opinion? Sure. Okay, I can always do that, but that's not how I'm going to trade. Okay, I'm going to trade to a method that I know that gives me that 66% win rate. Okay, we have a huge edge in trend following because we're using the same tools that I teach, okay, for short-term trading, and we don't have time to run the algorithm. Okay, and it's going to give you the greatest probability of being correct. Okay, you must eliminate those emotions. Emotions are deadly. Okay, and again, I always use the same example I've used it for 10 years, which is just this. Every one of us here, I'm sure, has said something to somebody that the minute those words popped out, we wish it was our cartoon character and we could erase it or shove them back in our mouth. Okay, but this is a long-term solution to a short-term problem. Okay, and of course, you know what others have to say. I share a couple of these just because I think they're important. And thank you for making the changes to the 72K. You're so successful, yet you still take care of the little guy. You're always ahead of the game. I admire that. You're an inspiration to me, an example to follow. Thank you. Look, again, I believe in helping everybody, and I believe in helping everybody at whatever level that they are. It doesn't matter to me. You know, you trade bigger doesn't make you better. Okay, you trade smaller doesn't make you weaker. It just, you have to trade in an area that is comfortable to you, that you can keep your emotions out of the market, and you can keep those opinions to yourself and let the model do its work. Now, today I have two portfolios that I'm going to share with you and offer to you today. Okay, we've got a number of them, but because of MetaStock, I've got a very special price that I have never offered before. Okay, and that is for these two portfolios only. Okay, and they are what we call our 15K and our 10K. And this year, as I told you, we went through a rough year. We had a big drawdown in the middle. In the meantime, they're still profitable, 10.4%. And 9.5%. And of course, that we have much bigger profits overall, but I can only show you what I have today. I cannot make up. Okay, I will show you past results, because every weekend you will get an entire run, okay, of the portfolios that show you every week from inception. Okay, and whether good or bad, every Saturday morning at 3 a.m. I send out the reports, okay, with the portfolio. Every morning overnight, I send you out new trades. We only trade once a day, okay? We only trade before, it, like the trades go out at 3 a.m. So whatever time you get up, or if you're using our letter of direction product, those trades get put on once. They don't get changed during the day. Nothing happens between the market hours, okay? If there's going to be a change, it will be the next day. Why? Because we don't want to get caught up or involved in the emotion of any given day. We've all seen it happen before, okay? And many of those people that try to go back and forth trying to trade those get whipsawed. It's not worth it. Now, here is what the 15K portfolio looks like. Okay, this is what it's using. It's got the Australian dollar in it. And these are all micros. It's got the British pound micro, Canadian corn minis, okay, crude micro, which is new, which is great, okay, the Dow micro, the euro currency micro, gold micro, Russell micro, and wheat mini, okay, and that creates a portfolio, okay, and right now these are our current positions. Now the top two, if you see them highlighted in yellow, what that says is that those are going to reverse on Monday, which they did this morning. Now, these are live results as of Saturday's portfolio. And these are the dates and how long we carried the trades. Here is the profit and loss on that particular trade at that particular time. Okay, now if you see these two shaded areas, those are what we call mega trades. Okay, mega trades are $500 or bigger. Okay, and some of these that they're even bigger profit than that, but when you get rollovers involved, you have to reset to zero because it's actually a new contract. Okay, but overall, we are either long or short these products, which is 10 every day of the year. We are never out. We are never on the sidelines, and you will always know the date of entry, the date of exit, and the net P&L or profit. And of course, right now we have 9 open winning positions, 1 losing position. Okay, and our profit factor, which many celebrate 2 to 1, is almost 9 to 8.5 to 1. Okay, and you can see that 10% has been the average, but the key here is the amount of margin required. Okay, now in this portfolio, there's $4,400 worth of margin that is required by the exchange, which means that you could, in theory, open this account for $5,000. But we require you to carry 3 times margin because we want to avoid the drawdowns. We want to avoid the problems that create mental and emotional problems for many. So it's 3 times margin is a requirement for success. The 10K portfolio carries 8 products. Okay, including the micro Bitcoin, soon to add the mini Bitcoin. I mean, the micro Ether or Ether. But in the meantime, it carries some of the similar products. It just has a couple reduced to bring down the overall cost to allow a smaller account to get involved. Okay, and again, these are the exact positions. You get these each and every Saturday. Okay, now, I always get questions, so I use some of the same questions over and over again because I have a margin account at IB. Could I trade in this account, or would it be preferable to open a separate account for futures? My answer is whatever makes you comfortable. Okay, as long as you can keep them separate, okay, in your mind and not get confused, not because you could be trading some of these products, okay, but as long as you can separate, I don't care. It makes nothing to me. If I open a separate account trading 128K, which is another one of our portfolios, how should I fund it? How much should I fund it with? Well, the actual name of the portfolio, like 10K or 15K, is the amount that you should put in. Okay. That is it in your own account. We are not touching any of your money. Okay. You can do it on your own through your current broker. We do have a letter of direction broker that we use that is very fairly priced, very much similar to what many of you pay just on regular fees, but they do the trade for you, and CTG, which you'll read about in a couple of questions, they do the trades if there is a trade, they execute at 6:30 a.m. Central Time. I'm in Central Time, not really a morning person. So with your trade alerts coming out at 3 to 4 a.m., I wouldn't be making trades until 8:30 or 9. Would that be okay? Of course it's okay. It doesn't matter. Okay, here's the point. Okay, we are not making these trades for one tick. Okay, we are looking every trade that we put on with the intention of hitting a home run. No trade is put on with the intention of making $1. Okay, every trade is meant to hit a home run. Some do, some don't. Okay, some lose and reverse. Some continue to go. I mean, we've been long the indexes for 6 months. Okay, if I decide to use CTG to automate trading, what does it cost? I don't have the exact number, but I will tell you it is the least expensive in the industry to have a broker execute a trade. And I will tell you that it's very close to what some of you already pay and just regular trading. If I start out with your monthly plan, can I switch to annual later? Listen, I'm only here for you to be happy. Okay. One of the things I don't want unhappy members. Okay. If you're unhappy, don't sign up. Don't become a member. Okay. I don't want to fight. I understand it. I will always tell you exactly how we're doing. And I will tell you when things are rough, and I will tell you when they're good. Look, again, if you don't want to be happy, you don't want to be with me, because I want to be happy. I'm a happy guy, and I work 18 hours a day. I start every morning at 1:30. Okay. Can you advise me when you think is a preferable time to initiate positions? Well, that's always a great question, and it gets asked often. Look, you put the trades on when you get them. Okay, there is no better time. I don't know when the trend's going to change. I don't know what's going to happen. All I know is that if you put a trade on today, let's say you become a member today, you put a trade in tomorrow, okay, and it turns out to be the wrong trade, you'll reverse it on Wednesday. What's the difference? It does not matter, because you're going to be reversed. Remember, you're playing a long-term game, okay, of trading a model that's giving you a 66% return. So you put them all on, okay? You become a member today, you put them all on tomorrow. It's that simple. Okay. Now, where'd my mouse go? I lost them. Where'd you go? Oh, wouldn't that be great if I ran out of batteries right now? There we go. Okay. In the meantime, okay, every day I send out a change. If there are trades, it says new trades. If there are no trades, it says no trades. But every morning at about 2:30 to 3 a.m., I send out an email. Boom, there it is. So you know. Now you don't have to look at it then, but you have it in your inbox. Okay. Every week, Saturday morning, you get a full report on what we did last week. Okay. If there's any new trades going into the new week. Okay. And you get these updates 5 days a week. Okay. Monday's update actually comes on Saturday, because if there's new trades, they're dictated on Saturday for Monday. Okay. But then Tuesday, Wednesday, Thursday, Friday, and Saturday, you get something from me on a regular basis. You get a text from me in case you're away and you don't get your email. Okay. But you get a full report on what we did, how we're doing, what we see, what we expect, but also what are the algorithms doing. Okay. We have training sessions. Okay. We train our members and to go through, because there's always some questions that will come up. But when you look to be in the world of automatic trading or algorithmic trading, there is nothing better than what we offer. Okay. Because I will always tell you, it's never your fault. We go through drawdowns. Okay. Look, I'm never going to blame you unless you are skirting the system. If you are trying to cherry pick the system, that's up to you. That's your problem. But if you're following the rules, okay, you will always know where we stand, because when I do a live webinar, which I do a bunch of them, like after this, I'm actually doing my Monday night strategy call, which I will, talk about it, but I'll always tell exactly how we're doing, okay? Because I don't believe in hiding from anybody, okay? So if you would like to join me and become a member, I have a very special package for you today, okay? Never offered like this before, but it's Christmas time. We all could use a good Christmas, but if you want to take advantage now, okay, you get daily text and email updates. You get a weekly portfolio update with the proper P&L. Okay. You get training sessions live and recorded because we keep an inventory of all the training. If you want letter of direction trading, you can get that. That's up to you. Again, we have a broker that we have vetted that we're very comfortable with that trades all my accounts. Okay, but it doesn't. That's up to you. Okay? I don't tell you what to do. You can trade wherever you are, or you can move. If you've never traded futures, then you may want to look. That's entirely up to you. Okay. With today's offer, I am offering you a free 6-session options course that I recorded myself. Okay. And I've been trading options for 44 years. That's how I started. You will get PDFs of the 2 books that I've written, one on options and one on weekly options. And the reason that I've only written on options is because that's how I started. Okay, I have now morphed into everything. I trade everything: futures, options, stocks. It doesn't matter. If it moves, if it's liquid, I'm going to figure out a way to trade something. Okay. Also today, which is not listed here, but I day trade a minimum of 4 days a week, almost 5 days a week, every morning from 9:45 till about 10:20 with my members of a special class. Okay, and we day trade. Okay, I'm going to give you 1 month free. Okay, if you become a member today, you will get 1 month free, and you can come and live trade with me. And maybe you want to add that to your arsenal, becoming a day trader. I am not telling you it's good or it's not good. We do well, okay, but it's not for everybody. Okay, but you will get free 30 days or 1 full month of day trading with me, and I am trading my own money right there with you. You can hear the dings, you can watch the cash, and it ain't no demo account. Okay, so if this sounds exciting to you as it does to me, okay, here's what you got to do to become a member. Okay, you can go to bubbatrading.com/micro. Okay, so it's $99 a month for those 2 portfolios, never offered at that price before, or annually it's $1,000. Okay. And you go to the site and it will have a drop down, either monthly or annual. Okay. And I'm taking 50 members. That's it. Okay. Because it takes me time to train everybody and get them ready. And I don't want, I've already got a big crowd in my day trading as well. So again, I got to make sure everybody can execute and have liquidity with everybody. But again, bubbatrading.com/micro. Okay. We'll get you either the monthly or the annual. I will take 50 people today. That is it. And in the meantime, I'm here now to answer any questions that you want. But I will tell you this: trading my own money for 44 years to be exact. Okay, never trading anybody else's money, never working for anybody else. There's nothing like it. This is the best I've ever done for the longest term, and it will be something that I will do until I drop off the face of the earth. I will be trading these algorithms and these portfolios because I trade them all, and we've got them as big as 400,000. Okay, which if I had time, I'd show them all to you. But these are the 2 that I'm offering you today, and that's only because it's an introductory spot for you to come in. I'm looking for people that want to come in and do it right. So again, it's bubbatrading.com/micro, and the drop down menu will take you to year or monthly. And with that, Jeffrey, any questions for me?
Hold on, I'm just getting my headset on.
That's okay. I know I'm early, but I always want to make sure that everybody's got enough time. Okay, I could either I have to be early, or I could go for an hour and a half.
Oh, I understand. I'm terrible at like actually managing time. We did have a question earlier about if you're always stop and reverse. So if you go one direction, if you're long, for example, do you then go just the opposite direction?
Well, if the algorithm changes, we will change. We do not change without it. It's very interesting. Okay, there was a couple of years ago when Amazon, we were along the NASDAQ, I believe in 2019. That's what I have to say, a couple of years ago. But we were along the NASDAQ for 48 weeks out of the 52. Okay, believe it or not. And the Amazon had horrible earnings that October, and everybody emailed me to panic. Oh, what are we gonna do? We got to sell NASDAQ. I said, look, you can't sell. Let the system tell you when. Well, of course, some did because they always do. And of course, the NASDAQ, the full size contract went on to make another 30,000 before year end. Okay, even though Amazon had horrible earnings, because again, the algorithm will trip when it's time. Okay, and it is using calculations like volatility, speed of market, all these things that we could never compute manually by itself. So when it's time to change, it will change, but it will never change early. Okay.
And then let's see. Bubba, I would like to know how, this is from Brad. I'd like to know how you've done with this program. What type of rate of return are you getting year over year?
We have done extremely well. I'm going to tell you on the biggest program and the base program, because if you want a much longer term result, which I'm going to pull up right now, and I'll show it to you. I'm going to put it on the screen here. I just got to yank it up here. This is one that used to be called the 250. Okay, it's now the 350 because margins have gone kablooey. Okay, but this portfolio, without pressing, just one lot, basically, okay, has had a return since 2016 of 466%. Okay, we've had some very, very large returns, and typically, now again, I can't promise anything, and I will not, but we have had returns in the close to triple figures on an annual basis. Okay, but we also had a big drawdown just recently, as I said. So again, I don't make promises that I cannot keep. I will say that you will make money, okay, but sometimes it's gonna take it. And again, one of the things that always has to come into play is, where did you get in? Okay, did you get in at the top? Now again, I've had many members, come in at the very tip right before a drawdown, so it becomes ugly first. But then, of course, if they can stomach it, they end up making a lot of money. But this is the oldest. This portfolio is about 15 years old, which is about when we started doing this. This has only become to the public since 2018. Okay, but this has been my own since inception. So that was where we based it off of. Okay, and we also create, if there are those here that are not comfortable in the futures environment, okay, we also have it, we create it in the equity environment, but obviously some different stocks, so they don't have the same futures, but we have a similar program using equities and options instead.
Brad, let's see. Okay, perfect. William wants to know if you recommend individual stocks and options.
I like individual stocks and options. I think every product, depending on what your objective behind that product is good. I mean, I'll give you my own personal account. Okay, I've got my 401k and my profit sharing and my retirement account, which is all long stock or mutual funds, which I hedge with using derivatives. Okay, and then I've got different portfolios, either using equities to create a full model portfolio like this, or futures, which you saw today. And I do my day trading every day, okay, using, if I can yank this over real quick, let's see how easy it is to pull. Here, this is my setup, okay, when I'm talking to my members and for myself. I use two scales, a 4 minute to determine the trade and a 1 minute to trade. So that you can use this on anything, but the real problem with trying to day trade stocks or options are simple. Stocks, too much money, not enough margin relief. Options, too much of a bid offer spread, you give up too much an edge. I cannot afford to give up an edge when I'm trading futures. So it's easier and cleaner to do it with futures. But you can trade, anything is tradable if you're going to follow rules and you're going to follow a method.
All right. Neil wants to know if your parameters are adaptive or fixed.
Adapted or what?
Are your parameters all fixed, or do you change them from time to time?
Our parameters are the same because the markets are always the same. The markets have been the same since the inception. Okay, and the algorithm itself judges volatility and the speed through the mathematical formula that's inside of it. It does not overreact to a quick spike in volatility, but it does recognize it and it does move towards it in case it becomes real.
Cool. Okay. And Sandy wants to know if you'll show the day trade screen again.
The day trade what?
The day trade screen?
Yeah, sure. This is my day trade screen that I use when I'm sharing, and because I can show charts. And if you go back a few hours and see what did we trade today, and I'll show you here. We traded crude today early. We bought it. You can see here's where we bought it right here. You can see a little mark in there because I actually when I'm doing it, I'm also teaching it at the same time of what we're doing. So I mark it and tell you what levels we should be watching and so on and so forth. Okay. Here's the Canadian, which we also traded today. You can see all that in there. So, but here's my trigger time frame, which tells me if I'm going to make a trade, and here is the execution time frame, which is 1 minute.
Okay. All right. And Neil wants to know if you discuss the trading rules.
If I can do what
if you discuss it. Do you disclose the trading rules, or is it?
Yeah, I showed them. I showed the basic rules when I put on the slide. Sure.
Okay.
Yeah.
All right.
Listen. I'm as open book as you can get. I have no interest in anything but you making money right alongside of me. Okay, that's a simple fact. But here are the rules right here. You want to take a quick shot at them? Go for it. Okay. Here's 1 through 5. Okay, and here's 6 through 9. And again, there's obviously it's really consistency and discipline, which is what these rules are really saying.
William wants to know how you set. If you could talk about a little bit about how you set price targets.
We don't set price targets. Okay, very good question. Okay, I get stopped out of every trade eventually. Okay, and when I say eventually, what that means is very simple. I have no interest in trying to pick when it's going to stop going up or down. Okay, what I want to do is I want to ride it as long as it lets me ride it. So we're never going to sell the top. We're never going to buy the bottom. We're going to get out when the algorithm switches and it tells us it's time to change. And it goes for the same for my day trading. Okay, my day trading, I can have some monster winners, but I keep moving up my stop and adjusting my stop to what the market is doing, not trying to figure out where it's going to go to. The market will tell me where it wants to go. I'm not telling the market to go, and I will ride it as long as it'll let me in, which means that as long as I understand how to adjust my stops on day trading, I will be there at the end. Okay, and it will eventually hit me and take me out. But when it takes me out, okay, so be it. I've made money. I'm on to the next trade. Okay, I can't worry about trying to pick tops and bottoms or pick levels. I've never assigned. I've been stopped out of every trade ever. Okay, the question is, did I stop out at a big profit or did I stop out at a loss? Now, the one thing I do know is always the maximum amount of my loss. I never know what the maximum amount of my gain is going to be.
All right, cool. Last question. Can you pick a number between 1 and 10,000?
1 and 10,000. Yeah, 1313.
Wow. Did you hear the last number that was picked?
1073.
1317.
Oh, I didn't know that, but 1313 is my number.
Right,
13 is my number, baby.
Very good. So BubbaTrading.com/micro to take advantage of this. Great job today. We appreciate you coming in today, Bubba.
I always appreciate it. Great event, and thank you so much for your time. And thanks to everybody out there. And if you have any questions, just email me at bubba@bubbatrading.com. I'll answer anything you want. And to all of you, have a great day. And Jeffrey, thank you so much.
All right. Thanks, bye-bye. All right.
Wait, what did I do? I think I had stopped recording by.
No, you're fine. We just we did eject him a little bit, but he's totally fine. Let's go ahead and kind of come in here. Let's change the screen here a little bit, and let me tell you. Let's find out who 1313 is, and then that way I can tell you what you won. So let's see. 1313 would be a JDH email address starting with MAKN. And let me go ahead and save that over, and we'll figure out what prize you just won. So let me go ahead and save this over to my spreadsheet real quick over here. I want to specially set up just for conference prizes. Okay, and the prize that we are going to give is, this is going to be Sunny Bands for MetaStock. Let me go ahead and turn on the light here. Turn on the video. Okay. All right. There we go. All right, and so for Sunny Bands with MetaStock, it's an automatic 5-minute e-mini strategy. It's been years in the making. Sunny has newly developed this trading strategy, and it's the one she uses in her own trading. The normal price will be $6,800, and then you get yourself a free copy. So what we'll do, if you're a prize winner, we've been giving away prizes all day. I'm going to email you directly. We'll confirm the details and the price, and then what we'll do is we'll pass that over to Sunny so that she can give you that license and get that over to you. So there you go. Congratulations on winning the prize. Let me go ahead and make sure I'm sharing my screen. I think I am. You should be. Maybe, let's make sure it's the correct one. It is. Okay, good. Perfect. Also today we are offering an extended trial on MetaStock. With MetaStock, we've been rated the #1 software program in our price category for the last 28 years in a row. We've talked a lot about scanning and testing. We haven't talked a lot about the Forecaster, our patented product, but we did talk a lot about the commentary and how to find and identify instruments. MetaStock starts at about $69. I've actually been here for 25 years in March. I absolutely love the company. It's a great product. I trade with it every day, except for I missed today because, yeah, I've been busy. But what we're doing today is we have a couple of versions of the program. We have a real-time and an end-of-day version. They start at $59 a month. If you pay for a month, we'll give you the second and the third month for free. That's part of the promotion that we're doing. So you can take advantage of that at metastock.com/traders-summit 3-for-1. Another quick thank you to Stocks and Commodities and CMT for sponsoring today's event. We appreciate our sponsors, and these are two great companies that have been, in the case of Stocks and Commodities, sponsoring us for years, and CMT, we want to welcome them to sponsoring the event as well. So thank you very much for that. Our next guest is Barry Burns. Barry Burns runs Top Dog Trading. He's been a big partner of MetaStock for a number of years. I was going to say a big fan of MetaStock, although I'm not sure that is correct. But I'm a big fan of Barry, and Barry does a really good job. We worked with him, of course, we've worked with him for a number of years now, and we do have his strategies designed into MetaStock. Always like having Barry on. He does a really good job. And let's go ahead and get over to him. Barry, how are you doing today?
Hello, Jeff. I'm doing great and flying higher by the minute. Had a good trading day today. I actually got to trade a little bit. I heard that you didn't, but got a couple of good trades in, made a few shekels, and yeah, I'm on top of the world and flying higher by the minute.
That's great. That's awesome. Cool. I'm glad to hear that. I looked down at the clock and I was like, the market just closed. Guess I'm not trading today. We'll see what happens tomorrow. All right. Let's see. Okay, I can see your screen.
See my
It
screen?
looks good.
Let me see
Audio's
if I can.
coming through well.
Good. Okay, let me see if I can show myself. I don't know. There I am. Hi.
Yes.
Oh, wow. That camera's got way too much detail in it. All right.
That's what I say about every camera.
Let's
all
see
right.
if we could change that at all. I don't know. Let's see. I'll move up here a little bit closer. All right, can see my mess in the background. See, you have a nice professional background. I have a working man's background. This was obviously not staged. This is the ugly truth.
Hey, those are all your trading books behind you, right?
Actually, yeah, that's true. Trading books. No, they seriously are. Yeah, I've got a lot of read a lot of trading books and got some Christmas presents back there in those garbage bags. That's actually Christmas presents from my 2 daughters. Oh, I hope they're not watching. That's right. They can't see them anyway. So yeah, welcome to the messy life as we're filing and getting ready for the end of the year and so forth and getting ready for the holidays. So anyway, thank you for having me very much. And wow, can't believe you've been at MetaStock for 25 years. But you know, when I think about it, I'm actually not that surprised because you and I have known each other for a long time. And
Yeah.
MetaStock's the very first software that I've ever used in charting. I still use it. And yeah, it's been that long. It's hard to think that we're that old. I don't know.
Yeah. Well, Barry, I'm gonna get out of the way. Your turn.
Okay, let's rock and roll. All right, everybody. Hi, nice to see you. Nice to be with you here. Today I'm going to talk about timing strategies for entries and exits. So let's get right to it. A little bit about me. There's my ugly mug. I am the author of Trend Trading for Dummies, by the way, part of the famous Dummy series of books by Wiley & Sons publisher. Talk about Stocks and Commodities magazine. Great magazine. I've been getting that forever and love it. Still get it. I look forward to rushing to my mailbox and getting it every month and reading it from cover to cover. But I'm also very honored to receive Reader's Choice Awards from them for, well, actually it's voted on by their subscribers. And so my courses are always ranking highly in those surveys. What else we got here? Oh, I've helped with other authors, work obviously with MetaStock. I've done some educational things for some exchanges, and on it goes. Now, I know you've seen these disclaimers before, but since we're a multi-speaker event, I still like to put it up. Very important. I'm not going to read through it every word, but since we have speakers throughout the day and people come and go, I still like to put it there before my session so that it's very important that you understand these people tend to gloss over, become kind of blind to these legal disclaimers. And I really want to encourage you to read them. It's not just legalese, it's education. The regulators are trying to help us out here by being the anti-hype. You know, they've studied the markets, they've studied everything, and they've said, okay, here's what's real, here's what's not. And that's of great benefit to you, even if you've been trading for a while. Really important to go back and remind yourself and get yourself rooted and grounded in, oh, yeah, that's right. This is the reality of trading. And here are some of the pitfalls to watch out for. And here are some things that are normally taught that not really so much true. So it's the anti-hype. And again, if you think of it as education instead of just legalese, I think maybe that'll encourage you to go read it again. And I highly encourage you to do so. So here are some of the most common struggles that people have. I've been teaching trading for over 15 years. And so I have, oh gosh, I've seen a lot. And first of all, I've been through a lot myself. I've been trading for over 50 years, believe it or not. And that's because my dad was a stock trader. So I grew up in it. And my dad started teaching me when I was 8 years old, knee high to a grasshopper. And now, you know, I've seen a lot of things change over the years. So I've gone through my own trader's journey and I've had to evolve as times have changed, technology has changed and so forth. But then working with other traders, I've also gotten exposed to a lot of common, what should we say, problems, struggles, frustrations that they go through. And I see patterns. So I want to ask you today, let's make this interactive. In fact, let me pull over my, let's see here. There we go. Got my questions box up here. So if you would, here we go. Oh, wow. Okay, let's see here. All right, so type in, if you would, what are your most common problems, struggles, and frustrations in trading? Let's make this a little interactive. Obviously, I've got slides I'm going to go through, but if you tell me what your problems are, then as we go through this, I can spend more time on the issues that you're struggling with. And then if I come to a slide that has a topic that a lot of you say, well, it's not a problem, I'll just go through that real fast. So this way we can customize it and make it really, really appropriate for you. Oh, Neil is asking me if I can make my screen bigger. So I'll try, Neil. While I'm doing this, go ahead and type in your question or your answers to that. Let me see if I go to display settings, go over here to 1. I think I might be able to do that, Neil. Hold on 1 second. Let's see if I can or not. Keep changes. Get out of there. Okay. Oh man, it's changing my slide too at the same time. Okay. All right. That shows you what a technology genius I am. All right, Neil, is that better? Did that help? Thing is, whenever I move anything in GoToWebinar, it seems to be changing out of my slides as well. Okay, so I do see some answers coming in, so thank you. Really appreciate you guys participating with me, by the way, and engaging. I think it makes it a better experience for all of us. Okay, so let's see. Okay, so TJ says not comfortable when trading. Let's see. Finding stocks, says Samir. Finding stocks. Yep, got it. Let's see. Monty says getting stopped out. Yep, I've had that problem before. I totally get it. Vic says give back all the gain. Yeah. So that's a common problem that usually happens when people start getting some success and then they get encouraged. It's like, ooh, I'm starting to get this. And then, you know, all of a sudden you start giving back everything that you lost. So you're making some progress, but you're not being consistent yet. Totally get that. Ray, staying with the trades, again, making the full profits, not getting out too soon. Got it. Jannard, hopefully I'm pronouncing names correctly. I'm right, but at the wrong time. I can't change my habit. Don't know how to fix it. Yeah, I get that. Can't change your habits. You know, that goes all the way back through all of history. Even St. Paul in the New Testament said, I find myself doing the things I don't want to do, and I find myself not doing the things I want to do. In fact, that's a whole part of trading psychology that we deal with. I've got a trading psychology program, and we help people cure that problem. So common human problem, but I totally get it. Let's see what else. Oh, Donald, good one. How to make trend entries, how to avoid choppy markets. That's the defense part of our game. So that's such a good point. Everybody thinks about entries, when to get in, and that's super important. That's the offensive part of the game. That's the making money part of the game. That's the scoring points, so to say. But we need a defense as well, so the market doesn't score points against us, and that is it, staying out of choppy markets. So awesome. All right, Neil, oh, that did help. Good, good. Ray, sabotaging my trades. Dan, knowing when to exit, usually too slow off the mark. Ricardo, be in sync with the market, also to close the profit too early. I like how you say be in sync with the market, because that is exactly what you need to do. You're 100% right. We can't control the market. Market's the boss. And I practice Tai Chi. I also practice Sistema. These are very gentle martial arts. Well, they're pretend to be gentle, but the idea is to feel the other person's energy and go with the other person's energy. And that's really helped me with my trading. Some of you might want to try that, just to learn how to get in alignment with someone else's energy. In this case, it's the mass psychology of the market's energy, and go with that flow instead of fighting it head on. It's not going to work in trading, right? We got to go with the flow of money. Raphael says pull the trigger. Okay, great. So excellent. Thank you. I love it when people are engaged. By the way, I took a survey, actually did a survey of thousands of traders, and here are the most common answers that I got. One was I enter the market, then I get stopped out. Then the market goes back in the original direction of my trade after I get stopped out. So that goes along with Jannard, who says I'm right, but at the wrong time. Getting out of big moves too soon, so not making the huge profits. Several of you mentioned that. Getting stopped out too often. Several of you mentioned that. Not knowing the best place to exit the market. Several of you mentioned that. Trading a trend that doesn't follow through. Some of you gave something similar to that without using those exact words. So what I want to share with you here is you are not a uniquely bad trader. Okay, the point of this little section of my presentation is that you are, because sometimes, trading can be kind of isolating and we think, oh gosh, I'm so terrible. I'm worse than everybody else. You are not worse than everybody else. What you're experiencing are common issues that almost every trader out there experiences. So do not think you're uniquely bad. You're not. You're right on board with what everybody else is experiencing. These are common issues. And the good news is, professional traders like myself, we've experienced these same things, and there is hope. There is an answer on the other side of every one of these problems. All right. So just want to give you a little bit of encouragement. Now, my way of trading, my approach to trading is I like to measure what I call the energies in the market. So what do I mean by energies? Energy just refers to the energy of money flow. I'm literally just following the money, honey. That's it. Okay, because I'm not into big, theories or imposing idealism on the market or some perspective on the market. Again, back to what we were talking about before, I like to just go with the flow. I like to see where it's all about supply demand, right? Supply demand imbalance. That's all that makes markets move up and down. And if there is no supply demand imbalance where it's balanced, then you get into choppy markets. We just don't trade. So just as important as to knowing when to trade. So how do I trade? All right. So I'm looking for the energies of money flow. And there's 5 aspects. The first one is trend. So trend is the first thing I look at. So we're trading in the right direction. If you trade in the wrong direction, well, you're done. You're toast. So then momentum. That's the strength of that trend. Is it a strong trend or a weak trend? Then number 3 is cycles. Now we're going to talk a little bit more about this today. Cycles is timing your entries. And I'm going to give you some specifics on that. Support resistance is a blockage of energy. And then finally, the next higher time frame I call the fractal energy. So I'm always using at least 2 different time frames for my trading. All right, so those are the 5 things, the 5 components of the top dog trading methodology. Now we need instruments for measuring them so that we have something that's objective and rule-based and literally mathematical. So for trends, I don't use anything fancy schmancy, by the way. Trends, I use a moving average. Momentum indicator. Imagine that. For cycles, use an oscillator. I'll share that with you here in a minute. Support resistance, the usual suspects. Again, nothing fancy. And I like to use time frames. When I use the 2 time frames, I like them to have a 1-to-3 ratio. And that gives you a very tight correlation. So in trading, we never have any certainties. I don't know what the market's going to do. Neither do you. Neither does Warren Buffett. Neither does, well, the only one who does is God, but he's not telling me. So all we can do in trading is determine a probability scenario, develop a statistical edge. So here's how I do that. At each potential entry point, I ask myself, how many of those 5 energies are aligned? Those 5 energies of money flow I just shared with you. And then I give each trade a score of 1 to 5. The higher the score, the higher the probability of the trade. It's kind of like taking each trade to court. Now, these 5 energies of money flow, the reason I use these 5 that I just shared with you is because each one is uncorrelated to the other 4. And so when we get 5 independent witnesses, again, like a court example, if you've got somebody who's on trial for stealing a banana peel, okay? And 5 people go up to testify and they all say, no, he didn't steal the banana peel. But those 5 people are his brother, his best friend, his cousin, his girlfriend, and his mommy. All right, maybe not quite so convincing. Why? Because they're all related to each other. But if the 5 witnesses that go up are 5 people who none of them knew the accused beforehand and none of them know each other, then they are independent witnesses. Well, that's how we approach trading. These 5 energies that I shared with you, they're all measuring money flow from a different, independent, uncorrelated perspective than the other 4. So when all 5 of these align, then we've got that probability scenario on our side. So let me show you what I mean here. Let's see. Let's bring up my little laser pointer here. Oh, that's awesome. So here's how it looks on a chart. So far, we've been talking about concepts. Now let's show you brass tacks, how it looks on a chart. So I got a 10-minute chart on the left and a 30-minute chart on the right. Remember, I like to have a 1-to-3 ratio between the 2 time frames. If I were to use like a 10-minute chart on the left and a daily chart on the right, well, everything on the daily chart is just going to move way too slow. It's not going to give me a tight correlation to the 10-minute chart. All right, so those 5 energies, again, let's review them. They're right here for you. There's your little list. And by the way, that's how, when people take my course and they finish it, they get a half sheet of paper with a literal 5-step checklist on it. And well, that's it right there. And you just check it off, 1, 2, 3, 4, 5. So after you learn everything, it all comes down to a 5-step checklist. Very simple. All right, so we're going to look for the setup over here on our shorter term time frame. So number one, we're starting a new trend. By the way, when I say we trade with the trend, energy number one, there's a little more distinction to that. Dollars are in the details, as I like to say. And the distinction is that we need to trade early in a new trend. You've probably heard the slogan, the trend is your friend until the end. So we're not just trading in the direction of the trend, we're trading early in a new trend. Because the longer that trend continues, the less likely or probable it is to continue. All right, so we do wave counts here. Now, these are not Elliott waves. They look like Elliott waves. They're similar, but they're very objective and rule-based. So they're mathematically based, and therefore, we're not imposing a 5-wave structure on the market. And I've traded Elliott wave, by the way, and it's great. I like it. I've got a friend who still trades it and does very, very, very well. But for me, I came up with my own way of counting waves that is more objective and rule-based. It's just pure math, and therefore you can get more than 5 waves. But we've set it up so that 5 waves is the average trend statistically, all right, doing statistical modeling. So if you get 7 waves, well, then we'd be looking for a trend reversal. So again, not Elliott wave. So anyway, how we find if we're early in a new trend is wave 2. That's the earliest you can get in a new trend. Wave 1, 2. All right, so we're early in a new trend. That's called a first retrace in the trend, starting a new trend. Check number 1. Number 2, is it a strong trend or a weak trend? Well, here's our momentum indicator. Momentum's moving on up. So we're early in a new strong trend. Okay, then number 3 is we've got a cycle low, meaning on the retraces, when is this retrace going to end and then it go back up? Well, we look at this little puppy here. It's a modified stochastic indicator is what it is. And we look for this pattern. Well, we call them mini divergences. And if you could see, K is a little higher low there than price. That's the key. That's the key that makes sure that there's a high probability that's a cycle low. All right, then support of the 50 MA. And number 5, we go over to the next entire time frame, make sure that momentum is angling up. And that's a 5 out of 5 trade. 1, 2, 3, 4, 5. We take the trade, boom, and we reach our trend. Okay, so now I'm going to deep dive into, if I can find my little pointer here, we're going to deep dive into the energy that we talk about with regard to cycles. Okay, energy number 3, solution for a good cycle indicator. All right, so let me share this with you right now. I'm going to get very, very, very detailed. So we've talked some generalities, got a little more specific. Now we're going to get really specific. So we're going to use the good old-fashioned stochastic indicator, but we're going to modify it. So as you can see, stochastic oscillator here. And here are the modifications we're going to make to it. To K, we're going to change it to 5. Many charting platforms default it to 14. And then we're going to change the slowing to 2. That's really creating a moving average of %K. And then %D, that's your second line. We're going to change that to 5 and make sure that, by the way, this is a moving average of that. And so that's why it's got method. You could do simple, exponential, whatever. That's the type of moving average it is. We're going to keep it as a simple moving average. Here you can see exactly what it would look like, what it does look like on MetaStock. All right, but other trading platforms have stochastic as well, obviously. So those are the parameters. Feel free to take a snapshot of that if you'd like. Okay, and let's move it on over, move it on out of town. All right, so now we're going to put horizontal lines on there as well. And stochastic often comes with horizontal lines, but we're going to just make them 20, 50, and 80. That's where we're going to set them. 20, 50, and 80. You can see those little puppy dogs there. All right. Okay, so solutions for a good cycle indicator. Got to really emphasize this. By itself, using the stochastic, even with these settings by itself, is meaningless. Just like any one of those 5 energies, you can't use one in isolation. It doesn't give you enough probability in order to have a successful trade. So some people ask me, why even use it then? Because it is a very valuable piece of the puzzle. So again, when you use it strategically with the other energies, it becomes an integral part of the system. So we're only going to trade cycles in the direction of the trend early in the trend. Don't trade these cycles against the trend. Number 2, only trade cycles that have momentum. That's that momentum indicator. We want to have a strong trend behind it. Only trade when the fractal energy is aligned. And then finally, only take what I call second chance indicator patterns. That's like that little mini divergence that I showed you. Just got to check my time here. All my clocks went away here. Let's see. Oh, okay, good, cool. All right, yes, so let me deep dive into the cycle indicator patterns. So I just mentioned the term second chance patterns. This indicates a momentum shift at the top or the bottom of a cycle. And I call these mini divergences. Now there's others, there's a total of 6 actually. Second chance cycle patterns that help you determine you've defined a very, very extreme high probability cycle high or cycle low. And again, the key is these little patterns on %K. Just to clarify, it's on %K, not on %D. All right, so today we just have time to show you one, but I'm going to give it to you for free. So here's the solution, or here's the problem that it solves. Let me bring up our little laser pointer again. So, and by the way, this goes toward, we talked about the problems you guys are having, the challenges you're having. This one really helps to solve the problem of, I get in the right direction, but at the wrong time. Several people mentioned that. So we got a downtrend going. All right, comes back up. By the way, just for clarification, this black line is the 15 EMA. The red line is the 50 SMA. These are 2 moving averages that I use on all my charts. So we get a cycle coming up here. You can see stochastic comes up here, and you may be tended to go short there, and a trend retrace. Comes down, ooh, doesn't go very far, and then comes back up. So if you took it here, guess what? You were with the trend, and it did follow through eventually. But this is an illustration of that problem where you got in the right direction, but at the wrong time. Here's our time axis down here. This was not the right time to enter. This was the right time to go short. All right, and if you went short here and you put your stops up here, you'd be stopped out. And then here you'd be golden. So how do you know? How do you know? All right, well, here's where these little momentum shift patterns come in. So now we've got an uptrend. I like to use both examples of longs and shorts. And all right, so now again, we come back down to that 15 EMA and a retrace. Now notice we had a little bit of a lower low on price, but on K, which is my blue line, we've got quite a bit of a higher low. That's the momentum shift. Now remember, we changed K to 5. That means it's measuring stochastic over 1, 2, 3, 4, 5 bars. And if you look at your indicator in the dialog box, it'll usually say length or what else? LEN, sometimes an abbreviation for length or period. So it's measuring momentum, because stochastic measures momentum, over 5 bars. So we're just looking to nail these little swing lows here and look for a little 5-bar momentum shift. There we go. A little 5-bar momentum shift to nail the end of this retrace and catch it going up to know which is the best retrace to enter on. And just to be really specific, what I do is I wait for higher low on K, my blue line here, go to the bar right above it, and I enter right onto that bar. Actually, I enter 1 penny per tick above the high of this bar. And that's my entry. My protective stop, by the way, is right below the low of that bar. See how tiny my stops are? My risk is minuscule. And if you know anything about trading, which I think a lot of you do, you know, one of the adamant rules of trading is keep your losses small, let your winners run. The first part of that is keep your losses small. That is so important. And that's how small my losses are. This is very typical of the type of risk that I'm putting onto my trade. Because stops, here's the cardinal rule of stops, by the way. Stops go where you're wrong. Okay, so what does that mean? How does that translate into technical analysis? Well, in technical analysis, we have a reason for taking a trade, usually a technical setup. So when your reason for that trade no longer exists, then your trade should no longer exist. In this case, the reason, actually in every case for me, my reason for taking trade is always getting a cycle low like this. So if that cycle low gets broken, then the reason for my trade is broken. And that's why I put my stop right below that cycle low. And by using these little patterns, we can just enter real close to where protective stop would be, so that when we do get stopped out, and hey, everybody gets stopped out once in a while, yeah, no big deal. All right, you know, losing pennies to make dollars. It's cool, no problem. But using these patterns, we almost always get at least a cycle high. And I'll always take some profits at the next cycle high. And then I'm just playing with the market's money. Okay, so again, we call these little momentum shift patterns. We're just within like 5 bars there. The supply demand is shifting. So again, this goes all back. Remember, indicators are mathematical formulas. And what are they measuring? Well, they're empty math equations, and they're being filled with data. And that data is, well, whatever market you put on here, in this case, Agilon Technology. Okay, could be the euro, could be the E-minis, could be gold, could be whatever you put on here, could be crypto. Okay, so that data, the price data, relative to the time frame, in this case, it's a 5-minute chart. But whatever it is, that data, the price that is being traded on this stock relative to this time frame, goes into this empty math equation. It calculates it, and it spits out these values. It plots those values on your chart. And it shows you, oh, we got a little momentum shift happening here. And so as we come back down, oops, supply demand imbalance is shifting, and we're moving back up. All right, moving to the big time. Okay, let's see if that's going to work. Nope, that's not going to work. Yeah, I got to take off my laser pointer now to move my charts for some reason. All right, now this works well for reversal trades as well. So let's say you want to take a trend reversal trade. All right, so that was a trend trade that we looked at, and I use this for every single type of trade that I do. I'm always looking for these little momentum shift patterns. So now we're late in a trend. First step is you've got to be past a 5-wave trend before you even think of taking trend reversal trades. Why? Because the trend is your friend until the end, and statistically, based on our wave counter, we know that 5 waves is the average trend, 7 waves is above average. So now the trend is no longer your friend. Now the counter trend is your friend. So first, that's first. We always look at the meta pattern first. Meta pattern is like early in a trend, late in a trend. A meta pattern could be a head and shoulders, a saucer pattern, a triangle, a wedge, whatever. Those come first. These little mini divergence patterns, these little momentum shift patterns, this is the last step. This is like, okay, I found my setup. Now the question is when to actually get into the penny, to the pip, to the tick without guessing. To have a mathematically objective rule-based trigger to get in and know exactly where to place the stop as well. Okay, so we've come down past 7 waves. Now we're looking for a trend reversal. The trends are no longer our friend, so the counter trend is our friend. Lower low on price, higher low on K. Again, the blue line. Well, there you go, a little momentum shift. Now, a lot of people wait for a higher low on price, and that's okay. But I'd rather get in before that, right? And so we can get in on a higher low, but the higher low is on stochastic instead of on price. This gets me in even earlier. And off to the races she goes. Thank you very much. All right, then what else we got here? Oh, what about when the market's moving sideways? You're looking for a breakout trade. I love these kind of trades. When you get into a market that is low in volatility, you get a little volatility crunch. So these could be Bollinger Band squeezes, triangles, wedges, any type of pattern where, again, low volatility. Now we're looking to get into the end of that cycle or that period of time where we're going to have an explosion of volatility, big range, big move. So talk about great risk reward ratio. So we can still do the same thing here. Higher high on price, lower high on K, on percent K, period K. And so we say, oh, cool. All right, let's enter there now. Where are we going to enter? We're going to enter right below the low of this first black bar here. And this is, oh, same stock. Okay, so 1 penny below the low of that bar. Our stop goes 1 penny above the high of the cycle, which is going to be the bar before it. And that's your risk. Okay, and what's your reward? Wow, that's your reward all the way down. So worked out very well because what are we trading? We're trading contraction into expansion. And that's why these are some of the best risk reward ratio trades. Love these kind of trades. All right, what else we got? We got a summary. Okay, so summary of high probability trading. Well, I kind of done a little bit early here. We're looking for the alignment of the 5 energies to put the odds on your side. And here, I'm going to leave this one up for a little bit. This is my entire trading methodology in one sentence. Might want to write that down. The entire top dog trading methodology in one sentence. We're looking for to get in early in a new trend. That's energy number 1. We want to make sure that trend is strong. And we determine that by momentum. Now, let me make a little extra comment on that. There are 2 types of trends. And when I ask people, what are the 2 types of trends? Invariably, they'll say uptrend, downtrend. And they're not wrong, but there's a distinction that is a professional distinction. And that is this. A professional will say strong trend, weak trend. I remember back in the days of yore, when I was just a young whippersnapper, knee-high to a grasshopper, doing trend trading, and that's all I did was trend trading. Okay, doing okay, but just like somebody said earlier, it's like, hey, what's going on? How come I only see, these trends going and going, and then other times I see the same trend and it doesn't follow through? Well, what's happening, and that was what I did. So I was only doing trend trades, and some would work, and some would not work, and I would print them out, and I would say, all right, we've got some trends. In fact, I actually printed them out on paper. I didn't just look at them on the monitor. I actually printed them on paper, printed them out. And I said, okay, here are the trades that worked, that were winners. Here are the trades that didn't work, they were losers. I looked at them side by side on my desk, and I couldn't tell the difference. I could not find any clues in looking at those charts as any distinction as to why one worked and why one didn't work. So I knew I was missing something. So I actually hired a mentor. I dusted off my wallet and said, okay, well, first what I did was I asked everybody that I could for free, and then I went on the interwebs and did searches, and I came up with nothing good. So I finally hired a mentor, and boy, was that the best money I ever spent. And he said, okay, Barry, here's the problem. You're missing something. I said, I know. I feel like I'm blind to something. I actually said that. I think I'm blind to something, because that's how I felt. And he said, yeah, you don't have enough information on your charts. Now, I like to keep my charts clean, and I still do. But it's like Einstein, that great day trader Einstein once said, make everything as simple as possible, but no simpler. I'm not really 100% positive that Einstein was a day trader, so don't quote me on that. But he did say that, or at least he's attributed to saying, make everything as simple as possible, but no simpler. So I took that and applied it to trading. And I found out, God darn it, my mentor was right. I needed a little bit more information. So just like Einstein said, make everything as simple as possible, 100%, but no simpler, because in order to create a statistical probability, you need a certain amount of complexity. And in my case, it turned out to be the number 5. 5 pieces of uncorrelated evidence. When those 5 uncorrelated energies of money flow align, now we have a probability scenario. And I just wasn't using enough. And the one I was missing was momentum. So I was getting into trends that were weak. So what is momentum in the market? Momentum in the market. Well, what is momentum? First of all, momentum is velocity times mass. Okay, that's for everybody in physics who's as smart as me. I got a C in physics. Took one physics class in high school, but I did learn that. Now, in the market, how does that translate? Because it's not a physical thing. So the velocity part of momentum in the market is the velocity of the order flow. Are orders going through fast and furious? Buy, 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 buy? Or are they going through real slow? Buy, 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 buy. Yeah, we've all seen those type of markets, right? Sometimes the market's going fast, sometimes going slow. That's the velocity part of momentum in the markets. Now, the mass half of the equation of momentum in the markets is volume. So are these big weighty orders, or are they light little orders? Are they going through with 10,000 shares, 100 contracts, 100 lots, or 1 lot, 1 contract, 10 shares? So you put those two together, and that's literally what momentum is in the financial markets. So when there was a trend, back to why I was losing on some of the trend trades is they didn't have enough momentum behind them. There wasn't a lot of orders coming through fast and furious. There wasn't a lot of volume behind them. There wasn't enough demand. It all comes back to demand again, as demonstrated by the size, the action, and the furious buying. And that's what I was missing out. And I had to have that. Okay, so anyway, long explanation, but I like to be as literal as possible with these things. So early in a new trend that is strong. At the right time, that's where our timing indicator comes in that I shared with you already. With support at your back, again, just look for support resistance levels that you already do, and then confirmed by the bigger scale, and that means the next higher time frame. Again, I like to use a 1-to-3 ratio, and what we're looking at the higher time frame for me is the momentum on the higher time frame. So when I talk about being confirmed by the bigger scale, I'm specifically talking about momentum, not trend, but momentum on the higher time frames. Because think about that. If you got strength on the short-term time frame, strength on the long-term time frame, then that market's going to really haul patootie. And that's what we want. We want patootie hauling markets. Okay. Sorry, I'm a dad. I got 2 daughters. So I'm almost legally obligated and morally required to do dumb dad jokes. Okay. Bonafide, certified, and verified. Got to do it. Hope you don't mind. I like to have a little fun while we're doing something serious. Now, on the opposite side of that, what if we take a trade going long, but on the next higher time frame, the longer time frame, we have bearish momentum? Ooh, not so bueno for our trade, right? Okay. So this method is very robust and adaptable. Works for a variety of markets. Again, all we're doing, it all comes back down to supply demand imbalance. That's all that makes markets move up. That's all that makes markets really move down. So what I'm sharing with you will work with stocks, commodities, options, currencies, futures. Let's add cryptos to it. I do trade cryptocurrencies now. Works great. Works for a variety of time frames. Because again, whatever time frame you set on your chart, the indicators, everything is just going to adapt to that time frame. It's all relative to that time frame, automatically adapts. So the only thing that I would say about time frame is that you got to look at the liquidity of the market you're trading, and real illiquid markets, you don't want to go to real short time frames. All right. So if you're doing penny stocks, pink sheets, things like that. But it does work for the macro as far as investing, swing trading, or day trading. I do all three and use the same trading method for all three. It's pretty simple. We're simply counting to 5. We can all count to 5, and that's how simple my methodology is. Now, let me take you one step further. And this is specifically with MetaStock. With MetaStock, my good friends there at MetaStock, they have created, I'm just going to look over here to the questions real quick because I've been yapping a lot. Let's see. Oh, okay. Okay. Well, TJ's asking what was 5. Oh, Jeffrey already put it in. Thank you very much. Yes, the higher time frame. Yep, got it. You got it. Okay, cool. Okay, Harry says, oh, you didn't see me, but okay, Jeffrey took care of that as well. Let's see. Okay, so cool. I think we're pretty good. If I have time for questions at the end, I'll be happy to take them. I'll follow Jeff on that. Oh, Jeff, by the way, real quick, do I need to be done in 4 minutes, or do I have till the top of the hour?
You're the last speaker, so take as long as you need.
Oh, great.
And
so I've got hours. I've got the rest of the day.
Yeah, I'm going to go popcorn. Make some popcorn.
Don't leave that screen. I've got a lot of important things here. Don't have time for popcorn.
It's microwave. I can start it now.
Can you reach it without diverting your eyes from the screen? Because this is too valuable.
I'll stay here.
Okay, cool. Well,
there's a question Harry has, and he's asked this before. So before I kind of let the floor go back, Harry says, all I see is a picture of Barry at his desk. So Harry, my guess is that you're using the iPad or the phone version of the app. And if you swipe to in one direction or the other, it will allow you to alternate between Barry's beautiful face and his screens.
I wish my wife could hear those words. Beautiful face. Okay. Okay, good. So, but that's not a problem with everybody though, right? Okay.
No,
So
it's just, yeah, it's just the app users. If they're on the phone, it usually shows one or the other, but you can swipe back and forth.
okay, good to know. Thanks for clarifying that. Yeah, I didn't know that answer. So, all right, now let's get to the super cool stuff. So MetaStock has worked with me, or I've worked with them, or we've worked together actually, to take this to the whole another level. And what that is this. And so here, as you can see, we've got our wave counts, and with MetaStock, the programmers over there just incredible, by the way, amazing geniuses. We have not been able to, what I'm going to show you has not been able to be done with any other charting software other than MetaStock. So that's how good it is. So let me bring up my laser pointer here again. And so here you see the wave counts. These will be automatically plotted for you. I did not manually put these on there. You can, but that's kind of a hassle. But no, with MetaStock, we have a plugin or an add-on where this will be, the numbers are automatically plotted for you. So very, very cool. Okay, so you'll always know where you are in the trend, how early or late you are in that trend. All right, we've got our stochastic oscillator. Again, that's modified stochastic oscillator. It's not the default, so they got that there for you, modified already. Oh, here, got your volume, but then also trend up or down. You got your little trend band down here, green up, red down, makes sense. But look at this. This is the commentary. Now, this little, see that little diamond right there, that blue diamond? Okay, that's where I brought up this commentary. And it says wave 9 reversal short. So it actually identifies these for you. And at that time, right there when that dot is plotted, then this is available. This commentary is available. So it tells you, oh, we actually have a top dog trading setup here, and that's called the wave 9 reversal short. Remember I said late in an old trend is when we look to take a short. So the basic setup is we have a wave 9, okay? Percent D has been up, okay, blah, blah, blah. Those are the basic rules. Commentary, setup, a wave 9 reversal is the second opportunity we have to go against the trend. All right, the confirmation we need, it's there and there. Entry, oh, tells us exactly where to enter. Enter below the bar that created the hook down on K, initial protective stop, and then it's even got profit targets here. And so, wow, it's just amazing. Again, we've never had anybody who's been able to do this except for MetaStock program. Now, we've had people who can program the wave counts and some of this other stuff, but never this very, very clear descriptive commentary with telling you, okay, here's what the setup is. And then here's the description of the setup. Here's the confirmation of the setup. Here's where you enter. Here's where you have your stop. Here's where you take your profits. I mean, just takes all the guesswork away. Absolutely incredible. So I just love this. And there's more. In fact, Jeff's going to share with you more about this. And there's even more detail, and Jeff will show you the detailed stuff. So what I am going to do myself, before I bring Jeff back on to share with you the details about the Top Dog Trading plugin and add-on, is I want you guys to get some free stuff from me. All right. And first of all, I want to give you my email address so you can see it there. If you want to contact me after this, feel free. I love talking with traders. I am not hard to reach. I don't live in an ivory tower. Love to communicate with average traders out there and above average traders and below average traders. If you're trying to trade, I want to help you out. So there's my personal email address, barry@topdogtrading.com. If I can help you in any way, I would love to. Also, I want to get you making some money. So I'm going to give you one of my favorite trade strategies. It's called the rubber band trade. In fact, I just took this trade today, so I'm still taking the trade all the time. It was a good moneymaker today, and it usually is. It's actually one of the highest win-loss ratio trades that I have. And the way that I teach is I like to get people making money before they spend money. So if you decide to get my courses later on, that's fantastic. But I'm going to teach you the rubber band trade, give you the complete rules, exactly where to enter and exit. It's a rule-based methodology. And it's in a little mini course I have called How Pros Trade Different Than Amateurs. Also, you're going to get more detail on the cycle indicator that I shared with you, which is the modified stochastic. That's on a follow-up recorded webinar. Get all this stuff absolutely free. Just go to Barry Burns you go to topdogtrading.com/free. Real creative URL there. And you get all of this. You get the rubber band trade, you get the little mini course, You get the indicator and how to set it up, including with an hour tutorial on how to do it. And yeah, like I say, with the rubber band trade, that's a complete trading methodology. It's not just some ideas or concepts. I give you all the details so you can start trading that. But I do encourage you to trade it with a simulator or demo account first. Prove itself to you that it's a winner. And then, if you're comfortable with it, start trading it with real money. Okay, so make sure you go to topdogtrading.com/free. In fact, I'm going to type that in here, www.topdogtrading.com/free. And I'll send that out to everybody. All right, hopefully it shows up there somewhere. Okay, so my main man, Jeff, you're up. Why don't you share with these good people more details about the Top Dog Trading plugin, because I just showed the surface, and there's much more to show.
Okay, sounds good. I want to show you something real quick, though.
Oh.
Can you see the camera? It's coming in.
I can. That's hilarious. Dad jokes.
I ordered a book. Here you go. Here's one for you. You can use this with your kid today.
Okay.
I ordered a book about puns last week, but I didn't get it.
Yeah, that's worthy of me. That's funny.
Marzina says, it sounds great. Thank you. Excellent presentation. Good job, as always.
Thank you.
Carlos asked a question that I'm going to answer about where the buy and sell signals are on the chart. I'll show you that in just a second. Barry, I want to say thank you. That was a great job, a very entertaining presentation, and very well done. So thank you very much for coming in and your support over the decades that we've lost count of.
Yes, it's always a pleasure. Always a pleasure. Thank you, Jeff.
Have a good night.
You too.
Okay, let me go ahead and as I promised, I'm going to go and actually show this on a screen. Let me just make me the presenter here. This is one of the things I like about various kind of how he methodically puts the energies on the trend, the momentum, the cycles, the support and resistance, and the scale. We have actually programmed that all into MetaStock and all of his buy signals as well. And I do want to show you kind of how that looks on a chart. So here's a chart that I've liked quite a bit, and not a recommendation to buy, but here's a chart of Ford this year, and it's had a pretty good run. I just applied his standard, let's say, template to it. And I just want to point out the stuff that we're drawing. We're automatically putting in the support and resistance levels here. We're automatically putting the Fibonacci zones on here. We're putting in his the Top Dog stochastic levels and the momentum levels, and we're automatically also drawing these retracement levels on the chart as well. So, or I'm sorry, he calls them mini divergence zones. So these are just automatically being drawn for you every time we kind of spot them on the chart. We're also automatically labeling when it's in an uptrend or a downtrend based on the moving average that Barry uses. And you'll notice that we're doing kind of a wave count. So here you had a first wave, kind of moved into a downtrend, and so we started the count over again when it went back into an uptrend. Here you have the 1, 2, 3, 4, 5, 6, 7. And just recently you had, if I hover over this, one of the patterns that came up was a wave 7 reversal. Okay, so you see that happened right here on the chart. If I hover over the signal, it says it was a wave 7 reversal short. Back here at the end of this, you see the first cycle low after dad turns up. So these patterns are going to be automatically labeled. They're going to be automatically identified for you on a chart. They're also scannable. But in addition, one of the things that we've put in there is we've put in the ability to scan for these. So if I come in here to the expert, well, we've also put in commentary. That's what I meant to say. It's been a long day. But if we come in here, I'm going to go ahead and open up the commentary, and I'm going to come back to this this pattern. And again, it's going to say the wave 7 reversal. This is a short trade. Our entry price should be 19.06. Our initial stop is going to be 20.5. So we're getting an entry, an initial stop loss. And it's going to give us some advice in terms of what our target should be. The first cycle low, the second cycle low, and a trailing stop of your choice. So it's basically telling you exactly what we should be looking for as a target on this retracement. It's telling us exactly what we want to look for in terms of our initial stop. We know what our risk would be if we decided to go short on Ford right here. In addition, when we were putting together the commentary, we actually hit a limit in terms of how much commentary we could put in there. And Barry provided such good information that what we did is, if for all of these patterns that we're identifying on a chart, you'll see it says for a full analysis of this signal, click on the link below. You could go ahead and click on that. And what it's going to do is it's going to open up a little bit of a web page in your web browser. Let me go ahead and I'll do that later. Here you'll notice that we've got a setup, confirmation, a lot more information in terms of what's happening with that particular signal. If we wanted to come in back here, oops, there's our YouTube channel, youtube.com/MetaStock. Hey, if you're watching us on youtube.com/MetaStock, go make sure to like and subscribe. If we came back here to this other pattern, this initial pattern, right here was the first cycle low after the DAD turns up. Here, you're going to have an entry, you're going to have an initial stop loss, and again, you're going to be able to go in and see the commentary. All of these patterns are scannable, so I can go in and I can scan everything. I can find what's happening on the chart. All the commentary exists. I love how MetaStock allows me as a trader to just focus on those stocks that have an opportunity with the scanner. It's just one of the coolest things. So let me go see if I can find my PowerPoint here. We'll go back into the presentation mode. And so normally that add-on's only $499. That's a one-time cost. It's $399 here at the event as part of our conference special. If you need a copy of our award-winning MetaStock program, we'll throw it in there for you. We'll even have somebody help you install it and run it. If you have any questions, you can always contact our Utah-based support team. They do a really, really good job. You can take advantage of this by going to metastock.com/conf-promo. You can also call us at 800-882-3040 or visit us online at metastock.com/saleschat. So love to kind of help you with anything that you need here. We are going to spend a second to say thank you to our sponsor, Stocks and Commodities, and the CMT Association. We really appreciate the support of them in terms of getting the word out on these events and all that kind of good stuff. I also want to talk about one last thing before we close up today. This Saturday, we're going to be doing a masterclass with Oscar Carboni. Oscar is a friend of mine. I've went out to his classes that he does in Las Vegas, and he does a really, really good job of actually kind of showing people how to trade. He runs a camp called OmniCamp in Las Vegas, and I'm not sure exactly the cost, but it's several $1,000s. I think it's upwards of $10,000. This Saturday, we're going to be running a 3-hour masterclass with him. He's going to be talking about how to draw trend lines and do technical formations. It's going to be a 3-hour class, basically 2 sessions. We're going to have a break in the middle. 2 90-minute sessions is probably what you can count on. He'll do a lot of chart markups and how to properly draw a chart. I'd recommend this. This is one of the chances that you have to kind of go in and see a class from somebody that we've worked with for a number of years that we absolutely recommend. So the date of this will be November 20th. It's 10 a.m. to 1 p.m. Normally it's $499. We're going to offer that whole class for $399 as part of our conference special. Give us a call to take advantage of that at 800-882-3040. You can visit us at metastock.com/saleschat. And Kelly, can you hear me? Uh-oh, somebody better go wake up Kelly. Hey, how about you pick another number for us?
Oh,
not 13,
I'm
13.
ready to pick a number.
Okay, I'd say anywhere but the 1300s. We've hit that a couple times today.
I was going to go 14.
1400 or
14?
14?
14.
Okay, let me jump. Okay. I found an easy way to do this. It used to be when I would do the prize drawings, I'd just scroll on my laptop as fast as I could, and I found an easy way to do this. Our next winner is Alex K. Alex K is in Australia. And shall I tell him what he won?
Yeah.
Okay, hold on just a second. Okay, Alex K, you are the proud new owner of an ebook put together by Jeff Tompkins called How to Fix Losing Option Trades. The prize will be How to Fix Losing Option Trades. There's going to be basically a book that they valued about $100. So we'll go ahead and get you a copy of that ebook. and congratulations, you won. Okay, and I will make a note of that before I forget. Okay. All right, thank you, Kelly. I appreciate your help. All right, and if you want to try MetaStock, again, our software's been rated #1 in its price category for so many decades now. I love how it helps you test and scan and forecast. One of the best toolkits available in there. If you're someone like me that just wants to be able to not look at 500 stocks a day and just focus on the ones that have an opportunity, like MetaStock. If you're looking for somebody, something that can help you figure out the best trading strategy to use, well, MetaStock's going to work well for you. I'd encourage you to try it. There's a reason that it's been rated #1 in its price category for 28 years in a row. Pricing starts at $59 a month. Go ahead and sign up for a free trial if you just go to metastock.com/tradersummit 3-for-1. And again, you can give us a call if you have questions, if you want to get some more information, give us a call, 800-882-3040 or metastock.com/saleschat. So I hope you had an enjoyable day today on our first day of the conference. It's good to have you. You do look good today, and we hope to see you tomorrow. Stay healthy, stay well. See you tomorrow.